Good morning. Oh yeah, baby. We're doing this. Running a little bit late this morning. Got a lot going on for you guys today. Have a lot to cover. All right, boom, sharing a screen there. Close that off. Okay, we've got options. If you guys are just joining us for the first time this morning, we've got join us in Discord, where you can follow along with live options flow from Flow Algo. I'm gonna turn this down. We got a lot to go over. We don't have a lot of time this morning. So we're gonna turn this down and we're gonna get right into it. So you guys are prepared for the open, because the open this morning is important. Depending on what your positioning is. We have a lot to talk about today. So just on the economic calendar real quick, we have Chicago PMI. That was the Friday the 29th. We have Chicago PMI still out there for 9:45. We've got University of Michigan Consumer Sentiment at 10 a.m. These can lend some volatility in the beginning of the morning. Also, we know it's end of month, right? We know the past couple months, end of month, we've just burned it to the ground. Except for, I think, January, we cranked it. And that's the implication this month. That's the question is, do we crank it up end of month, put the window dressing on, or do we still have the looming debt crisis in Russia and, of course, FOMC meeting coming on the 4th? Just note here that it's 29th, right? Today's Friday. We've only got, I think, 2 or 3 more sessions until the 4th and 5th. We'll take a look at that real quick on the bottom right-hand side. So you got Thursday the 3rd, and then we literally have 1, 2 sessions, and then we get FOMC. So we're gonna have some compression in here heading into that time period, right? Next week we've got PMI on Monday, manufacturing index, construction spending, job openings, quits, and then the 4th, ADP, right? You're gonna get. We know that heading into Monday, Tuesday, Wednesday, that we are going to get, that drift sideways and down. Just expect it into the 4th, right? That sideways trap trade, and then you're just trading slowly down. It's kind of weird too. Puts print to an extent, but not really. What they're really doing is teasing you in, heading into FOMC, and then they promise that they'll print for you, and we all know what happens. And we'll check that side of the trade. Whenever the FOMC comes around, we always see where everyone's positioned. If everyone's positioned short this market, we usually rip higher. And over the weekend, we'll talk about, or maybe today if it's slow enough at any point, we'll talk about what the expectations are for next week with FOMC. And now, we haven't been doing the spot camera report. We're going to do it this morning. Seems like it's important. A sustained rally is unlikely to occur until May 4th. Keep that in mind, okay? Which holds FOMC and Russian default. Due to these events, volatility, i.e. large puts, are unlikely to be meaningfully sold. They're going to hold on to these no matter what. These are large holders of underlying stock securities in our market, right? They own the SPY. This isn't you or I or someone that's a millionaire. These are billionaires or big banks. This prevents an extended rise in equities. A break of 420 invokes our lower bound concept valid into remember this part right here, right? Lower bound concept valid in 254. We see substantial long-term support at 4050 down here, okay? Due to large open interest at 4,000. That means there's buyers down there saying, hey, come to me. This is where I'll buy it. There's not a bunch of buyers saying I'm going to buy it. Well, they were yesterday. We blasted off yesterday. Futures are near 42.42, down from overnight highs of 42.80. Volatility estimates for today hold near 1.13%, in line with that of recent days. Support shows at 42.10, so 4210 to 4200. Resistance shows at 42.85. That's a vol trigger today. Keep that in mind. And then 4,300. That's that escape velocity that bulls are looking for. We also note 330 in Qs. Yesterday we saw heavy call volumes at 4,300 and 430, and put volumes at 420. Positions for today's expiration seems rather concentrated in the 4250 4300 area, as shown below. The light gray area. Okay? That's where the concentrations are, down here between 420 and 430. We give a slight edge to markets closing in this range, but a break of 4250 implies a close of 4200. This is a key metric for you to be watching this morning. This is why you should be showing up in the morning, is because of stuff like this right here, okay? Zooming out, the game of ping pong continues, largely as anticipated, as we've outlined. Volatility and put positioning appears maxed out, right? Greater or equal to 4,200. But we cannot have a release of IV lower until 5-4 events pass. FOMC, Russian default. Therefore, equity rallies are framed as short covering. Note on this, too, there are some shitbags out there in mainstream media trying to raise China now, right? They want to keep this market fucking pinned even after FOMC. Therefore, equity rallies are framed as short covering and subject to quick and violent reversals. Supporting this idea, our hero indicators yesterday, or readings, revealed traders elected to sell calls and buy puts as the market moved into 4,300. I posted on Twitter yesterday, it said to you, you can see that there's protective put buying and call selling right now in the market as we had headed up or started to head up towards 4,300. You watched us roll over yesterday as we traded towards 4,300. This suggests increased resistance greater than or equal to 4,300. We are increasingly warming up to the idea of a post-FOMC rally based on positioning. Our standard view into FOMC events is that it releases event volatility, which is supportive for markets. Further, it appears that would mean that we need volatility to go up heading into FOMC, right? Further, it appears that traders are underpricing right tail risk. Key point here. Shown below is VIX options positioning. You may note that call options interest blue is at highs rivaling March of 20. Okay, you can see it right down in here. I think you can see it right down in here, right? They're at highs right now. You can see it up in here as well, right? This makes sense given the environment. VIX pushing one-year highs. However, put open interest, red, right here. This is the key part. Is that lows, which suggests that short vol crowd is sitting this one out. I.e., right today at this moment, there's no vol crowd saying, fuck that, we're not getting any volatility heading into the fourth. We're in volatility. I am long volatility here, even at $30. It was only a few months ago that many traders would be jumping all over the opportunity to short vol. We also see, and that's a key point, right? You're going to be looking for put positions in vol coming up in the coming days. When you start to see those put positions roll in, you should see the market begin to roll higher. So keep your eyes out on UVXY, put stuff like that. We also see put heavy readings in most single stocks. This is no good. Not when you see individual tickers that are put heavy and the indexes. With what looks like anemic call demand, this point below is aggregate call and put gamma for stocks in the SP 500. As you can see, put gamma red is increasing while call gamma green holds near one-year lows. If you flip through any of the major tech names in Equity Hub, you'll see that put gamma is greater than call gamma in all major names. Okay? If the Fed comes in with a neutral to less hawkish stance and Russia default issue does not flare up, that could lead to a rather significant rally. We also feel that because the market is put heavy and VIX is so elevated, the bar is set pretty high for an equities upset. When IV is so high, it takes increasingly larger underlying moves for options to pay off. We think it would take a true credit event or a massive deviation from Fed expectations to bring another leg down in stocks and make that elevated IV pay off. Keep in mind, we hold short-term views here, generally no longer than 30 days out. One admin note. Now they're posting a video of the full transcript of the Q&A session. I'll try to find that later today for you guys and see if I can post that somewhere. So, it is 9:31. What is the key here this morning, knowing that, right? The key here, and you can see it right here, 4251. I want you to see this, right? You don't want to be closing down below here, this 4251, right? You wanted to open above here this morning at 4251. We did not, right? And you want the bulls to maintain this. First of all, you want to be maintaining at least this a larger channel here. You don't want to break of 420. You want to maintain this channel right here, right? And trade up and close high into the close at 430. Now, the key break point here is this 4250. This is, if you're a bull, you want to see us this morning not reject here, right? Double rejection, right? Bang it once, bang it twice, trap in these bulls over here, and then we start reversing course, right? 1, 2, and we're heading lower, right? Now, if we start heading lower to this 420, if at any point we break 420, right, it's very bad. Like you're talking high volatility below 420. So if we start to see rejection here, 1, 2, we trade down, right? And I'm not making the best drawings this morning. You don't want to be seeing this morning because you could get a rejection, trade down, come back, and we start making lower lows heading into the end of the day on Friday. We've seen this many times on Fridays where we continue to sell off. And as a matter of fact, just off the bell, I'm never happy watching a green bar off the bell on Friday. So we're going to wait and see this morning if this rejects here. I want you to keep this 425 in mind here. If you're long right now, you might want to take a moment to take some profitability up higher where we are right now. Okay, you can trade the level higher. We'll bring up Bookmap at this point for you to see if there's any rejection at 425. But just be careful of this. This is a way to trap bulls up in here, right? You take a long, you take a second long, and then we reverse course down here. I always like to see us kind of sell off and then grab a dip to buy. Now, with that all said, we're going to take a peek down here and just slap that down there as well. Nice little squeezy squeeze. Nice little squishy squeeze. Right off the bell. And we're going to load up the SPY right here so that you can take a look and see if there's real resistance here or not. Now, we're not going to do any of those. Do DX feed today. We'll do the SPY. Pop the SPY up there. Get all slappy with it. We're going to grab some, we're going to add some hero indicator. Get it nice and saucy. Close this bad boy up. Look at how messy that is. We're going to add some time on there, add an hour on there. We'll let this bad boy load up right here and see what's going on. So you can see what is happening this morning. Get it nice and fresh and hot for you. And do you see that resistance that we're coming into right now in 425? Okay, you want to see that break above 425 here. You don't want to see this resistance kick in. And to be honest with you, the resistance this morning at this point is kind of weak up to 428 and 429. You can see the sellers are way above. You can see them rolling down now to 427. You want to see a break here. You need to see this break as a bull to get bullish on the day for window dressing. If you see a rejection here or two rejections, you see one here. We're going to take a look at it on a candlestick chart real quick.
U.S. Treasury yields continue to move higher.
So yields are moving higher at this point. Hold on a second, I'm getting like scratchy throat.
U.S. 10-year at 293 now, about 6.5 basis points on the day.
You trade up, right? Trap some bulls, come back down. You'll watch bulls try to rebuy this one more time. Usually, not always.
2 minutes
but
into the
most of
trading
time you're gonna
session, the
see
Dow
bulls
down about
once,
160, the S&P
twice,
down
trap
35,
men,
and the
and
Nasdaq
we take
Composite
it
down
down.
84.
We'll see if that happens at this point or not.
Amazon shares holding down about 11%. Apple has found its way into positive territory, 164.20 in the green for Apple.
This no bueno, do not break means if you're a bull, you want to be above this to be taking longs. Does that make sense? If you're going to be a bull and you want to buy a long, right, and we're below this level, you're looking for somewhere lower to buy that bounce. Does that make sense? Right? You don't be buying this, get a rejection, and come back down. If the rejection's super fierce, this would be one to take even lower, believe it or not. And we have tons of puts from yesterday. Right up in this zone, we talked about all the puts that came into the market. So we know that they're out there. We're waiting to see what the bulls are going to buy this morning. Where, if you were a bull today, where would you want to buy today, right? You want to be buying a dip down below. You don't want to be buying it or you could be buying a dip either much lower, or you're going to be buying a dip that's above 42501. But messing around off the bell with this trade right here is very dangerous, right? You don't. This is the bull trap, believe it or not. It normally is not every day, but oftentimes you'll see this right here becomes a bull trap. Bulls come up here, they're trapped in, and we start trading lower. You've got all their. Hold on a second, let me take a look right here. Give me a second here. All the panic is right down in here. All right down here. If the bears can send it down here, you'll start to see bulls selling calls. Give me just a second. And if FA high frequency traders are still on somewhat 420 Ps, I'm actually going to do pretty well on this trade. I'm still holding these from yesterday. They were like 30 cents when I called them out yesterday. So high frequency trading firms still on, not many, 15,000 puts on 420, not huge. 430 Cs for expiry today. They're 45 cents currently. Kind of cheap, but not really. 30 cents would be nicer. Try to think about what something's worth coming into the open on a Friday. And I'm like, if we're going to 430, 45 cents seems a little expensive. They're going to burn that down at one point. And it's a good reference point for the day. See where everything is at. I think it was at a SPY was at $1.20 yesterday into the bell yesterday. I should have closed those out. They would have been $1.30. So we'll see here if this is a bull trap. You got 1, 2 usually, and this is what bears are looking for, is to sell you down right here. Okay, reverse this right straight down. They know where your stops are down here now. They know you've got stops right in this zone. So we'll see if the bears take over here as we start the day. Remember, we do have volatility heading in to the 10 a.m. hour. Here we still have some news coming out this morning. So I'm gonna take a rest here, not a rest, but like just relax here and see what plays out here. If there's a reversal in the market, if we can catch a better price on some calls for end of day to sell vol, some vol crush. Get rid of this one over here. Some call buyers stepping in right now, monetizing. Not much resistance here. I'm not seeing a ton of resistance, as a matter of fact. Look at this right here. Not seeing a ton of resistance hiding up here. Ooh, this is interesting. Unless they're hiding somewhere. I ain't seen them. 428. I'm not seeing a whole hell of a lot of resistance here. So with that said, I might take a long here in a minute. I'm going to look for see if they're there. Just a low volume day here. You see that? Hold on here. Yeah, still more sellers than buyers right now, but not crazy. Let's have a look here. $423. You can see a node here. It's a node right here in 423. The node down below at 421.81, 421.50, 421, and this 420 down, but 419, 419.60. Keep your eye on as well. This is just starting to show up right here. 419, right there. 420.79. Let's keep our eyes down here.
About a minute to the release of the April Chicago Purchasing Manager Index. Expected at 62, prior was 62.9.
Let's see if we can find rail support in here. The 419.50 is an interesting place that's showing up down here. 415 we know about. It's a big one. There's 410. It's 4050, right? This is the one nobody wants to go to. Then, of course, Reactionville down here, 4,000. So 421.09 is an idea, and then 419.55.
M&I at 56.4 versus 62 estimate.
See what's happening on the candlestick chart down here. Got more put buying happening currently at the moment. Let me refresh this. At 9:36, some Tesla calls. Not huge. 260,000. China stock bid right off the opening bell this morning on Baba. Baba with a huge bid right now. So we'll take a look at Baba. I heard some whispers about China stocks last night. Yeah, that shit's selling off. It's always funny, like in the last night I'm there, everybody's like, ooh, China stocks today. I'm like, really? Yeah, they're selling off too. It's like diaper rash. China stocks. Everyone's like, buy China stocks today. I'm looking at it right now going, fuck no. Hold on here. See where the real liquidity is. 421. I like that. I like the idea of buying 421 and 419.50. $419.50 and 421. This is the idea that I like. So there's 421 and 419.50 I like. These sneaky Pete's down here, they might swing up to 420. So let's just call it 420. So for the day, if you're a bull, if you're a bear, my price target is that we trade down into 10 a.m. to 419, 421, 419. Now, I can't guarantee this is going to happen for you, but this is what I'm looking for, is to buy a dip down here and take this higher. Now, if we trade down here to this 421, 419, the last thing that we're going to be looking for is no rug pull down here. We don't want to see a rug pull down here. We know how this happens on Fridays, right? We just bleed. It just gets nasty. So what we're going to do is look for a bounce down here, where I am, to take up for that window dressing on Friday. Now, you can buy wherever you want to buy. As a nice little, normally I'd be like, yeah, buy this dip right here. We'll trade this up higher. But at this moment, I'm going to wait for that 10 a.m. hour. It's 9:40. We've got 12 minutes left. Look for, I think it's the U Michigan Consumer Confidence, maybe? That's out today. Can't remember now. Then you got University of Michigan Consumer Sentiment Index. Nope. Is that today? Yeah, I think that's today. At 10 a.m. And then we get the 5-year inflation expectations as well. The final numbers, not big vol, but we'll see if we can. We'll see if we can get some weakness into that time period. Let me know in chat if you think that we're going up right where we are. There's some nice support down here. I'm not going to lie to you. You can see it right here, right? You've got buyers. You've got 100,000 buyers down here at 420, right? You've got this monster buyers stepping in right here. Looks like even this node right here is moving itself up. So it's not like. Let's have a look down here again. Let's get closer. Like, see that right there? That's a nice node. It's at 421, 419.50. You can see it right there. What's interesting, if the market isn't going to bid, right, it's going to attract itself here. As long as these buyers are here, they're moving up a little bit. They're buying higher right now at this one moment. They're moving higher to try to add some support. We currently are. But you know how it is, right? You see this number down here, and it might not get there now, but it's going to get there in the next half an hour or so. So I'm going to keep my eyes peeled down below at 421, 419. So my trade for today is this. We're going to look at my trade for today, the trade that I'm looking for today. So right where we are right here, right now, right? I'm looking for either this goes up one more time, reject, right? And then I'll become a buyer. Right here, 420. All right, I'll be looking to buy this market to take it north. Second trade today is I'll let the banks do the work for me. And let's say this is not a trap. And they're like, okay, fuck you, Cap. This is what we're going to do, right? We're going to blast right through all this resistance above. And I'm going to be looking for something like this. Maybe 1-2 taps, but the moment we break through this 425, right? I'm going to take that long. I'm going to start to enter my positions long right up in here. An A, maybe there's like an A and a B and a C. Call that an A, B, C, right? Something like this. An A and then a B and then a C over here for a nice fat long heading north. Do I think we can break above 430 today? If we get up here, yeah, possibly. If we break past this 420 or 428 zone up here, definitely. This is the vol trigger up here, so if we break apart if we break through this vol trigger, we're gonna have a fucking squeeze, a massive squeeze. The 430 will be nothing. We will break through that. But for me right now, the classic setup If you see that green bar off the open, rejection, rejection, look for better support down below. It doesn't happen every time, but it happens enough. Let's see where these buyers are down here. Nice little node down below here. 422.56. 421 down here. And really the target down the target for me right now is 419.57. It's always something like this down here. You're just waiting, they know it. And let's see what you guys are talking about this morning. And then we're going to talk about
White House Economic Advisor Dees just reiterating that everything is on the table regarding gas prices.
we're going to take a look at something else, right? We looked at that spot gamma report this morning. We're going to take a look at on a longer time frame here. And I'm going to look something else up for you again that I haven't shown, or I think I showed you guys once before, but I haven't really shown you guys. So we're going to talk about, this is the 4th right here, okay? The implication is, you can buy this down here. It's not that you can't buy these bottoms, and you should be buying these bottoms. The implication is that the market is so heavily hedged that it's pinning the market into OPEX. The point being that you're not going to get the escape velocity, I called it, right? And then as we trade lower and we accept these lower prices, even if you do on good earnings catch some escape volatility or velocity, right? It's still not high enough. You guys remember I talked about this 2 days ago. I said we could have great ERs the next 2 days for big tech. It's the only good news coming out until FOMC. But even if you trade higher like this, we talked about this, right? No matter how good those earnings are, we had a mixed bag. They priced in staying in this negative down channel, right? If you're a huge holder of this market, right? If you're a big bank or hedge fund or a family office or whatever, and on FOMC in the 4th that there is some risk, not real. I don't think they're going up 75 basis points, but if you hold this market and we went up 75 basis points, we're gonna fucking blast south, right? It's prudent for you to protect yourself and put some hedging on and hold it into FOMC. They don't care about you day traders. They don't care about you with your $500 account. They don't care about you with your $100,000 account. They don't care about you and your $1 million account. And they don't, in a larger scheme of things, right? When you're looking over a period of time, let's call it 2-3 years, they're long, let's say to 4,000, right? And we haven't broached this down here, but if we were to broach this down here, they have to protect themselves. We're close to 4,000, right? So these banks that are down below here, they have to protect their investment. So they're going to hold these puts into the FOMC. Now, with all that said, as we head towards this, right, those puts do lose their value, right? Theta burn kicks in. They lose their intrinsic value of these options. And so if we see increased call buying, each time we hit a bottom, right, we're going to want to release until we get closer, and then eventually we're going to get that rocket ship up, right? As those put options become worthless. And so we saw that move yesterday, right? Saw this buy program come on yesterday. There's people calling it short covering. This looks more like a buy program to me yesterday. This does not look to me like short covering, and neither does this trade over here, and even the trade before right here. This looks like the market anticipating and creating a story for bears to buy all this while these banks begin to long this market. So eventually between now and the 4th, you should see the rocket ship. So the implication is that you buy these bottoms every time we hit one, and you're going to take this long. Am I missing a trade right now? Hold on here. Are we above 425? Let's take a look here. Oh, yeah, baby. Oh, yeah. Outstanding. I gotta grab some calls. Hold on here. Let me load up some calls here. Give me some 430s, baby. Give me some 430s. Whoop. This is weird. I had my just had my internet kick out.
Russian press saying Russian Defense Ministry has released a video with a alleged British national captured as a POW in Ukraine.
Hang tight here. I gotta grab some options. I'm gonna grab some 433s here. We break above 425. This is bullish for the bulls. This is exactly what you're looking for, is to take a trade above 425 or down at 420. We'll take a look right now. We'll move this over and get it out of the way. Huge move for the bulls here, breaking above. They will now find support at 425. You're going to be looking for higher levels. We've got sellers above here. Price target above ultimately is going to be about 4, heading up to 428, maybe even higher. 430, 431 on the day as well.
About a minute now to the top of the hour, we'll get the April final Michigan competence reading expected at 65.7, which would be in line with the preliminary.
So I am long here.
Just looking for some Mexico outstanding loan data.
Oh, yeah, baby. Keep going. Keep it going, baby. Keep it going. A break of 4. No bueno. Don't break this line. Price target, as long as we stay above 425. Price target above 430.50 or so, right up in here into the end of the day. Can we get up to 436 or so? 437?
65.2
We'll take a look.
For Michigan sentiment.
Let me see. Michigan sentiment is 65.2 versus 65.7 expected. It's a miss.
5-year inflation expectation unchanged at 3%.
But not bad.
1-year inflation expectation also unchanged at 5.4%.
One-year inflation expectation,
Current conditions index at 69.4 versus preliminary 68.1.
That's pretty good. That's not bad. The expectations on inflation were 5.4%, and it's right in line, 5.5 or 5.4%. 5-10-year inflation expectation.
Mexico reporting their March outstanding loans at 4.9 trillion Mexican pesos, largely in line with the estimate.
Exxon CFO commenting that they're really comfortable with current debt levels for XOM.
So we can read more into this here, see what they're saying. Current conditions 69.4 versus 68.1 preliminary expectations 62.5 versus 64.1 preliminary. 1 year inflation expectations 5.4 versus 5.4. 5-10 year inflation expectations 3% versus 3%. That's not really that terrible. So 42.50, nice new support on the SPY. We'll look above and see what we can find. See if we see any resistance above here. Some sellers trying to pin here at 426. And above here, 428. Light resistance at right here, and then right here, 427. But that's not heavy. 427.50 is another place of note. You can see it right in here, 427.50. 430, 431. Still not huge, though. Note that 427.50 is coming into the volatility trigger. Beautiful breakthrough resistance here right at 425. Outstanding to see this. So you now have two support levels, 425 or 424.91 to 424.62, and then below that you've got 422.58, or excuse me, 422.58. Two levels now of support for the SPY. Oh, hold on here. Put that back over there. See here. 422.55. Somewhere down in here. $425. And that's right here, 425, and then down here, 422.50 is the 422.50, 55, somewhere in there is the second node. All right, let's see what you guys are talking about this morning. Sorry, I'm trying to get my own self organized around here. Good morning, Tomas. My arm is still fucked up. I went to the doctor. I've got a brace for it, but I'm not wearing it right now. It's sitting on I've got it just resting here on the table. Implied daily move today is 1.13%. Good question, Bobby Bagholder. Good morning, Gary. How are you? Zlu, how are you? Blind Nest Owl, good morning, man. How are you? I haven't seen you in a bit. Zach Burton, good morning. Poopa, SPY to $100 today. Nice. My arm is fucked up. Yes, this is Bookmap with Hero Indicator. You guys can also pay attention to this down below here. Now, this does not always correlate with real money selling. Sometimes it does take time for it to work itself out. This Hero Indicator down here shows cumulative call buying, call selling, put buying, put selling. And right now it is positive. There are buyers right now in the market. Crack open a new box of crayons. What's up, Winky? How are you, bro? Yesterday was crazy, brother. We did crazy yesterday. Crazy money yesterday.
EIA commenting that U.S. crude oil production fell 50,000 barrels per day in February to 11.31 million barrels per day.
Max Payne. Are you guys looking for bag holders in China stocks today?
11.36 million in January.
China's probably going up because it wasn't in it. Bull trap.
From Exxon, CEO says he sees the natural gas market tight in the second quarter.
Sell down to 415. Yeah, I sold some puts today. I just took the money and ran. So you called for 4:30 the next 7 days. Yeah, yesterday was kind of cool. The setup yesterday was the same as this setup yesterday was this little move right here. This little nonsense. It's almost the same fucking move as we had the day before, right? Was it this one? And then it happened right here. It happened right in here yesterday too. I think I ended up buying this one and buying that one. This one was I think I missed this one down here, but I grabbed this one and this one. Same setup, right? Boom, rejection, come back down, grab some support, and we're off and running. Classic setup back here past 2 days. Just gonna move that over. Where would they hide if you're not seeing it? Took Zach Burton, nobody got hurt taking a profit. To close there by dumping Apple. Yeah, but that wears off quick. All that interest wears off really quick. Captain trades timing today. Yeah, good morning, Joe Harper. We'll talk about that today. So on a larger time frame here, on a larger time frame, so I think Mary was asking yesterday about why I didn't make the trade down here, and which is a valid point. She was like, "Well, we sold off down here. You saw that that the breadth indicator had triggered down below here, but there's 2 points to this trade down below. And her other point yesterday was, why wouldn't you have just taken 0 dates down here or outside the money calls once we tagged it? So when we went like Friday when we tagged it down below, she's like, I bought every time we tagged it, I just bought OTM calls and they printed 3 times so far, she said. And my point to her was that though I do agree with buying calls down here, and we are buying calls down here when we do hit the market breadth indicator, that it's not a 100% trade. And my point down here is that if you're going to take a trade every month and a half, 2 months, 3 months, you want to ensure that it prints no matter what, especially if you're full porting. If you're going in like $100,000, $300,000, you just want that exact, or not exact, but you want to make sure that it prints. So you could take a 3-month out call spread down here. You can play 0 dates down here. There's nothing saying you can't play 0 dates down here. But but if you look in the past, whenever we hit down here, sometimes they don't print. Sometimes we still roll the market over. Sometimes you don't get the money that you wanted to get. So this trade is still more geared towards new traders that fuck up trades, right? So you want to build in the trade so that when they take it and they have a high confidence that it's going to print, that they know that every time it's going to print. Now, with that being said, we still have volatility on the horizon, right? So we tagged down below, MBI came straight down, and the market just drained, right? We also, though, still have FOMC on the 4th. This is this lingering event that's down here. Oftentimes when we bounce down here, you'll start to see violent moves and then a move higher, right? And so just for me taking this trade with new traders, this isn't like a challenge like I'm going to show you that I can make 10 great trades. This is the whatever you call it there, the brokerage that we're using, I'd already made 5 good trades on it, right? So it's not about me bragging saying, oh yeah, I can make 10 great trades. It's not about that. It's about a new trader that makes lots of mistakes, saying to them, look, when we get down here, put a safe trade on and just let it run, full port that trade, and then only piss your money away in 0 dates with a small part of your account. Because oftentimes I get these DMs from people that say, hey Cap, I blew up my fucking account. That might not be something serious for you, but for a lot of investors and traders, it is. You might have $500,000, but some traders, they have 20,000, they got 30,000, or they're trading their bank account from a job, right? They're making $500 a week, $1,000 a week, $2,000 a week. They got, I don't know, bills they're paying and whatever, and they're trying to get a leg up. They're not you, they're not me. So, and they get bad advice on the internet. So it's not that this doesn't work. Mary has a great point, but at the same time, if Mary's playing with an account that's $100,000, that's different than Mary throwing $1,000 down here every time, right? Mary can go to lose $1,000 down here on OTM calls once we hit the market breadth indicator, but some people can't, like new traders. And her point is 100% valid. I agree with her point, but I have that responsibility. It's a little bit different. Is that when you get down to these levels down here, you're still looking to manage the trade. You're still looking for, is this actual bottom? We talked back here about saying you could throw 3 months on them to ensure that they print to bypass all this volatility. But at the same time, when we're down here, you also want to take into fact other considerations as to, hey, should I be buying it here down on this left-hand side? We talked about this at this close. Buying it here. We talked about buying it here and buying it here as well. All 3 of these days we said, hey, as a matter of fact, yesterday I posted on Twitter, I said, this is a place where you can buy some call spreads and you just close your computer, put a limit, sell on it, and you come back to it. So you've had 3 opportunities at this point to buy that. But myself personally, no matter where we go higher, I still think we revert back down towards where? Hold on a second here. Down towards this 405 heading into, or near it, right down into May 4th. So I would say be ready for this. I know that if there's that we can slingshot up during this time period due to puts losing their value, but somewhere down in here, if I can get somewhere down in here, I'll take that trade as we get closer. Now, with all that being said, this morning, if I'm trading, so I'm going to make this trade with you guys, but then I make this trade myself in my own account. So if I'm gonna full port like $500,000 or $100,000 or something, that's my risk, right? So when I place that trade, I have my own list of I need to hit these certain metrics so that I can guarantee they print. I don't want to come back like when I'm looking at this FOMC meeting over here, right? And we talked about this in the past too, where we'll miss some great trades within taking this trade, right? We might miss an entire trade cycle that this can take place where you go, nope, they didn't pull the trigger and I missed the entire trade. And the reason I say that is because when I take this trade, right, I don't want to lose. Ever. Like, I want it to be 100% trade. And typically it's a trade where I win typically like 29 out of 30 times. Following my rules, it's 29 out of 30. Like, I might miss one. It's the dumbed down trade. It's the one that I placed the bet, and I know it's printing. So even though we have this market breadth sell-off down here, we hit the MBI. Sure, I'll trade $1,000 here. I'll trade $10,000 here. I'll trade 20 if it starts getting crazy. But for my rules that I have, I'm looking for this lower bound. And a key point in this is if you backtest this trade, there are moments where it will not print for you. There are moments where market makers know that the market is buying calls down here, right? The market makers know that banks are buying them down here and thinking they're going to print, and then they still drop it. Let's say they're month out calls, and they won't print them until that month expires. So you have to be careful when you're taking this trade. And you're trying to dumb it down for a trader, for a new investor. This trade, this trade we're trying to do here is not for the savvy investor or someone with lots of experience day trading. This is for a new trader. We talked about how in the past we talked about how you make one great trade or three great trades or five great trades, and then you go on this horrible run of losing all of your money. And so we want this to work every time. You want to be able to make this trade in confidence, knowing no matter what, it's going to print. And so we know, along with the market breadth indicator being down, that down below here, heading into the fourth, that there's a high chance of a magnet down in here pulling us down. There's not a high chance of a magnet pulling us below it. There's no high chance. Let's see if we can get this back over here. There's no high chance right now that I can see of we hit 400 and start selling down to 380, 360, any of those kind of numbers. I don't see that, but I do see a drag down as we head down into that date. So even with us being this low at 413, I don't think this is the lowest low that you've seen at this point. I think you do see a lower low heading into, if not 405, maybe it's 410. Or maybe it's 410 down here. We don't get quite down to this moment. But if we get that capitulation moment, right, that last capitulation, I'll buy that bottom and I'll close my computer, right? I'll close it. I'm going to go full port into that trade. A little bit of selling off right now on the SPY. See if these buyers are still down in here. See if we can add to that trade. And you see these buyers right here at 422.50. We'll see if they hold here or not, or if we trade lower. I just started buying some more calls. I bought some 433s for expiry on Monday. Next stop below here is 419.50. Take a look up here. We've got the reversal, right? We have the one pump, two pump, reversal down. Bears want to break this level here. We'll see if the Bears take charge today or not. Let's see here. And then down below at 419, so it says 419, we'll write down 419.50 is where the next round of buyers are. Right down below. Market selling off, baby. Buyers at 422 being blasted through, or not blasted through. 422.50 was support down here. We'll see if this holds. If not, 419.50. If they can't get support down below here, this is bad news. My stops will be somewhere down around this 419 flat 419.50. But otherwise, I just bought some more here, and I'll buy some more down here for a price target of 433 heading into Monday. So let's bring this up over here and see if we can get this right there. So I've got a 433 price target right up in here that I'm buying into right now, and we'll see if we can get this going here. Hold on here. Yeah, so the timing, Joe Harper, I'm looking to place that trade closer to the 4th. Musk sells total of about 8.5 billion in Tesla shares this week. Yeah, did you guys get a chance? Someone pointed out to watch that video the other day, so I did watch it on the selling of Elon Musk's shares. They calculated it down to 750, or they tried to track it down to a price target of 750, but they hadn't accounted for banks that helped out with the deal, and so there was some information that came out 2 days ago about some banks that he was able to get. A lot of foreign banks actually helped him buying Twitter. I think the March PEC deflated that was reported this morning is locked in at a 50% increase next week. 0.5% increase. Yeah, I think it's at 0.5. I think that's where we are. Puts aren't even printing that much. No, I closed mine. They were dirt cheap yesterday. They were 30 cents or something like that. And I ended up, they were 30 cents yesterday. Next price target down below is this 420 mark and 419.50. No, I closed my print. The puts were like 30 cents yesterday, and at the close at 4:15 they were like $1.30 or something like that, Chase. And I lost some money on those today. They still printed 300%. Yeah, mine were up 300 or 400 at one point at 4:15 yesterday. When are we buying calls for? The calls by puts up 70%. See here, bought some dirt cheap 405s. How much leeway under 419 would you allow? Like a few percent. Let me see. I don't. If we get below 420, Wink, if you get below this 420 number, this isn't the vol trigger, but this is a sell the news trigger. This is a I'd call this, I'd say anything below like anything below 419 becomes very bad. It turns into, instead of a dip buy, and a dip buy, it turns into boom, sell it, a rejection, and we start heading lower into the close on Friday. That's what it turns into. This could get ugly into the bell if we break this 419 down here. Or 420. If we break this 420, it gets real ugly real fast. And down here, I would switch to puts if we broke through and we rejected right here, and we'd buy more puts. I'd cut the calls loose. All this dip buying here, I would cut these loose for a loss and then take up the put side down. My calls at 419. Did you look at Amazon yet? Is there strong supports somewhere? Let's look at Amazon. We'll bring up Amazon real quick for you. See what you guys want to know about here. We'll load up Amazon. We'll load up a few hours here. Load up 3 hours of Amazon. Come back over here for you to watch. You'll see it right down here, that 419, 420. We can get it right here. And this right here is the sell the world is down here at this 419.50. 419.50 is sell the world. So that is what you're looking for. If you see the breakdown here of 419.50, 1, 2, and then it gets nasty. If you wanted a price target of a break of 420, you're going to be looking for 409. 100-point move down, believe it or not. In this, we would go down here into the bell. So we're going to load up Amazon. Okay. So on Amazon, right, we talked about hit that price target yesterday. This is from, you guys know about, we charted this out where we expected a sell-off in Amazon, right? We expected a lift up higher. We didn't quite get up here, but we did sell down below slightly.
Stock futures probing new lows down about 1.5%, 42.21 in the S&P minis. The Dow is down about 355 points. 172-point give back in the NASDAQ after the big rally we saw into yesterday's U.S. cash equity close. European equity markets holding on to gains of about 0.5% in the CAC Iran and 0.8% in the DAX.
So as we broke below this support here, right, 2,600 was large support for Amazon. Talked about this last week, I think at some point we said you want to see this 2,600 be held. If we didn't see 2,600 held, there's a chasm, right? I think Mayhem for Markets said something yesterday about what are the price targets down below if these levels are not held. We'll take a look at those this morning and see how far down we can go. One here. And this is where the concern is, right? You have a small node over here. You can see it right here. Small node. So we spent some time on Amazon. Clear this out here. So we spent some time down below here at this 2464, 23 through 39, right? When you spend time down here, there's some support here, but this is not major support. Major support is literally down below at that 2000 level. So keep an eye on these as we look at Bookmap to see where major support is down here. And so that becomes the question, right? Where are we trading right now? 2553, right? Which is slightly above, right? 100 points above this 2464 level, right? This light support. Believe it or not, this is light support. So what do you expect to happen in the coming weeks would be for some consolidation down in this zone, but for support to still remain at this 2600. So you're going to expect to see some kind of, if you're a bull, you want to be seeing some kind of sideways action here and then a trade higher at some point, right? This correction that's going on down below, you want to see a beat. You can't get bullish on Amazon until it breaks above this negative channel that has now been created, right? But at the same time, you don't want to see this break. So with that being said, if you're a bull, you don't want to see a break for where we are of 2339, and you would expect at some point, once, twice, every month or two, that we will trade down here to this 2464, 2339, so you can grab a dip buy to take higher. Now, this 2600, right, if you're a bull, you want to see that be recaptured, right? You want to see 2600 be recaptured at some point. This isn't full bull, but this is definitely a step in the right direction, is this major trend line. You don't want to see this trend line get rejected. You don't want to see us seeking new lows because this is a weak support down here, right? You don't mind if it consolidates in here for a plug higher. You don't mind if it consolidates in here. You don't mind if it consolidates down in here, fails, right? Takes one or at least two times to get up in there, right? A double bottom, triple bottom, and then it finally gets above here. But your work's not done as a bull, even if you do make this move higher. And the reason being, of course, is that you're now in this corrective channel, right? And this is actually the big move. You could end up trading sideways and getting lower lows even once again down the road. Now, with that said, down here. This is a stop loss, believe it or not, down here, somewhere around this 2339. We'll take a look at this at Amazon right now and see what Amazon is saying. Let's check back in on the SPY and see where it is at. You've got hero indicator turning up. You've got this 419.50 node down below over here. And we'll see if the dip buyers show up. If they don't show up down at 419.50, I'm gonna call it out to you there. I'm gonna expect a 100-point drop at this point from 419, and you're gonna get that 4,000 at some point. So we can hold on a second. So we're gonna take a look at Amazon in here. So Amazon had a rough go of it yesterday. Its ER was ugly yesterday. No bueno. We talk on this channel sometimes about if Shopify can put itself together, right? Slap itself together. Shopify is building their own infrastructure for shipping, which is something to be paying attention to out there. If they're able to put together like a face of the company, very much so like Amazon, they could actually possibly put out better quality products. There's a whole bunch of shit that they get. Matter of fact, I'll get a video for you guys to watch later this morning about some competition to Amazon. Now, within this, let's take a look at this. This 2600 was some firm support for Amazon, right? You can see this. If you're a bear, you want to be shorting at 2600. You don't want to see this get reclaimed up here. You want to see this become large resistance. You can see the sellers waiting above. So if you're waiting for the next short on Amazon, this is the place, right? This is the number that bears want to be defending. Now down below here, you can see this 253 or 2530. Hold on a second here. Give me 1 second here. Large support down here, right? 253, 252.0, and then of course the 2500 number down here. This is a psychological thing for bulls, excuse me. And those two numbers that I was talking to you about was the 2464, which is down in this zone in here, right? And the 2339, which is this zone down in here. And I want you to see this as it shows up. Right, this area from this 2500, as this shows up in here. See if I can draw on this. Can I draw? I don't know if I can draw on this. Drawing style rectangle. No, I don't want a rectangle. But watch my cursor here, right? This zone right here, right? Transponds to this area right in here. This 2500 right in here, right? This is an important key place for Amazon to hold itself. This is a much larger support area that you can see with limit buy orders down in here. You can actually see it, right? So if you're bullish down in here, or if you're like, hey, I want to buy a dip on Amazon, hold on a second here. God damn it. I don't know what the fuck is going on. Clear drawings. Yes. Okay. None. Okay. So this zone down here, this is large support down here, right? If you're a bear, right? You're at support right now. If you're a bull, you want to be buying any dips that come down below 2500. If you're a bear, you're going to be looking to defend 2600. If you wanted to retake a short on Amazon, you're going to wait for a breakthrough 2500, then reshort from there. That's where you would take that short, is below there. Next level of support below that 2339 is about 2,000. So we're going to look and see if it's actually down here. Right on par, right there, 2,000. Not there's volatility down here, but I'll tell you what, you start breaking through that 2,500 and it's going to get ugly. You're going to have natural like 2,100's natural. 2,200 is natural, but dude, this is like when you see all this black space in here, free falling. Absolute free falling. Absolute free falling. You do not want to give up 2,500. If you give up this 2,500, you can have brief moments where you come down. But if you start getting below 2,500, it can get nasty on Amazon. Get rid of Amazon here. And so we'll look one more time at Amazon. This is the space that's you're going to defend as a bull. Right in here, you're going to be defending this. Right? If you're a bear, you're going to be taking your shorts here at this 26, this trend, whatever it is, and consistently trying to push it down. If you get the break of 2,500 on, or excuse me, if you get a real break of 2,500, you look for one more push up, and then you're going to take that short straight down. So 2,521 right now. Wouldn't trust the break below here right now as a bear. It's take the money and run, come back up to this trend up here, this trend line, and reset your shorts as a bear. Otherwise, this is pretty decent support down here. It's a pretty big node. You're gonna get some real nasty trade. I'm telling you what, man. Like if Amazon breaks down here, I don't think Amazon comes back right now either. I think Amazon's probably gonna take. I mean, look at this zone down here. You could be trading down here. You could be trading Amazon down here till end of year. And my overall view is bearish on this market. So at any moment, even if you're trading down in here, even if you have a high day for Amazon, the market goes up. This is all looking like a short at some point. Even if it takes into September, October, December, even if we have great market days, my thought process is that at some point, my view on the market is overall negative in the next 1 to 3 years. So this is not a good sign for Amazon in the long term. Like a macro 1 year outlook on Amazon, I'm not too bullish on Amazon right now. That doesn't mean we don't trade up 100 points, 300 points, 200 points, anything like that. But I think in the long run, when you look at Amazon, over the course of the year, my price target stands down here, believe it or not. 2,000, 1,600. I'm not lying. Like this is the price target down here, but I don't think we get there right now. I think this takes like you could say it's either going to take 9 months or 3 years, but one way or another, somehow, some way, we'll leave this down here. One way or another, I don't think it's today. We're in February, or this is November, December. Let's call it December. That's my first, but that'll be my long-term price target. And I still think we can trade up here too. I got no qualms with us trading up here, but on a longer view, it would be something. No matter where this comes, you're going to see some kind of nonsense like this, some kind of a false breakout. These aren't really working for me right here. And eventually it's going to sell off. Eventually it'll come up here. It'll end up trading down and giving it all up. Maybe I'll make that a little bit later. Let's call it June. Or let's call it September of next year. It could take some time. I don't think Amazon's going to be easily sold off, like as easily sold off as some companies. Yeah, I think it's still a place to hide for the market. But definitely, this ain't done. This is not done. Not with this break of 2,600. That was some breaking this right here. 1, 2, boom, break lower. This is just begging for a huge short in it. Just begging, like boom, and then we head lower. Just begging for it. This is all we didn't get the good we didn't get the good guidance, at least on a bad ER report. We got bad guidance with a bad ER report on Amazon. Starting to break down here to this level. We'll see if the SPY can hold it here. Trading down now to 40.20.44, and this is the last spot for the bulls to make a stand. If they can't get this stand for window dressing today at 419.60, you're going to expect a sell-off into the bell today. This would be no good for the bulls for us to sell down here. I was talking to Jenny Marcus yesterday, and I said, catch it, throw it at the wall, and that's the window dressing for today. So this is the last place down below here. 419.50 should be the last place for bulls to hide. I would not trust any of these dip buyers down here. Maybe, but I'm telling you what, when you start to get down to these levels here, even if they are dip buyers, you can see them down in here. It'll start to staircase down into the end of the day. And this is the point on this channel down in here. You're coming into this channel that we've been trading in down below here. And if you start to see this channel break, right, this is how it'll go. You will see something like, let me see if I can get this. Inside of this channel right here, if this channel breaks up in here, right, this long time support, this 3 days of support, right, you should see a reaction here as well. But the key is, if this support breaks down here, right, if we get, hold on here, if we sell off down here, right, and we get rejection here, 1-2 times failures, right, the natural place for us to head down to into Friday close is 408, believe it or not. Way down here, 4050, 408, somewhere down here on Friday close, it will be the price target. So keep your eyes peeled down here. See if this support holds. If it doesn't, right, things will get violent quick. That down there. Done. So I'm starting to load up some calls down here for cheap. Look for a price target or a tag down below at 419.56. We'll see if this holds or if this breaks. Bulls, this is it for you right here, man. If you're a bull, this is the last place. This is the Alamo for bulls. We'll look below right now to see if this rejects. You'll see this down below, this support level right here. If this breaks here, if 419.50 breaks.
U.S. officials saying that Russia does appear to be behind schedule on military operations in the Donbass.
First price target down below, 415. There's some traffic in here, 410. And then 408, this is that channel. And then down below we've got a bottom, believe it or not a 405. It wouldn't surprise if we break below 420 and start to head lower. Well, it wouldn't surprise me to see us, let's say, trade down to 410, and then that last 15 minutes or so, you see a breakdown to that 405, even though it's outside of channel. So expect about a 100-point drop if this support area here does not hold on the SPY. How is the NASDAQ down only 1%? With Elon's news, he's done selling. Does that change your thoughts on Tesla? I think it dips prior to FOMC, then rips. Yeah, I think you start accumulating Tesla, Matthew, and then I think that the FOMC is the trigger for going along the market and going along the market with full fucking port. It's May 4th, without a doubt. Can you please share the link to this trader to this Traders Radio? Tomas, the Traders Radio is listed, I think, down in the description. It is Trade the News. Can I pull up Tesla? Yeah, let's look at Tesla. Let's load Tesla. May the 4th be with you. Hell yes. I puts for that potential move to 425 to 420 in the SPY. Zach's asking, Cap, in your example for today, why not buy puts for that potential move from 425 to 420 in the SPY? I already bought puts on the SPY yesterday. So I bought the puts right here. This is where I bought puts yesterday. Right? Now I took this move down. I wanted to sell these puts yesterday, and I forgot to. And so I wound up selling those puts right in here today. So I took this part of the move, and I'm not willing to take this part of the move. I'm trying to catch the swing higher. I want this move higher now. I don't want to buy and risk this part of the move. I want to be buying puts up in here, and I want to be buying calls down in here for a move higher up in here. So I enter your trades earlier. You guys a lot of you guys buy your trades later. You'll take your trade here, let's say. And when I'm trying to grab the top or the bottom. Call premium is going. Bookmap, I don't think we're going up. Bagholder Bobby. Oh, come on, Fed tightening, lots of credit stress, bad earnings, negative GD print. They all want to pump it. 430 is the tiger. Remember it at 4 p.m. He's bullish for Z bulls. I understand we move above 425 taking along, but asking about your scenario, would it went back to 420? Just curious. Thanks, Cap. Short hair probably. Hold on there. Let's see what they're saying. Yeah, like inverted head and shoulders. Apple is flat for the week. LOL. SPY 420 magnet. VIX 30 magnet. Mancini talked about inverse head and shoulders. Need buy 420. 420 close. SPY critical area. It could blow inverted head and shoulders. Could today turn into another Black Friday? Could today turn into another Black Friday? I would have expected a Black Friday at 6 a.m. if we were getting one. Come on, Apple just dumped. Captain talking about 4 TM making me horny. If we go down to 410 today, then we will have a negative 3.8% day. So May 4th, full port SPY calls for a month out. Yeah, the May 4th is so on May 4th. So the point on buying these dips is the point on. Let's take a look at this again. Okay. So we've got May 4th, right? Let's do it in a month. So as we come into this date, you see this May 4th down here? Down here is the key date, okay? This is when most of the volatility leaves the market. The volatility being, i.e., FOMC meeting, do we get 75 BPS or 50 BPS, right? And also Russia debt crisis. So the Russia debt crisis is like this, okay? They defaulted on their debt a month ago. It's not the same kind of debt crisis that we've had in the past, but they did default, and it takes a month for it to certify. And I think that certifies on the 6th, but I'm not positive. Don't quote me on that, but I think it's the 6th. I looked at it a couple of days ago, and I haven't revisited it. I have to revisit it over the weekend. Now, you will see a pull down to 405 heading into FOMC. With that being said, right, puts are losing value in this area, right? They're literally losing value as we head down here because of time, right? Time decay. So as these puts lose value, even though we're trading down, like even though at this moment we're trading down, puts are losing value, believe it or not. If you bought puts way back here, they're losing value. They're not gaining any longer. So what's happening is, you saw this yesterday, right? A big swing up, a big violent swing up over here, right? Big violent swing up. And you're going to continue to see those big violent swings up, and one of them is going to catch, right? So you can day trade these, buy these as we head towards FOMC until one of them catches. Now, when does that catch? When does it catch and stick? And the key or the point would be that it's probably going to stick on the 4th or the 6th. So if we continue to accept lower prices as we staircase down into the 4th and 5th, every time we're down in these levels, you should be buying these dips for these huge rips up higher. There's more money to be made down here, and then you have to time for yourself, say, well, where do we end up after all of this? And my posit is that we wind up down here, somewhere down in this zone. Kind of a brief moment down here, like a brief where we dip below 400. But this is my posit, is that I'm going to buy those call spreads when there's blood in the streets, when everyone's panicking, when everyone's rolling. You'll hear the news come out next week, right? You'll hear everybody saying we're getting 75 BPS. You'll hear talk like, oh, there's whispers that they're going to start QT right this week on Monday. You'll hear all kinds of nastiness. You'll hear China, Taiwan news. It'll be horrible down in here as we head into Wednesday. They already got the script written heading into the 4th. So with both those things said, is right, you buy these dips for rocket ships up, and I'm not going to place my big bet. I'm not going to place $500,000 until this risk leaves the market over here. So that's my take on the captain's trade is down here somewhere. More than likely on the 3rd or the 4th, somewhere in here. We'll place this trade. It'll be a bloodbath down in here, and you'll have panic in the streets, and you'll have bears telling you that we're going 360, and we might go to 360, but it doesn't really matter. The only thing that matters is that the risk is gone, and that the banks have to buy the dip down here. So just be conscious of that on a larger time frame of the pull higher, with the expiration of like literally 75% of the puts in the market. 75%. It's like 20% today. Like literally, it's like 20% today. It's like 20% on Monday, right? I kid you not. And then like 30% on the 4th. Like all of the puts on the market. And then I think on the 6th is like another 20% or something. Like giant put positions heading into the 4th and slightly into the 6th. You should get a second bump from that Vanna rally. If we get a Vanna rally on the 4th, you should see like one pump, and then at the end of the day, you'll see another pump, and hopefully you'll be able to break out. I don't think you break out of this, but that'd be a nice trade down here. 400 to 440 or so. Maybe you get to 440 up here, and then we reverse course again and start heading back down somewhere in there. So you guys are saying VIX back above 30, big support, SPX 420, 4122. If Q is going to bounce, then it's here, and a tad lower bounce here. VIX back over 30, possible inverted head and shoulders. Apple's flat for the week. What else? SPY, critical area. Can we see book map? Yeah, you got to bounce right in here just to place. Got a beautiful bounce right down below right here. Right, beautiful bounce. We'll see if this holds. It's by a critical area. Could today return to another Black Friday? Paul Choi is asking. I mean, I answered that earlier. That I thought it would happen at 6 a.m. Can we get a Black Friday? We can get a Black Friday. We normally, though, we'll look at a Black Friday. Okay. Can we get a Black Friday? Yes, we can. Well, we're gonna entertain Paul. Paul has a fair question. Like, will we get a Black Friday here? It's possible. What I don't like about the Black Friday here, and this isn't the only example. So, two things. On a Black Friday, you'd normally get it on like you'd normally get it back here in January. You'd roll it over, and here you would have broken down. Much worse than 400. But we bounced. Another thing that I don't like about a Black Friday is normally when you get the Black Friday, when you get that like 50% move, 36 to 50% move down, you'd normally trade it down. You'd have a huge move higher, then it would break down to that 30 to 50%. And even the most recent example, if you were to look back on same thing down here. You can see these in the past. You guys can check any Black Fridays. Usually you get that one huge move down, or you come back up, and you expect it to stop right there. Right? That's what the expectation would be. Something like this. Boom. You come up, right? And we slam right through down here. I guess the question becomes, do you think that this can happen, right? We get this 1-2 bounce and we break through here. I don't see it. I don't see it. My question is, why would it take 3 months for it? 6 months, right? We're almost there, right? Seems orderly. 480, trading down to 400. 20% of the stock market's already gone from January, and you want to have like another 30% move today or Monday. I don't know. Like you seem to always hear it down here. You're like, when we're down here, you hear Black Monday, Black Friday, Black Thursday, Black Monday, Black Friday, Black Thursday. I don't think so. I think the greater chance is that the greater chance is over the course of a year, believe it or not, is normal distribution. This looks like normal distribution. And you'll have these violent moves here, but at the same time, as you're coming down here, it's going to take time, right, to get down there. It's going to take into September. It's going to take into December. I don't think that. Let's say we get a Black Friday today. Let's say Monday we got a Black Friday. Let's say we sell the world. Let's say we go 360 today. What do you think happens if we go there today? Does anybody know? You get a Fed put, right? Down here somewhere, 360-ish. You get a Fed put down here. What's your case going to be at that point? Is your case that the economy is going to come back tomorrow or on Monday or something? If we trade down to 360 today and we get the Black Friday, I'm trying to figure out where this plays into where we are in our economy. If anything, I think we trade it down to maybe 360 end of year, make a blast off run higher. We could even do it. We could even do it on Monday, believe it or not, and then roll it over later. But the reality is, I think it's more of a slow decline between now and end of year. So we're in April, right? And back in January, right up here, believe it or not, I think Joe Donut remembers this. Chaz remembers this. We said you're going to get a decline down to 360, but it'll probably take 9 months or a year, and it's already been 4 months. So I don't know. Do we get the Black Swan event? I think they're fun to talk about. the black swans, I usually like to see a black swan at like a top. I remember in 2019 we kind of knew we were going to have that top too. We were heading towards a recession. Some of you guys might know this, some of you guys might not. But we were heading towards a recession in 2019. We were heading towards rates in 2019. We were heading, all of this here, we were here in 2019, believe it or not. So you kind of knew it was coming. But at the same time you knew it was coming, there was an event attached to it, which was COVID. And if we have small memories. We forget that we were locking people in their houses, right? We shut down the world, so that's where I would expect, right? A black swan type event. This kind of a orderly sell down, I think, just continues. I think it continues into September at some point, at least, maybe even November or December. But even with this overall bearishness, that doesn't mean that you don't buy these rips in here, right? If you're a bull, you can see where we have some great opportunities to buy this market as it goes down. Or you just get bearish. You just get freaky bearish. We'll see if we break below this 419.98 right now. We'll see how bearish we get into this bell right now. A little bit of a reversal here. Bears are trying to tell you, fuck no, we're going down. And a little bit of a bounce here. Have another bounce right here. We want to see if this holds or not. If it does not, this is very bearish on the day. Just to be clear with you, okay? If this support here at 420 breaks, it's going to get very ugly and bearish towards end of day today. So bulls need to hold this today. We'll see if they can. If they can maintain their control of the market right now. Still consolidating down below. Sellers still in the market. You can see the pin here. See if we can look higher. Here indicator is turning up right now. There are call buyers down here. You can see a little bit of call buying going on down here. We'll see if this works. I've added twice now. I've added calls down here below. Or 3 times I think I've added calls. For Monday, 433 for Monday. And we'll see if this holds down below or starts to break down. So you guys are saying the J-Powell pivot if we go to 360. Yeah, that's my question is. It sounds kind of wonky. I think I said something to somebody yesterday. I said if they're going to do it, I like yesterday I was like, if they were going to sell the market, they probably would have done it at 6 o'clock in the morning. Like right when we hit cash market. It was like the first thought that popped in my head yesterday. And then I saw someone on Twitter said they'll do it at 6:01 a.m. And I was like, fuck yeah, that's exactly what I was thinking. Can you sell it over the weekend? Yeah. It just doesn't sound right. Like it doesn't, like when I'm trying to look at everything in the market, I'm like, so if you had a crash today, is the market ready to rebuild, quote unquote, tomorrow? Or I'm being illustrative here. It doesn't matter if it takes like a week to recover or 3 months to recover, but is the market ready for a crash to start rebuilding? And I don't think we're there yet. I think it takes. I think this market takes time. People yesterday were talking about you won't be told it's a recession until you're already in it. I agree with that as well. I don't think that this market does things like you expect it to. It's just like quantitative easing, right? It was 2 straight years of going up. And you know that the Fed is trying to apply modern monetary theory to the market. So they're going to try to control a crash in the market. Are they successful? Probably not. They'll probably fuck it up at some point. We probably have some bad moment where the market capitulates huge. But do I think there's a market crash? They're going to do everything they can so that it won't. No matter what, they're going to. I don't know why they do that. It just prolongs the eventuality of it. Rather than getting a market crash, you're going to get 1 to 3 years of a shit sideways down market. and you're going to wait to bleed out all these people on short-term debt, right? You guys know short-term debt cycles and long-term debt cycles. If you don't, go look them up. I'm not going to explain it here this morning. I should make a video on that, but at least short-term for the short-term debt cycle, you have to clean out people with bad credit, extended credit. You have to clean out the money out of the market with QT, the extra money floating around the market. You have to take some of the demand away from people that are willing to buy shit. And so they have to slowly lever into that, or they're attempting to slowly lever into that, into this market. So I don't see the capitulation like Black Swan this weekend. I don't see it, and I don't care if it does either. I'm not really. I don't own any stock in this market right now. The only thing that I'm concerned about is buying dips. 3 months dip, 3 month. They have 50 BPOs print pricks. 1 second here. I'm missing some of you guys are saying. Possible inverted head and shoulders. Apple's flat for the week. LOL. I'm missing some of you guys are saying. If we go down 410 today, there'll be a negative 3.8%. So the fourth full port spy calls for a month out or so. Yeah, I'll do it live, Dan. I'm gonna place the trade live with you guys, so you'll get a live stream where I pick up the trade, so you guys will see me actually make it with the time that I make it. And then it still matter. It does matter if we start to trade higher before then, so it could take place on Monday as well. 419.60 doesn't hold. I think we see 415 today. Reaction from 14.15 is going to tell the story for the next week. I disagree with that 415 statement. I disagree 100% with everything you're saying about that 415 statement. I think eventually we trade down to 4050. 100%. There's no story to tell. I don't think so at all. The only story to be told right now is FOMC. That's it. Tesla is also being shorted back under 900. That doesn't matter. Drink tell, I don't care. It's good. Anything like 800, 850 is a good accumulation point for Tesla. We're close. I'll tell you what's going to happen. I got to talk about this, especially Tesla, because some Tesla bulls. Let's talk about Tesla real quick, and we'll go back to the Tesla chart, and we'll go back to let's look at Tesla. Let's look at Apple. Let's look at Tesla. Okay, so this chart that we've been using, right? You can see down here we traded all the way down to 825, right? Let's talk about Tesla real quick. The stock market goes up and down. Now we have okay. So if we're trading down, right? The stock market still goes up and down as we get there, right? If the stock market's going up, it still goes up and down, right? Tesla's probably maybe not the best example of this, but we get the point. If overall of our trend is up, there are still down moments in the stock market. If the trend is down, there are still moments to buy the stock market. So, with that being said, if you're telling me, hey, I want to buy calls up here, or hey, you want to buy calls up here, I'm quite vocal about this on Twitter. Usually when we get into this zone up here, I either start screaming and yelling at these fucking retards. I shouldn't say fucking retards, but I start telling people on Twitter, I'm like, you don't want to be buying calls up here. And there's bulls up here always, like a cacophony of them, saying we're going to 3,000, we're going to 3,000, we're going to 3,000. And we couldn't go to 3,000. But those same bulls, I never hear saying buy calls down here. We're down here. I never hear bulls saying buy calls down here. I never hear bulls saying buy calls down here. Never, never, never. I always hear it up here. Always hear it up here. Always hear it up here. So, if you're a bull for Tesla, we talked about these places to be looking to enter, right? We already had a capitulation move down over here. You can see it. Let me get rid of this stupid fucking VWAP. We've already had this capitulation move down in here, right? Boom, here's one. If you're a Tesla bull, the stock market, even though it's going down, goes up while it's going down. And bulls sometimes don't want to sell the market. There's bulls out there that are like, I don't feel comfortable selling the market. I know bears out there that can't time a trade properly, right? They're like, I'm a bear, but you find out they didn't time it properly. So if you're a bull, your places to tag to buy are down here. It's where you're buying as a bull. As a matter of fact, too, just even though we're going down, if you were a bull buying down here, you're still up right now. You're not up great. If the market was to turn around, though, let's say that the thesis of we're going down over the next of the year proves wrong, they're at least buying these dips down here in the proper place, right? They're looking for dips to buy if the market turns around. The other thing that I tell bulls right now, because the general view or the general move of the market is down, in the near term until we are proven otherwise, that the market
Defense
is down.
Department official saying U.S. does not believe that there's a threat of the use of nuclear weapons by Russia, despite the rhetoric out of Russia this week.
The other posit, too, is even if we're going down, right, or until the market proves that we've reversed course, that you can maintain yourself as a bull in this market and buy dips and sell for profit above. Buy the dips, sell for profit above. Buy the dips, sell for profit above, right? And if you want to be like, well, when do I hold them, Cap, right? When do I hold them, Cap, right? So let's say you bought this dip down here and you sold for profit. They're going to let a bank do the work for you. You ain't doing the work. You don't influence our markets like a bank does. You know who influences our markets? It's like Goldman Sachs. It's like JPM. They, believe it or not, they make the fucking rules. Whether you believe that or not, they do. They're the rich and powerful, big fat old white guys, right? So what you need to do as a bull in this market is you can't will in the market's going to turn up because you decide to buy $1,000 in Apple stock that you made the difference. 50,000 Tesla bulls buying $50,000 of Tesla stock aren't going to make the difference, right? We've seen this, right? We've seen this in countless stocks. We've seen this in countless decades that no dip buying fucking matters. So if you want to remain a bull in this market and profitable and beat inflation, right, and not just buy some shit stock that's going to trade sideways for 2 years, for you to stay alive, you have to buy the dips, sell the rips on the whole way down. Doesn't matter if Tesla trades to $300. You buy the dips, you sell the rips, and you're going to wait for that moment to where you have confirmation, right? Now, this probably won't happen here with Tesla right now, but when you say, well, hey, Cap, I want to, how do I know when to hold that last time, let's say on Tesla? We'll use Tesla as an example. It doesn't matter what the stock is. So you're buying these rips, buying these rips, buying these rips, right? Let's say you buy this bottom down here and you trade this up and it starts to trade higher. Market reverses course. Well, you captured this trade, right? You bought stock. You sold it for cash. You got confirmation over here, right? You will have time in here to re-enter bullish and now hold your stock once you see the turn. Meanwhile, you've made all this money down here, right? You haven't risked a shit ton, right? And you're not doing the old white guy or the old man thing. Right? This is what old men do: is they buy the whatever stock they like and they buy puts against it, and hopefully the puts cover the losses in during decline. But we know that they don't pay well doing that.
Updating its GDP Now model, estimating 1.9% for second quarter GDP. First estimate of second quarter GDP data from Atlanta Fed.
So my point to you is that for you to beat inflation as a bull, right, is that you have to buy the dips, sell the rips. You have to look for confirmation for the market to turn for you to actually hold in one of these buy the dip situations. You have to as a retail trader. You're not going to will this into existence. You're not going to will the market turning. You don't need to capture the one perfect buy down here. You just need to find out when the market capitulates and stay in your favorite ticker. And you will beat actually just buying this stock wherever and shorting it down to the depths of hell. You will beat the value trade. Now, if you say, hey, Cap, I don't want to do any of this. I don't like the fact this market's going down. I don't like buying these dips or having to actively manage my portfolio. Then I would say to you, then get the fuck on out of the stock market. You're in the wrong fucking place. This isn't for you then. And we have years of the stock market going down. We have decades of the stock market going down. So the 2-year regime of us going straight up, if it's over, or even if we go back to a normal regime, and 10, 20 years ago, you had someone actively managing portfolios. Well, the retail trader has routed out those portfolio managers. They've taken food and the work away from those guys. So if you take that work away from those guys, the rest of the other decades of the 10, 20, 30 years you're going to be in this market, there's going to be significant portions of them that you need to actively manage your portfolio, believe it or not. Or you just buy fucking bonds. Well, that isn't working right now. Or you just buy value and you don't look at it. Or you set it like the MBI indicator and you just add all the way down in dollar cost average over 2 or 3 years, and hopefully it comes back one day. But other than that, you're actively managing your portfolios. That's what you should be doing. Actively managing your portfolios. If it's Tesla, if it's SPY, whatever ticker it is, just make sure it's a quality ticker. Make sure it's I know Amazon's in the shithole right now, but make sure it's something. My preference is the SPY, the S&P 500. I like the S&P 500 because they change out companies. They take the best companies, they move them in, and they move them out. So if Amazon sucks real bad and they remove it from the S&P 500, they're going to slap in a new company that has the potential to raise the S&P 500 up. I stopped trading. Most stocks I don't trade anymore. Sometimes I do. I'll trade Tesla now. But outside of Tesla, I don't believe companies are real. I think they're fakers. I think they fucking lie. You can see it in Netflix. You can see it in Piton. They come and they go. But the S&P 500 doesn't come and go. The S&P 500 does load itself up with great companies. So with that said, it's all just a rant. So I buy the S&P 500. That's what I buy. I buy the dips on the S&P 500 and actively manage my portfolio now. More so than I have in years. 4 or 5 years. I haven't actively managed my portfolio this much in the past 3 months as I have in 3 years. And the crazy part about this is that last week I was talking to my wife. Last week. No, so last week I was talking to my wife, and I said to my wife, I said, this is one of the easiest markets right now. I said, the moves are so giant. I was talking to my wife, I said, it's crazy right now. I said, this is the kind of market where instead of every month on the third week of the month where you get a dip, you're seeing these violent fucking moves. I'm like, and literally, you don't have to trade any of this. Just don't even have to. You just wait for the trigger on a market breadth indicator, and it's going to ping. Boom. Take that quick trade, right? Take your money, 100% profit, and then you just wait till it happens again. It's actually simpler right now trading this market. And the craziest part is I just told my wife, I was like, she's like, why? She's asked me why'd you start live streaming? And I was like, well, we're getting to this really ugly phase over here. I'm like, these fuckers are going to get fucking smoked.
10 minutes now to European cash equity close. European bourses holding in the green as U.S. equity markets continue to plumb towards the lows of the session. The U.S. 10-year yield up to 2.9%, up about 8 basis points on the day. Rates are higher across Europe as well. The German 10-year up 4.5 to 94 basis points. The 10-year gilt up 3.
So if we're in this negative bear market right here, right? If we're gonna have these moments that are glaring, right? Giant moves, like this is giant, right? Actually, there's a big one in here too. These are huge moves in our stock market, right? So just saw a bunch of them, right? We have another one coming up right now. We have another pivot point in the market right now coming up. So when you see these moves like this, it's not that difficult. As a matter of fact, you could trade less in this market. Instead of dying of 1,000 little cuts in these moves in here, you just literally you close your computer. This is the best time to be closing your computer and just waiting for the market breadth indicator to fucking trigger. You buy for 1 to 3 months out, and you just come back in a month or you just set a limit sell, 100% limit sell on a trade, and boom, it's like baking a pie. It's so big right now over easy time. This is like driving a bus rather than a race car. But instead, traders are getting cut in here. So where all the cuts happen are in here. You didn't really get these cuts in the past couple of years, but this year, the first 4 months, traders are trying to trade this like it's 2020 and 2021, and it just isn't 2020 or 2021. There's volatility in the market. There's no set in tones in this market. There's only volatility in this market. So you're going to get wild swings in this market, right? I don't see the black swan event that everybody's talking about. I see an orderly sell-off in the market. And so my point, I guess my point to her when I was talking to her was that I was like, man, I'm only going to do this channel for another year. I was like, because it's tiring almost to an extent to try to live stream these moves every day, mostly because it's so aggressive, the moves. You're so actively managing these moves down when you already kind of fucking know where the market's going, right? We've had this up since April 1st, right? We started this chart back in April 1st. So it's been a month. And we've had one moment where we traded outside of bounds. And even with that trading outside of bounds in here, even with this trading above this bound, it's close enough in hand grenades and horseshoes that you could have easily just placed your trade here, right? You don't need any live streams. You just place a trade down here, you know it's going up. You place a trade down here, you know it's going up. Place a trade down here, you know it's going up. Place a trade down here, you know it's going up at some point, right? So all this intraday stuff doesn't matter. Now, with that said, this one part right here, we know we got this nasty down here. We know we got the nasty. So we know we drop. We know this is in my view, this is a false breakout, or a false bottom. I think we get that second dip down into the fourth. I think we get something like that. On the fourth. So like all these day trading was fun, believe it or not. 2020, 2021, it was fun. If you're a bull, it was blast. For a bull right now in this market, you could literally you could phone it in. You can literally phone it in right now when to buy a bottom here. You just phone it in if you're a bull. And you know who else used to phone it in? I'll tell you who used to phone it in. I'll show you who used to phone it in. I'll show you right back here. It was pretty easy. All back in here. You can see it right in here. You know who used to phone it in? Bears. Right? Bears would phone it in. You'd see the drop, right? You'd see a rise and a drop every month. This is the 23rd. This is the 19th. This is the 18th. You guys getting the picture? This is the 19th. Right? And so what the Bears would do is, in the last 2 years, Bears were like, fuck this, I'm out of here. Right? We're in this regime reverse now. And the Bears would just say, well, I know it's going up for a month or so. Right? I'm not going to bother timing it. And I know that within about a month, for OPEX, it's going to come back down. So in like 3 weeks, I'm just going to place some puts up here. And eventually, they're going to print. I'm going to go back into my bunker and come out when they print. Or just set a limit sell on those puts. Have them print. Walk away from the market. And wait for it to go back up. And the same thing holds true in the inverse for bulls today. For this regime right now, for bulls, right? Now, let's say you're a bull in here and you're like, let's say you're a bear in here. And let's say you make $100,000. Right? And you play this steady trade every month for the last 2 years. Let's say you made another $100,000. Right? Make another $100,000. Let's just say you're making $100,000 every time this happens. Right? You can go over here as a bear and place a $10,000 fucking black swan event, and burn it, make it $90,000. You could do it again over here, make it $90,000. You could do it again over here. You can be wrong every single time and still be cleaning up $90,000. So this regime is the same regime in the inverse right now, but it's for bulls. And I'm a bull. So just so you know, I'm not a bear. I don't like being a bear. I don't like seeing markets sell off. It physically makes me ill watching this market sell off. I don't mind it selling off. I don't like when you have these moves like this. Like when I see like this, something like this right here, kills me. I don't like seeing people lose their money. I'll be honest with you. I'm like I have a positive life. I have a happy life. I'm always looking towards the upside of things, right? I was in the Army. I've seen bad shit in my life, right? So I'm always looking for the positive in life. I'm always looking to solve an issue, solve a problem. I enjoy that, right? I love hiking, biking, love skiing, all that kind of stuff. So my personality type, at least, I'm a bull. So I want to see that bull. So being a bull in this market is difficult. If you are a bear, it's not so hard. But as a bull, it is right now. So my point to you is, hold on here. My point to you is that you should just be setting these moments when you have a chance to buy these bottoms. Okay, looking for market capitulation moments that you can buy with pretty good confidence that they're going up somewhere in here. And with that said, if you make $100,000 down in here, what do? Or me, at least, this is how I do it. You take 10 grand of this on the hopes that we don't break down, that we actually bounce and start rolling higher, right? That tail risk for bulls, not tail risk for bears. So, we got some good capitulation today. We're getting down there. I'm watching the market breadth indicator right now. Not good for the bulls right now. I never like seeing this here. I never like seeing this I never like seeing this. I always like seeing like violent move up. Like boom. So we'll see if we can trade higher here, but this is not a bullish bounce in any way. I'm long right now, just so you know. But I am not bullish on this.
Chevron CEO on possible market consolidation, saying he would never say never, but deals done in an upcycle don't necessarily look as well in hindsight. Charlie Victor X-Ray.
We could get this turn right now, but I do want you to realize, and we did tag for 1961, so within 10 pennies, we did tag that. So I'm not sure if you should take this long here or not. This always concerns me. I don't like this 421 number that we were looking at earlier, because this can turn into resistance. This was the first part of support. I do like the fact that we held for 1950. I do like the fact that we're in here to an extent, but I don't. When you're spending time down here like this, it usually doesn't end well. This usually ends negative. It usually ends up coming down, believe it or not. I don't like finding support like this, but it's what it is. I've got a price target for Monday of 433, and we'll see if these puts start to lose value heading into the close. I think we have 20% roll off of puts today at some point. We'll 433 somewhere up in here. And a price target somewhere right here.
European bourses wrapping up trading for the day, and the CAC up 0.25%. German DAX up 0.7%. See, 0.4%.
Let's see if the bulls can hold it here. Sitting on their last vestige of support. Nice support here. We'll look above to see where the sellers are on the SPY. We can take a peek. 440. Fair, decent amount of sellers in here, not huge. $429, $431 area of interest above here. $427-ish. Starts to get volatile. 431. This was similar to yesterday. A little bit higher than it was yesterday. I think yesterday the big resistance was 430.50. So let's see if we can find where this resistance is up in here. It's not huge though. 435.50. This is a big node right here. 435.50. 435.50. That's going to be my price target. I bought 433s. And we've got 440s up here, of course. 435.50 is interesting to me. Starting to blast off now. SPY heading higher. See if we can see where resistance is on here. Not much resistance here. Kind of scratching my head right now. The sellers are way higher right now. 425, 430, 435 though. This is interesting. Like real sellers are really high up right now. Really high up. Like 435, dude. Look at that right there. 435. If we blast it off to 435 in here, I'm going to laugh my fucking ass off. If we do like if we do the same thing we did yesterday, I'm going to make like 6,000% or something stupid. I kid you not, I'll make like 6,000%. A little bit of a bounce down here at 900 on Tesla. I don't think we get there, but if we do, I'm gonna fucking. If I do, I'm gonna call it a fucking best week in a long time. Okay, let's look for Tesla. Sellers want to step back in at 930. They're weak here. Just a heads up. 935. They're a little strong. 950 could get a beautiful squeeze though. If you break above 950 on Tesla, beautiful squeeze potential. That's where you get your 1,000, 980, 1,000. I do want to warn you, too, if you're a Tesla bear. Now, last time Elon paid his taxes, Tesla ripped. So I think with the confluence of FOMC, I would not be short Tesla around FOMC. Never. No way, shape, or form. So we'll keep our eyes out. I'm gonna leave this on. Take a quick break right now. You've got you're looking for these sellers above. Just a heads up, if you want to know where the sellers are, they'll come down. Watch my cursor over here. They'll come down to like 100,000 sellers. You'll see some quite nasty sellers. My only concern here is that we don't have a lot of volume today. So is it like 80,000 sellers that are vicious and violent? Maybe. Maybe call it at 85,000, 80,000. Watch my cursor over here. There's 423.50, 424. Bears do not want to give up 422.50 right here. Bears don't want to give up 425. They want to defend 425. So we'll come right back in here and show this to you. If you're a bear, you want to be defending, right? Bears need... Oh, wait a minute. Hold on. I don't know what the fuck is going on here. The Bears want to defend this. They need to defend this. 425 is probably the last place. And then 420, where's the other spot? 422.50, that's that VWAP. Bears love defending VWAP. So 422.50 is where Bears want to defend. We'll just call them BD. Bears defend. We'll get down here. 422.50. Bears want to defend this, and this is your Bears defend right here. They need to defend these two spots. If they can't defend this area here, you're going to get a blast off to 435, without a doubt. So we'll see if the Bears can defend this. If not, Another key point to look for is bears trying to defend this right here. Just on an intraday. And you want to see the bulls want to be seeing nice bounces in here. Hook up, boom, break through here, boom, break through this, and then keep going higher. This is what bulls want. With that said, you know that this is the line for bulls. This is where the stops are on bulls. Down here, this is where the stops are. So where bulls will pull the cord, believe it or not. So we're right down in that area right now. Bears want to be defending. Bears want to be defending this. I'll even put it right here for you. This is where a bear wants to step in and roll this market over. Bears want to see something like this happen. Rejection. Bears want to see something like this. Rejection down into the bell. And we'll see if the bears can do it. I'll be right back. I'm going to take a break. My arm's kind of fucked up. I got to take some muscle relaxant right now. On my shoulder, or not my shoulder, my fucking elbow, and my so it's all like it's from my elbow down to my hands now. The damage that I did mountain biking. So I'm gonna take a quick break. It's 11:38 in the afternoon. Be careful in here. It's Friday. You'll see day traders trying to do setups on you. They'll run setups on you until end of day. Friday's a good in here. This middle area here. This is a real nice place where day traders will try to fuck your day up between like right here, like 10:30ish to 3 in the afternoon. Day traders, because it's such a low volume day, you'll see tricky dicky moves inside of here from now to like 2 or 3 o'clock. You'll see this become like a place for classic setups. Right, boom, come down. Right, bear flag, bull flag, that kind of nonsense, and they'll fake you out. And I'll go back up, all kinds of nonsense. I'll be right back. It's 11:38. I'll be back at 12:15. 12:50, and then around 3 o'clock we'll have our usual Friday cocktail. So today is Friday. So what we'll do is we'll talk about all you guys that support the channel, by liking and subscribing. Anyone that donates to the channel, and then we'll have a cocktail. We'll have a buy me a beer kind of a thing where we drink bourbon on Fridays. You guys can drink whatever you guys want, and we'll do that between 2 and 3 p.m. Yeah, I'll be right over there. All right, so I'll be right back. I've got someone in the background ask me to come away, so I had to take a quick break. I'll be right back. I'll leave us on book map for you right now. Just take note right here of this 424.68. Take note of this right here, right? This is the hide. This is the bears that are hiding. I want you to take note of this node right here, 422, and I want you to see this. See, you had 80,000 sellers right here, and now you've got over 100,000 sellers right here. Keep your eyes on this. This is the bears trying to roll the market over that we were just talking about. You see these sellers coming down. Just keep your eyes on this as the day moves forward. You don't want to see this many sellers. These are sellers end of day trying to come into the market. Sometimes we draw dragons and shit and wolves. I'll come in and I'll be like, this is where the wolf is up here. We'll do some kind of like nasty, like gross kind of a thing. And he's up in here, right? And he's like a shark just waiting to get you, to catch you down in here, right? And eat you, that nasty tongue of his or whatever. Right? And he's got these like wolf paws and shit. That's his thingy. There's his other thingy over there. And he's trying to swoop down, right? And capitulate you down into the close today. So just pay attention to this guy that's over here, these sellers that are hiding over here. They're trying to take the market down here. This is a key critical point for the bulls. If they can't hold this here, the bears can roll this over. It'll get nasty real quick. If the bears or the bulls are able to break out here, it usually winds up like we did yesterday. This is that same setup as yesterday. 1, 2, and then rocket ship. So if buy program turns on, so we had that happen yesterday. You can see it right here. Yesterday, I commented on Twitter. You guys can actually check the time on it. We had only come to this point in the day. No, it wasn't even there. It was over here. Somewhere in there. Let's get rid of that shit drawn. I think it was right here. And I was like, oh, shit. I was like, you guys are taking another shot at it. Right here. Like, right here. Check my tweet yesterday. So I think I said, you're going to take another stab at it. So when I was watching this, I'm like, oh, I was like, here we go. Classic trader setup. And then, boom, buy program. Ass blasting. So just be aware of this today. Right? If you have that same kind of a scenario today, right? Fake out, bears take it down, something like this, and then fucking rocket ship up into the end of the day. So this area right here is where the bears are trying to defend. These are what these bears are coming in and telling you, fuck, oh, we should make that red. Hold on a second here. So you get this 1, 2, 3, even if 3's down here, and then rocket ship, right? And then you get these bears trying to come in to tell you no. These bears are trying to come in and tell you we're going to roll this market over here. We want it down here, right? And the last thing I'll tell you about this is that if we get to, let me see if we can get a better green color. Yeah, right there. It's not bad. That works. Good enough. If we get to, I'm going to call it 2 or 3 p.m. Between 2 and 3 p.m. Here. If we are not above 425 by 2 or 3 p.m., that's telling me that the bulls have no oomph. So between now and 2, if you don't see us above this 425, I'm going to start getting really bearish. Even if we haven't broken down here. If we have like some kind of like goofy like move up and it takes 2-3 hours, I'm going to look for this to roll again. Without a doubt. So I don't like this down here. Seeing this stuff down here, like you want to see a reaction. Bam. So it's 11:44. I'll be back at 12:30. It is Friday. So I'm going to take a decent break today. I'm going to get some lunch. I'm going to call Joe Donut on the phone too, I think, and give it. So if you're out there, we're listening right now, Joe, I'm going to mute this and give you a shout. I am long here. If you want to know if I'm long here, I did buy some dips. I bought a dip right in here, and then I bought a dip right here, I believe. I don't know if it was right here. I bought it at 42.50. I think I bought a dip here. I bought a dip at 420.250, and I bought this dip down here. My posit is that we trade higher into the close to 430 or higher, slightly higher. Ah, fuck my fucking arm. All right, I'll be back. One note right here, if you look on the bottom right-hand side, this is last resistance here. A break above 423.50 here should squeeze. This should be a huge squeeze here coming up if you can break through it. You don't want to see the sellers stepping in right where we are. Also note that the VIX is rolling over currently. Off a high. Going back from yesterday. Or not yesterday, from the 26th. Hopefully we can get it to roll over and not squeeze higher. See if these bears are about to get fucked up. Not positive, but I think they're about to get fucked up. So if you're not long here, VIX is rolling over right now. Could see an explosive move at some point in the next few moments.
Now into the noon hour, the Dow is holding down about 360 points. The S&P at 4216 down 70 handles, and the Nasdaq Composite down 225. IMF saying that if Colombia remains vulnerable to external risks, new credit line will reinforce market confidence. We do have a Colombian rate decision ahead of us this afternoon. Bank of Colombia is expected to raise their overnight lending rate by 100 basis points to 6% this afternoon. Reportedly, President Biden targeting student loan forgiveness starting at $10,000. U.S. stocks futures here trying to hold the line above 4,200, 4,202 in the U.S. cash market. The Dow down about 450 points as we now into the noon hour here in New York. The dollar index has given back about 1/3% today, but remains well within the recent 2+ year highs. S&P futures now testing below that 4,200 mark for the third or fourth time this week. Dow was down 480 points, also near session lows. The VIX back above 3050. Kellogg, letter K, raising its quarterly dividend by a penny to 59 cents a share from 58, indicated yield about 3.4%. Letter K, Kellogg. They did announce plans previously to do this, so just following through, confirming this dividend hike.
All right, I'm back, baby. All right, hold on here. All right, so let's have a look here. All right, so take note down here that support of 420 is starting to form into resistance here. You can see these sellers coming down now to this 420 level. So you can see all these sellers, they're now above here at 421.50, and they're now starting to create a level of resistance here. Now we can still break above this, but just note here that bears are trying to create a wall here against the trade higher. Now we know that when we know that in past weeks and days that we've traded levels, right? So we talk about accepting different levels of trade, right? We have a trading level here, we have a trading level here, and they're starting to want to, you got some a trading level, right? You got another one up here, and now the bears are trying to say to you, nope, you're going to accept this level down below. Okay, so if they're telling you that right now, you're accepting that level. We want you to accept this level. Where does this level put you? It's not actually at 415. It ends up going lower. So if the bears are able to hold us here, right here, your new trading level becomes 410. Your new trading level just starting into next week, if they're able to hold you down, it's like holding your head underwater. You're going to then expect a trading level of this 410 running into next week, Monday. This would be your trading range. If they're able to pin the market down here, you would see capitulation into next week down to this 410. Now, if we break into this trading range heading into FOMC on the, I think that's Tuesday or Wednesday. See, the 4th is Monday, right? So, wait a minute. No, hold on. The 4th is Wednesday. So if we break into this being the accepted trading range in here, right? There's two things that you're looking for, right? So this is going to line up for next week. If this holds here for this week, you're going to grab some put spreads, right? And you're going to look to monetize them anywhere down here, 405 or lower, right? You're also going to be looking to buy any of the dips down here heading into next Wednesday. So let me clear this up. Close this up here. So if this becomes the accepted trading level for next week, right? So this is a Friday, Monday, and Wednesday. The one other note that this is Friday. Yeah, this is this is Friday. We got Monday expiry, Wednesday expiry. They're forcing you to accept this now. They're attempting to force you to accept this as your new trading zone for next week. So when you come back on Monday, I'm going to more than likely give you like an S1 down here. It's going to be a support 1, right? Your S2, it's going to be a little bit tighter. Your S2 is going to be down here like 405-ish, somewhere down here. And then your sell the news is down here. Your S3 or S4 will be down at 400, maybe slightly below it. So that you're being forced to accept this down here. So while this happens into FOMC next week, right? You're going to be looking to sell anything above here. We can trade up here and then come back down, right? And we can trade below here and come back up. So if you're bearish, if you're bearish into FOMC, anything above 420 at this point is going to be a buy spreads, buy week out into the 6th or 4th, something in the money that's a put. Okay, in the money, like 420p. For let's say 5.4 or 5.6. If even when we're down here into this week, you're going to then be looking for a dip to buy down in here this week, heading into FOMC and into the 6th. We've been having this conversation, I think, for I don't know, at least a week, right? Maybe 2 or 3. They've been talking about this FOMC meeting and getting down to these lower bounds of the market. So if you're a bull, you're going to be looking to go full tilt. This captain's trade, right, the first one of the year is going to be down in here in this level. Do I think we stay down here for long? Absolutely not. I think that this is just the opportunity down here to grab this market long and make that 100% trade that's almost guaranteed. Hold on a second. I got to take a sip. I grabbed myself a bourbon for Friday. So cheers to all of the supporters out there. Anyone that watches this channel day in and day out. I wound up getting myself a bourbon. I did the same drink as last week. It was so good. It was a bourbon peach Manhattan of sorts. It's got some not Fernet Branca. It's got bitters, and it's got some Marciano cherries of some kind. One of those like brandied cherries. And then it's got some peaches because it's peach season. So write down it. So we'll have a cheers real quick. Toast to you. Cheers to you out there. If you're following along every day. Chin do, whatever you guys say. Every Friday we have a cocktail around these parts. Some of you guys go out there and you smoke doobies. Some of you guys drink water. But we're drinking whiskey here on Fridays. Now, so we're gonna stay on this topic, okay? Because we've had a lot of resistance to this conversation the past couple weeks, right? What ifs, right? Even myself, when we were trading above, if you guys remember up here, let's put this away. If you guys remember even back here when we traded above, look at that. Let's look at this in the monthly chart. When we traded back here, we said we can't get bullish until we trade above the vol trigger, and it has to hold for us to take this higher. And we didn't, right? This turned into extremely bearish on the market. This was where the vol trigger was before. And so the regime change switches to where are we going, right? And the regime change is we're going to 4050. Now, even though we're coming down here, there are places to buy dips. We know that, right? We know in each range that you can buy a dip, right, and get paid inside of this zone, this trading zone, right? It's trading area, right? So we're trading in, right? And you see this right here. We're starting to break through it. Now, if we break through it into next week, for this upcoming week, right, we're going to sell in April, right? And in May, we're going to come down here to this 410, right? More than likely, that's what it's looking like at this point. Can't guarantee it, but this is what it's looking like. So if we come down here, hold on here, I think I can hear some. If we come down in this zone, right, if we come down in this zone, hold on here. We make this our new trading range for this week. If we make 420 our top into FOMC, and we can even give it to Friday. Let's just give it, I think this Friday's right over here. Because there are still some puts out here and here. Though I think we blast off Wednesday into Friday. Like, blast off. So planning out the rest of your week for next week, right? So this is for 410 down here. Well, let's just cancel all that out. Oh, wait a minute. Cancel that out. So let's say next week, right, is our trading zone into Friday. Let's just say this is our normal trading area for next week. If it becomes this for next week, we really haven't broken yet. Because we're going to go down another 200 points, we got to break more than 418 or 417. I'm in here. Can't just break like 1 penny and know we're going there. You got to see what happens there. But if we do break down into this trading zone down here, 410, right? If this becomes our trading area into next Friday in here, then you're going to have the same expectations just like you did in here, right? This is your trading area up here, right? Right up in here is where you were trading before. And you know there are going to be places to buy a dip, right? While you're down in here. So you're going to have the same expectation into next week. You're going to have the same expectation that we're trading in here or we're pinned down in here. Maybe we trade down into Monday. Maybe we trade down, let's say 415 into the bell, and then we open on Monday somewhere down in here at 410. Or even we open at 415 on Monday and we just start trading down Monday and Wednesday. It gets pinned down into this FOMC. You're going to be looking for brief moments of capitulation down in here, just like you had right here. And this is going to be the captain's trade. This is where you get like the one trade, you go all full port in, and you're going to take this knowing that we're going to swing higher. Now, with this all said for captain's trade, right? With all this being said into next Wednesday into Friday to this area right here, where's captain's trade? It's right here. It's probably going to have some kind of weird news coming out. You're going to hear the bears come out and tell you that Taiwan's coming for you. They're going to tell you that we're going down to 360 this week, something crazy like that. You're going to see blood in the streets. You're going to see panic on social media, that kind of stuff. Yesterday I told you don't panic. Yesterday I told you there's no reason to panic down in here, that what you do is you get ready for your trade. So if you're going to full port in, put $100,000 in, $500,000 in or whatever, this is your time to shine. Never. Your time is never to shine. Hold on here. Your time is never to be shining when we're way the fuck up here, right? 460, 450. When I always try to tune people out when we're up here. I always try to listen to the people when we're down below in these levels that are telling you, hey, buy this, right? It's probably going to go up. You're going to make, 3,000%, 60,000% or whatever. Now, with all that said, right, as we head into next week, this is what I want you to think about over the weekend. If we stay below this 420 heading into next week, right, and we start to accept lower levels between 410 and 420, that there's going to be a capitulation moment down below. That's your first thing I want you to remember. The second thing that I want you to remember,
Mexico Finance Ministry publishing a quarterly report for Mexico.
the second thing that I want you to remember heading into next week is that what would be the expectation if you buy one of these capitulation levels? Now, if it's 400, if it's 405, if we just touch 410 and we make the trade, if we only get to 410, let's say, heading into FOMC, I'm fine with that. It doesn't have to hit 405 or 4,000, but I'm fine with this level at 410 at some point, right? If we don't see that last little capitulation into that Wednesday. So what does that mean for you and where you should take that trade? If you're not going to follow on that trade with me, right? If you're not going to follow on that trade with me, still use this as your guide, this channel up here, okay? I want you to still use something like this above because even though they're saying, we got to break 440 and all that kind of stuff. In reality, what's happening to you as a bull is that you're accepting lower prices. So your highs and your Vanna rallies and your charm and all this stuff that's going to add to you going up is going lower over time. Instead of saying, we got to break 440, get 450, 450, we get 460, 460, 470, and then we're all-time highs. You're now starting to see, what are we doing? We're having a bad month or bad week, right? Back here in January. Scroll this over here. Way back in January, right? You're putting together bad weeks, then bad months, right? Bad month, right? Then you add a second bad month down in here, right here. Boom, one bad month, two bad months. Then you end up getting a bad month you end up getting a bad month here in March, right? They tried to save it, but they didn't quite save it, right? So they tried to save this month here, but then April comes straight back down, right? In violence in April. So the point that I'm trying to make to you is you start to add these months up. You start to add up bad quarters, and what that means for you is that the damage becomes something that you don't recover from as quickly. So back here in January, if we had traded higher, right, you have a better potential to come back to all-time highs. If you come down here, it's going to take you double the time to come to all-time highs. If you come down here and you start to make these wild swings, it takes you even longer to get back to all-time highs. So when you see this happening, currently right now into this FOMC, I have real suspicion and doubt that the market recovers to all-time highs sooner. So what does that mean for you as a bull? It means that you start turning in a quarter to 2 quarters that are bad. It ends up taking you 2 to 3 quarters to get back to all-time highs. That puts you into next year, believe it or not. More times than not in previous history, when you start to make these moves and you start to add the time onto it, right? It's not like you're down for a week and then you're sprinting back up over 3 weeks. When you start to reverse that, where you're down for a month and you're recovering for a week, down for a month, recovering for a week, that kind of stuff, it starts tacking on time for a recovery. Unless the Fed put comes in and we have this market meltdown or something, you're not going to see that Fed put until we get deep enough into and we're seeing the sell-off right now in the market. But the point that I'm trying to make to you is that for next week, heading into next week, I promise you, you are going to accept right now. You're going to accept because you've now broken any semblance. You're going to, for next week, right? You're going to accept 420 as the top, and you're going to accept, you're going to be forced into it. 410 is the bottom, and you're going to be looking for a dip buy down below at 400. Okay, so this is the regime for next week. Is going to be a price target of 4050, and you might get down to 4,000. You might get down to like 390. I don't think we get that low. More than likely, the bottom is like 410 in a brief moment. Hopefully, it doesn't happen in an after hours or a pre-market where you can't grab calls down in here. But anywhere down in here is going to be where the trade takes place. And I would expect into the bell, even if we bounce here and head higher, that by the end of the day, you'll probably get 415, and it would not shock me to trade sideways or snap up and regardless, come back down and be stomped into Wednesday and Friday. Wednesday is the key. Wednesday should give you the Vanna fuel to blast off, and then you'll get a second kick on that Friday once the last of, because there's a shit ton of puts on Friday as well. So you'll get two kicks on Wednesday and Friday of next week. But just know right where we are right now, right, that this selling that's taking place at this moment, right, all semblance of support for the bulls is gone. Does not matter if we trade higher here. None of this matters. This is all opportunity to sell a rip into Wednesday. Kind of sweet, right? Getting that 4050 coming to you without a doubt. So expect this next week. Expect 4,000. Expect 410. And I wouldn't expect anything lower than this. Maybe 4,000. You'll tag down here. If you wanted the bear scenario, like the uber crazy bear scenario, there is one. We'll show that to you right. We'll show it to you in ES. We'll show it to you here in ES real quick. See if I can put it on a 6 month or something. I don't know if that helps. This might help right here. We'll just use a cleaner chart. Okay, so on this chart right here, you guys should all know this is all basic trading stuff, right? Come down, test, test, test. Come down, test, test. Start to make a move higher, and we've held this so far here. But you can see
note on Russia sanctions clamped down. Seeing a New York Times report in the last few minutes that says European Union is prepared to adopt a phased embargo on Russian oil as early as next week.
You can start to, excuse me, you can see this here, right? This support is breaking down. And when it is breaking down the way that it's touching it actually right now, it's got a little penis on it right where we are. You can see it's about
earlier this week there was a report that
right
Germany had dropped its opposition to the EU embargo of Russian oil, and that the embargo was seen as imminent but no target date had been set yet.
So if we start to trade down into next week, we have a new trading range. If this is it right here, right? Do not get uber crazy bearish unless you break that 4,000, okay? This is when you take your next leg down for that uber bear. For that, we're having a market crash kind of a type of situation. So trade it level to level is the key, right? You trade this level up here, you trade this level down here, and you trade this level down below as well. So you take them level by level like a staircase for this next leg down, and then further down to 4,000. Don't be going out there buying 360, 380 puts or anything nonsense like that. Even if you did, they don't print until you get between each level. I don't know if you guys know that. So if you buy like 360 puts, they don't print until you actually break down in here. Well, they kind of print, but not really. Your max gains are actually level to level in here. Just keep that in mind as we trade down, that we are breaking through right now currently support. You're probably going to be forced at some point to accept lower prices into next week. That level is in here at 4,000, and you'll be looking to buy this on... We're looking to buy this on Wednesday or Friday for a leg higher. The price target on that somewhere. We'll look at that price target right now. See if this is holding up down here. See where we have a price target down below. Yeah, you can see right now that the bulls are being pushed down. You can see that the buyers over here, the buyers are weak. The bulls are weak down here to 416 and down to 415. Would not shock me to easily get to 415, and it would not even shock me to get down to 410. If they take it down to 410, it may be tough to get down there, but if we do get down there for the close on Friday for today, then it would be not only a good day for the Bears, but this would be the acceptance. Like you're now in this trading range of 410 to 420 heading into next week. Now, with all that said, right, we're going to look back real quick.
More from this report on the imminent EU embargo of Russian oil, saying that those countries would seek to make up the shortfall by increasing imports from other sources like the Persian Gulf, Nigeria, Kazakhstan, and Azerbaijan.
When we hit that 405, you're going to look for about a 5%. About 5%, okay? Somewhere up in here, price targets farther out. If you're not able to tune in on Wednesday or Friday, this is the price target up here, right around 430. We might get up to 440 or something like that. We might trade up and above. But that trade is going to be, I'm going to give a price target of, let's call it 440. I bet we'll get a rejection somewhere even higher, like 450 at some point. But price target 430 to 450. Price target on Wednesday into Friday, 405. And then a 300-point rise coming into FOMC. Do I think we can get higher than 440, 450? Yeah, I'll trade that as we get there. I'll take on different trades, but this market capitulation will continue into Wednesday at this point. Yeah, we are definitely accepting lower prices down in here. 400, 405. This will be a nice run for bulls here. 400, 405. And you might actually get some nice sideways and another leg higher. So I'll give the bulls like 430 sideways, another leg up to 440, possibly even 450 over time, and the market will begin to roll once again. And this will be into summertime. So maybe price target 450 ultimately. So 500 points. Yeah, 500 points. That's pretty good. That's about where it's at. About 500 points. All right, so let's see here. Let's move this over. And I'm currently in some put spreads for the 6th at 405.
Columbia reporting their March urban unemployment rate at 12.6%, above the 12% estimate. National unemployment rate at 12.1%, and this ahead of the expected rate decision. They are expected to raise rates 100 basis points later this afternoon.
Yeah, you can see the sellers are now right here at 420, 421. They're not leaving right now. So first PT 415 could capitulate down to 410 into the bell. All right, let's see what you guys are texting in here. Tesla about to be shorted back under 900. Hold on here. Right, but GDP printed negative. I don't think there has ever been a chance they would raise by 0.75. I don't think that they ever raised to 0.75. I think they just lie and tell you they're going to do that. I agree with that statement. They have 50 BPS priced into the next 4 meetings, though. Yeah, I think that they do the 50 BPS hit, Mike. I think that they do it. I think that they're going to be just like I think they're going to be just like using too much QE. That Jerome Powell's previous meeting that he had a week or two ago, we were listening to. He point blank said that he thought that inflation spiked in March and that it was coming down, and that regardless of where inflation goes, he was going to stay on track with the regime of 50 basis point price hikes regardless. Probably no Black Friday. No, I don't see Black Friday coming either. 433C lottos. I don't know anything about the 433C lottos. The 433s that I bought yesterday, I sold lottos yesterday at 4:30 and again at 4:30 or no 429.5 and then earlier in the day. Entire book map espoused total of like 8 spots. There's no volume. Not expecting huge moves. The Fed hasn't even started QT yet. Doesn't matter that the Fed hasn't started QT yet. They're pricing it in before we get to QT. No Black Friday because everything is quite orderly. Oh yeah, we start in May. Fair enough. 3 months because dip buying muscle memory is strong with this market. No, I don't think so. I think there's a misnomer out there. I think that Sport K brings up a great point. Sport K brings up dip buying muscle memory is strong with this market. I think that a lot of you guys don't realize that bulls out there, they will buy the market all the way down. They don't care. They'll never not buy the dip all the way down. But they sell the rip today. The one key part about today versus let's say June or December is that bulls know today not to. They hold to profit and pull. No bulls that I know out there are thinking this is the last dip. I don't think there's a single bull that I know, at least in the ones that I know personally, not a single one says, yeah, I'm buying this dip and I'm holding it for the next 3 months or 6 months or even a month. They're buying dips. They don't like selling the market. That's not how tame futures are overnight. Surprisingly, even after all this, we still have the blindfold on, press the buy button types. No, there always will be. There's more money to be made too. That's the other side of this thing. There's more risk, believe it or not, on the short side than the long side, and the payoff is not as good as buying the dips. My dip buying usually prints me hundreds to thousands of percent every time. We buy the market breadth indicator at 360 LOL. No, fuck no. J Powell pivot is going to 360. Yeah, 360 is a rough. My price target was 350, I think. But people in media are claiming that 360 is the J Powell put. But I think we go to 350. I think my first price target's 350, and then I've got a long-term price target. You guys don't even want to know what that is. Maybe some of you do. But my long-term price target on this market is I think it's 240. Somewhere in there. I don't know. I don't have it on this computer. I've had another computer. I did a chart that on another laptop. I did a chart over like decades. And I have it somewhere even lower. I think I went through like the blackboard, like the crazy guy on the blackboard in January or something with Joe Donut, and I was like, I'm going to show you and your dad. I think I even made a video on it and sent it to him. Not positive on that, but I think I might have either made him a video or we talked about it in person, or he charted it on his end and I charted it on my end. But I think the ultimate price target I've got on it is giving it all back, 240. You give the entire move from the lows of COVID back eventually. I think it puts you back to. Hold on, let me take a look and see. It might even be lower than 240, but I don't think that it is. Yeah, I didn't think that we hit. I didn't think that we actually hit that 1800 or 180 price target. I think it's somewhere around like 240 or so ish or so. That's my price target on eventually on the SPY. But I think it takes a long time to get there. Bottoms take time. Yeah, I agree with that. You call 40 put range tame for Globex. Those are insane moves in Globex hours. I agree with that. Off news have been getting Sport A in response to Paul. I must just take man with the news that's been coming out for the past 2 months. Futures have been very tame. But yeah, I see that. Paul's point is that they're not the 5 to 10 or 5% swings maybe in futures that we used to have. Breaking 419. I'm way low here. Debt to GDP was higher with that pre-COVID. Liquidity doesn't exist in futures right now for actual exiting. So why would they fuck their own positions? Canary is still in your calls. Yeah, I'm still holding. I've got some 433 calls. A bunch of like 20 cent, 15 cent, 433 calls, and I've got put spreads for Friday, and they're from 420 down to 405. Put spreads. VIX candlestick chart feels like sell the rip. Feels like sell the. Oh, I'm missing stuff. VIX at high. Some stuff. My charts aren't doing well here. I'm like missing a bunch of texts. My streaming software is all fucked up. I'm missing a shit ton of your text. I just scrolled up. Hold on here. Then bulls. Seems like market isn't even going to move much. How's your wife like your new hobby? Oh yeah, which new hobby is that? Like jerking off with my right hand? I think I'm getting like I'm dropping the stream. It's reconnecting the stream, but I think it like drops it, and your chats are breaking off the stream, so I'm missing a bunch of what you guys are saying. Let me scroll back down here. Cheers to everybody out there, without a doubt. I'm scrolling through to try to get to the bottom right now. I had the bottom, and I scrolled up, and I scrolled down, and it's loading more chat. Pair goggles help. Cheers, yeah. Cheers to you, Matthew. Cheers to you, Mars. Yeah, dude. You know what's fucked up too is that it could be a month for my elbow. I'm a little pissed off about this. 420 blaze it. Work hourly 20 MA is crucial for VIX. Bears want a set range between 4, 1, 3, 5, 4, 15, 14. Then they can gloat and be complacent and suck it when FMC rips. Cheers, Pirates. Hell yeah, Tomas. I'm going to forget. So if you won't enter Captain's trades until, why not short down to 4,000? I mean, 413, 420. What platform will we be using? Put my phone to the computer screen. So Winky's asking, why don't you, if you won't enter Captain's trade until 400 and 405, then why not short down? I do. I short and I long. I take a small.
Dallas Fed's trimmed to mean PC price index plus 3.1% in March versus 4 in February.
So if I'm trading 10 grand on rips and dips between each level, I do that.
The
but then if I go in with $500,000, I want to make sure that I'm at a bottom. So no, I'm not trading my full account at each level because eventually you lose and then you go back to work. So you don't do that. So my day trading is different than my the trades that I take to keep my account fat at all times. So I don't have to have a job. What platform will we be using? I put my phone to the computer screen. This is all about dealers stuck with those SPX puts at 427 and 424 expiring today, having to hedge by selling ES. We are talking about hundreds of millions of dollars of work. They're actually lower. There's a ton of puts at 420. It's not just 424. The hold on here. Yeah, look it up here. Give me a second. It's not puts at 424. It's there's call strikes at 430 and 420. That's where the majority of them are. So you're gonna have a pull to either side, 430 or 420, and they're gonna print the 420 side. So we can bring that chart up. Here is the chart. This chart. So the current expiration here is in black, and you can see them. You can actually see them.
So rig count up 3 to 552 in the Baker Hughes rig count. Total rig count at 698.
Here and then down in here. 420, 430.
The gas rig count was unchanged at 144.
And you're looking for these to expire. And more calls to be added. No one's buying calls. Everybody's spooked heading into next week. And I don't blame them. They're being told where it's at. Don't buy or believe this dip buy down below at 415 or 416 either. Just look for opportunities to sell rips above. I'm not convinced we go to 400 by 520. Good question. So Winky's saying if it sounds like you're 100% convinced that we'll go to 400 by 520, so why don't you just put a spread on that captures that move? That's a good question too. Winky's asking some great questions. Let's explain why. We'll look at that right now. Why I don't take the put spreads on why I don't full port into put spreads. I'm going to show you right now why I don't. I don't ever full port into puts. Never have, never will. And I'm going to show you why I don't. It's a very good point. I thought we went over this, but I think I will again. Why I don't. Give me just a second, I'm loading it up. VIX now top of channel either jumps back down or breaks out unless there is a policy change or charge or change. China supply chain gets better. I'll sell the rallies. Nice call on the QCOM call spread. Ping a VIX bull. Flag hasn't broken for 3 minutes. Don't touch 418, please. Don't touch me there. Did you stop out those 430s? I don't have 430s. I've got 433s, and they expire on Monday. They expire on Monday, and I've now have. When we broke through 420, I bought 420 to 400 put spreads expiring on Friday. NBC glad that I did something good for someone else. So why don't you just buy 415, 14 put spread for 520 if you're sure it's going to 400? We're going to address that right now, and I'll explain why. I played a spread. Good start of my Millie challenge. Apple approaching 200 makes me nervous. I just bought a 415, 450 put spread for 520. It's like $3. Yeah, it's dirt cheap. Anywhere down here, Winky is a good place to buy spreads, man. And you know we're coming back up. There's just no way we're not coming back up, bro. I am this sure, 100%. We're going to explain why I don't buy put spreads with full port. I do not accept lower prices cap. Switch to future short as fuck. Appreciate cap still in calls for Monday. They lie. I don't follow BTC. Bonds almost inverted. My hearing to not invest in stocks and only trade, LOL. Oh, yeah, fuck yeah, you don't invest in stocks. I don't do that shit anymore. What is your live stream schedule like? Normally I'm here. I try to be here Monday through Friday, somewhere between 8:30 and 9:30 a.m., but I can't always be here. It's a very long day. You guys have to, like, we'll talk about that this afternoon. It's a Friday, so we always do these talks on Friday. So we'll do this talk today. I think this is a talk that I wasn't able to get through last, or I think I ranted, but I didn't ask you guys questions. Today's a good day for it. But we're going to talk about the reason why I don't buy put spreads full port, why I don't personally buy them. Now, this tool that I use, right, I've been using this tool for years. I've got known for this tool for the past, 4 or 5 years. Or not this tool specifically, but any kind of market breadth indicator. And I'm usually the one that knows when to buy dips, and then you'll hear people all the time. Doesn't matter if we're going up or going down. You'll just fucking hear people say, you'll hear fucking people say, how does he know that we're going back up here, right? So just looking at this market breadth indicator, I want you to back test this, okay? And when you back test this, I want you to back test it both ways, Winky. Go in here and back test this. Go back as far back as you can, 1, 3, 5, 10 years or whatever. And the one problem with this back testing is the one problem that I've had with this back testing for 100% win rate. I got rules for this trade. So this is like a different trade, right? I got rules for day trade and 0 dates. I got rules for spreads. I got fucking rules for weeklies. I got rules for monthlies, right? But the one that's always printed no matter what. I tried trading the wheel. That shit bullshit. I'd make like 10, 15% 9 times and then smote down an entire fucking trade, right? So I have all these smart people trying to tell me how to trade, and the only one that's ever worked for me over the years is this trade. Now, sometimes I'll buy some put spreads, right? Sometimes I'll buy put spreads with $5,000, $10,000, $1,000, whatever. But I'm not gonna fucking full port in $100,000 into put spreads when we get to a top up here. And there's a reason for it, because sometimes this fucking market, even though we're going down right now, right? When we get up to one of these tops up here, it'll sometimes just keep grinding higher. And this is the phenomena that most of you know called no breadth, right? We melt up. And when we melt up with no breadth, you hear bears screaming going, why do we continue to go up? And you see bulls saying, I ain't buying that, I ain't buying that, I ain't buying that. We just melt up. So on the top side, right, if you go back and start to just measure where these things take place, right, even when we do come back down, I want you to look at this specifically, okay? It doesn't matter if the market's going up or going down. I want you to look at the specifics. It's important for you to know is that it's about capitulation, right? It's not about price. Remember that. Never about price or even the overall direction of the market. But the key is, let's say you tag this up here. Let's say you knew this was the top. You're like, that's the top, right? Start trading sideways. You're like, we're definitely going down here, right? See the market breadth go down in here, right? See that market breadth go down? You're like, fuck it, it's rolling over. I'm in put spreads. But when in reality, what happens is it just melts and melts and melts and melts and melts and melts and melts, right? And melts. And then even when it does come back down, I always talk about this, like, price don't matter, right? When it starts to come back down, right, and you bought your put spread over here, you're ultra fucked. You're ultra fucked. It never came back down and printed. So you get burned in that trade. So just go back and look at the bull side of it, the bear side of it, and you're going to find that you have a higher win rate on the bull side of this indicator specifically. So what does that mean to you as a bear? If you're a bear out there, it means that you can trade this with a put spread. You just can't rely upon it, and you need to rely upon these prints at least 7 times for like 100% or better wins. You can't be fucking around with 30% wins, 10% wins, and then not hit it big with 100, 300, 500% win. So this indicator specifically for me, it works best regardless of where the market goes on the downside. On the downside, you get these capitulation moves, and you know it's eventually coming back up. I don't know why it doesn't work on the put side all the time. I don't know why it doesn't fucking fall deep enough. But I've noticed that it doesn't always print on the put side. Now I know you can say, well, the market's rolled over. It should inverse at this point where it's always printing on the put side here. It has here. It has not here, has it? You see that? It is not printed here. So already you have one that doesn't print on a put spread. So just be careful of like, I guess you could get them like put spreads that are deep in the money. Yeah, those might print, but it's not as like, it's not 100% of the time. So these rules are for a guaranteed win. Like, I don't want any fucking reason. I want to place this trade, right? I want to walk away, and I don't give a fuck what anybody's saying. I know it's going to print. We're getting there today, too. We're actually pretty good. We're hitting that green level right now. We're down at 21.6%. I think Mary knows when we get down here, right? Total 19.4, 21.6, anywhere down here. Like if we anywhere 21% down to like 17, 14, you get down here into like the 80s, the 100s, right? You see these levels down in here. We're at 237 right now, but you start to crank down in this area, and you're going to get a forced dip buy from the algos. And when you don't, even in March 2020 we did. Even back here, we got a forced buy down below. And even if you came down here, you would have still printed when we hit these lows. And you see this green down here? That's how low we can actually hit. So let's say you bought a call spread down here. You got to put enough time on it for it to come back. So that was my only point the other day was put some time on those call spreads. And then as we get closer to capitulation heading into Monday, I'll put less time on them. So when we get towards Monday, when we look for a call spread, I'm going to full port that bitch. I'm going to fucking put a lot of money in there. So There we go. A little bit of bounce here. Bears are going to be looking for rejection above to send us. They want to see 1, 2, and then a move down lower on the ES, the SPY, the SPX. Good question, Winky. All you guys have had great questions. You know, and we're talking about full porting too. You guys have to understand, like when you full port, like full port's a whole different thing. Like this is a full port trade. This is your entire account. I know there are people out there that full port every single fucking trade. I know there are, and you guys lose eventually. I know you do, and I know people with shit tons of money, and when they full port, they want a guaranteed trade. They want guaranteed. They want to check every single box. And that box hasn't been checked for me yet. I need that box checked. And furthermore, within these rules, right? I've missed trades with this rule. I've had moments where I've missed a ripper. I've missed like 200, 300 points because the breath hadn't sold off and we bounced even higher. So I just don't trade that with that full port trade. I just wait. If you make those trades 9 to 12 times a year, I promise you'll be a fucking millionaire. I promise you'll quit your fucking job. Just have to have a year of patience to do it. You'll never work again, I promise you. Ever. You'll never work, you'll never have a job ever again. If you can make $1 million a year, right, you will never have a job again, I promise you. If you're a doctor, you'll quit being a doctor. I promise. Just stair stepping down now, right? 421. Look for another entry to 415, 410, and 405 over time down here. All right, what else we got here? I always get the best questions from Winky. And you know who else gives me the best questions? Like Dan gives me the best questions. Mary gives me the best questions. Amazon just broke 2,500. Yeah, they've got through. So just remember on Amazon that its level at 2,500 goes down to 2,350. It's a giant fucking support. It's giant. It's fucking huge. Because once you start breaking through those levels, it's gonna fall huge. I don't follow Bitcoin that much, but it looks like on critical support for going into weekend. I don't follow Bitcoin either. I used to not trade. I used to use Bitcoin for bad purposes when I was a young man. I was an early adopter of Bitcoin, but I'd used it for nefarious things. So basically, 405, 410. That's another whole other story. Like Bitcoin, I'd be rich today. So basically, 405, 410 all in, and SPY calls for a month out or something. Yeah, Dan. Like it's funny is. You can trade like 5%, 10% of your account down here, right? Buy some OTM calls, and they'll probably print. Mary was making that point yesterday. She was like, I've used that market breadth indicator, and it's printed me huge money. And that's a very fair point. Me talking to you, there's like 250 people watching right now that I know about. If I go in the back end, there's like 1,000. I'm not going to sit here and tell 1,000 people, hey, yeah, buy zero dates every time the market breadth indicator hits, because it's just not going to work every single time. It's reckless of me talking to you guys and telling you to do that shit. So no, I'm not going to tell you to buy zero or fucking like 10-day out fucking super far outside the money fucking calls. And that's how you build a bank. I'm going to tell you to do it the safest way possible. 220. Can you give an example of the credit spreads you're looking to snag on market? Yeah, I can, but I'll do it live with you. So I'll be here live. We'll do it together. Just bought another 520 430C because it was $9 yesterday. Now it's at 450. Sold them for $9 yesterday. I have a trend line for SPY at 260. Yeah, trend line of SPY is right. I thought 262, but I think it bounces even lower, like for a minute or two. Sorry, hold on here. I'm having a spasm in my arm. Sounds like a run-on sentence. Am I hearing to not invest in stocks and only trade LOL? No, you can invest in stocks, but I think that you have to sell them for profit right now. I think you can buy stock right now, but I think that you sell them. Whereas you could buy and hold. I don't think we're in a buy and hold regime right now. And I also think in this buy and hold regime that you're going to get fucked on stocks that don't swing wildly. I think to beat inflation and taxes, your best bet is buying dips on high swinging tickers. But that's just for me. You guys have your own rules. 240 SPY would be nuts. I'm already 1 foot out the door with shares. Yeah, you can always sell calls though on that. Like they're going to squeeze it higher here like before. Short covering
Fed announcing taking $1.91 trillion in the daily reverse repo operation with 92 participants.
Kroger selling off. Bye-bye consumer staples. Exactly. I want to see staples burn. We talked about that last week, right? You want to see staples fucking burn. Last vestige for bulls. Got these bulls hiding out in fucking consumer staples and consumer discretionary. That's where they're hiding. They think they're going to beat the market, but they're not. And that rainbow looks like it has a bump before it takes off. Yeah, you guys just go and get go out there, get yourselves TradingView. It's free. Search for the market breadth indicator. Go back on your own, right? You can use it far back with SPY and ES, but you can go even farther back with SPX. And then you can even go with the New York Composite Index to an extent. It's the NYES or SE. Don't quote me on that. NYE, I think, is the ticker number. And you can go back like 10, 30 years, 20 years, 30 years, and you can compare it. You can't use this indicator against just NASDAQ. You can't use it against the ticker. You can only use it against the components of the S&P 500. Turning it on and off. So let me see if I can find it here. Hold on. There's a little X in the bottom right-hand side. You'll see a little box with an X in it. And it's right here. You flash your cursor on the right here, and you'll see a little X, and you just close it. If you ever have sloppy shit on your stuff, you can always, you hit the little trash can here, it cleans up your charts for you. You can move these wherever you want. You can add tools that you use frequently down here in this little fast access bar. Well, let me turn that off. We have some housekeeping stuff to talk about. Hold on here. XPI actions resemble this last week's Thursday. Who's the author? All I see is 4. Okay, we'll look that up again. We'll look for the MBI indicator again. Sorry, we go through this repetitively. I don't think it matters. We'll do a SPY. Look up SPY. Okay, let's start at the beginning. If you go to the TradingView, sign up for it. Just sign up for the free version. Type in the symbol SPY. Click here. It's going to bring you to this. It's like ideas and people's thoughts on the market. These can be good and bad. I've had some success with reading through this stuff. I've made some great contrarian trades though on this stuff too, especially when they have their information wrong. So see more advanced chart is on the right hand side. You'll click on see more advanced chart, and we will clear all this here. We're going to turn this off. What you'll do is you come up here and you'll go to indicators. Sorry for my chicken typing right now. I've got one hand. Just type in market breadth indicator. And you'll see Iceman ran right here. This is my favorite one that I use. You can use whatever one you want. Even when you're looking in here, you can look within the little notes right here. And you can read through how he buys in here, right? He gives you information on what is market breadth, how does it work, bug fixes that he has done. It's an open source script. Hold on. It is a Mozilla public license, which is pretty sweet, right? Public license. So you could copy all this text. We could one day, if you wanted to, write some scripts or create your own. You can create your own with this script here. If you go back to hold on here, in Pine Script Editor, so you pop that up in here. It pops up here. You can add it to your. You can delete it over here. There's a little Pine Script Editor that's hiding. Where's that? Close this up. There's a Pine. So I use a Pine Script Editor for some. I use levels from Spot Gamma, and I use Pine Editor over here to create script to instantly upload levels. But I'll be honest with you, it takes longer for me to pump in the levels for the script to work than it does for me to just hand do it every day. So I don't bother. I just write my own levels now. So, let's with all this said, right? So you guys understand that now. I think the mark of the great teacher is showing people how to think for themselves, not to make people reliant upon you, and make my own predictions every day and backtest. I've learned a lot from you. Absolutely, I agree with that statement. Understand what type of spreads do you usually do in the money, how many strikes, etc. Another good question. So Brad's asking a good question. What type of spreads do you usually do in the money, how many strikes, etc. You will find that these are all fucking great questions again. You will find that, I want you to see this right here. So see this swoop right here? You will find that calls, scratch all that. You will find that at some point in capitulation every time, if you watch every day, you'll start to notice that even though we're going down, so like we're going down here, you might see a little bit of premium kick. But whenever we're going into capitulation mode, like down here, you'll see violence in the options chain. You'll see like a dollar option, call option go down to like 10 cents or 5 cents. But then you'll see a switch in that option start to gain in value, even though we're still going down. And those are market makers pricing in the move before it happens. So if you pay attention to options chains, you actually see the move before it takes place. How you can check in these is you check higher. You don't check in the money. You check up here. You'll see like a 1 penny option, and it'll go to like 15 cents, literally. Like 15 cents. And we haven't even made the turn yet. And what they're doing is they're building in, pocketing some money from you, right? They're already taking premium from you before you even know it, before you even get there. So when you start to see, when people say you don't always see capitulation, when you do see it, it's a good place to buy, right? And that's part of that conversation. So Brad's asking, what type of spreads do you usually do in the money? How many strikes? So it's tough to give you the how many strike. My point here is it's tough to give you the strike because let's say we grab it at 10 cents. It could be 10 cents or 75 cents in here, right? How do we have to go from 75 to $3.80? Or do we have to go from 15 cents to 30 cents, right? Or not 30, but 45 cents as we make this turn. So it's hard to say when or how much the spread's going to be. You focus mostly on the timing of the swing and what we're looking for now into next week is that swing. You're looking for when do the options start to gain some actual premium. Not fucking making money here. Not this making money. Not this. Not this. But you're looking for, hold on here. Oh. Having a spasm right now. You're looking to buy or call spreads. Hold on here. Hold on. Probably somewhere down in here, right? You'd buy your call spreads somewhere in here. Maybe even this close. And what you'll do is we'll keep going down, and you'll literally, I've had Joe and your wife's boyfriend tell me before, they're like, hey, Cap, we bought those calls you told us to buy, and why are we going down and my calls are growing up in value? And I say to them, it's because we're making the swing right now. Those are the market makers building in the price into that swing before the bulls buy. So what we'll do is we're going to keep our eye on the premium kick into calls. We'll grab call spreads down here before we get there. But you can get early. You don't have to be. I mean, a larger time frame, like Winky's talking about this, in a larger time frame, like this is a fine place to buy long calls. This is a fine place to buy long calls. Down at 405 is a fine place. You don't have to buy them. You don't have to buy them down at 405. That's what I'm buying. You guys can buy here. You guys can buy here. You guys can buy here. You can buy wherever you want to buy. But for my trade, that's what I'm looking for. My price target's 405. So you guys will see where that kick is. And that's the other part of that comment. If you are buying early, I want to say something to Brad. Where's Brad? If you are buying early, in that moment too, where's Brad? Okay, so one other thing to note in this, right, and managing the trade. Let's say you bought, there are differences in the price of options too. So let's say, they say it doesn't affect.
Just know for oil markets, Mexico's Pemex, a report surrounding spending at their Olmeca refinery, reportedly running well over budget. They've already spent almost $8.9 billion. The ministry has also requested extra funding.
Something else that's wonky.
This report, citing sources, latest cost estimates could balloon to $14 billion, some $5 billion over budget.
Let's say I buy a call spread down here, right? Right at the bell. Boom, I bought a call spread.
This facility is being designed to process up to 340,000 barrels a day of crude.
Let's say it costs you $100, but it's going to pay you $300. And you panic in that call spread, and it goes down to $10, or it goes down to $1, right? You shouldn't panic sell those call spreads, because those call spreads, believe it or not, as premium kicks in, will actually come back up and print that $300. It might be on a day of expiry, but it's going to print, is my point. That 100, you'll lose, and you'll be like, how can I get down to $1 and still go up to 300? So if you time call spreads long, this is where the forgiveness is in them. They'll still print that 300, but in your mind you'll think, oh shit, they're down to $10 or $1. I fucked up. Or you're crying, thinking I could have bought them at $1 down here, right? You get tears coming out of your eyes. And you're like, oh, I totally fucked up down here. And sometimes you won't fuck up. Sometimes you would have caught them at the right time and you would have went straight up. But if you made a mistake in timing, right, accounting for that, right, you diamond hand spreads. If your diamond spreads don't print immediately, you diamond hand them to expiry. I do. I shouldn't say you do. I do. Because they will typically come back into the money right at expiry. And they'll actually fucking print you like 97%, 96% or whatever. Then that gets us to our next conversation. When I'm trying to buy a bottom down here, I will try to get a spread that maybe I pay 100 for, and it prints 300. My attempt is to do that with a small strike, like up here would be like 440. Let's say it's 422, just as an example, to 420, or excuse 428. 424 to 428, probably printed 300%, or maybe it's 420 to 430. I bet you a spread with a small room in it. I bet you call spreads down here printed like 700-800% or something, with a small spread in it, a spread with a small spread within it. I don't know if that makes sense. If you buy a spread that's like down here and it's like a wide spread, like 430 or 412 to 430, you're going to spend a ton of money for it, and you have to get up here. And if you're not near expiry, you still don't get paid unless you break above it. So there's problems in that. But if you get in the money, call spread somewhere in there that's not that wide, somewhere in here, and you go above it, it should print. And furthermore, you want to do it on the SPY and not individual tickers because it's highly liquid. It's easier for you to get buyers and sellers when you're selling spreads. in a more liquid stock or ETF like SPY. Those are all kinds of more complicated rules that we're not getting into here today. You can look that up on your own. Get on YouTube, look up like what the risks of spreads, all that kind of stuff. I have it posted on the I have it posted on the handle, basics on spreads and what not to trade them on, what to trade them on, what to look for pitfalls, even if you are in the money. How far out are you thinking on 3-month OTM or I'm not thinking about 3 months. I'm thinking about 1 month between now and now and Wednesday. Calls expire end of June. Am I good? I don't know. The dude in orange. You should be in this market here. The dude in orange is saying my calls are for June. Am I good? That's a good question. Winky knows about. I think most of you guys know about this stuff. No, they're not good. So that's a good question, though. So we'll look at that. Okay, you have a downward move here, right? April to May, we went down, right? So you have to consider this, right? If you buy a 3-month call down here, you should be selling it up here at some point by the end of the month, end of May, right? So depending upon your time frames, this market is swinging so wildly and violently that you can't just like buy calls for June or for 3 months out and think that we're going up for the next 3 months. Don't be doing that. Everything in this market right now is to print. Everything. If you buy stock, seriously, if you buy a dip on stock, take profit on it. Be like, I'm buying it down here, I feel comfortable. I'm selling it up here, I feel comfortable. I'm going to wait for the next entry to go long. Do not be buying anything in this market thinking it's just going to keep fucking printing. It might, but if you're a bull, I highly... Like, so, dude, if you're a bull... If you're a bull, right? Do you guys see where you need to get to? You guys want to see, right? As time passes, where you need to get to be bullish this market. We're down here at 400. You can't even safely take a trade as a bull right now until you hold something like this, some kind of trend. That's the most recent one. There are lower trends, like it's down here if you go farther back in time. But even then, we're not doing it. We're not holding any kind of trend, are we? So, dude, you're talking about like you want to hold something in this market? Get fucked. You ain't doing that shit until you find a trend again. A trend, any trend. You fucking find a trend going back to, I don't know, 2019. You want to go back and find a fucking trend? You want to find this trend right here? Which trend do you want to find? Like you can pick them out. You can pick out this trend right. You can pick out this trend right here. Hold on. You can get yourself a different trend, any kind of trend. You find a trend that you like, right? This trend right here. See what the work that needs to be done for you to get a trend. And you say, okay, Cap, we're gonna follow this trend, Cap. It's way over here. That's the new trend, Cap. Then you want to follow this line all the way up. But right now, we're not in any trend, right? We're in selling. So for you to stay in trend here, you want to be checking. And then you want confirmation that you're staying on that trend, right? And you want to know the second leg down for that trend if we break that trend. And those are your moving averages, right? You go into your 100-day, your 150 days, your 360 days trends. 200-day moving averages all track those trend lines. Good question, though. Now, can I put up bookmap? I got bookmap on right now for you. Sellers are above at 428 on a larger scale. Right now, they are. We can get it down a little bit. Kind of floating around here, 422-ish. On a larger time frame. Yeah, they're right there. 422. We'll see if they swoop back down at 422, somewhere up in here. Market has more up days than down days after all. Full port rules, waiting, and refuse to take a loss. Yeah, you do that. I'll tell you what, if you wait, if full port rules for me, when I full port my account, it's probably anywhere from 9 to 12 times a year. It's usually less. It's usually like 10 times, an average of 10 times when I full port an account. I miss trades on full porting. That shit pisses me off. Like, if you think that I'm happy missing great trades on full porting, no. But, when I don't full port and I buy the dips, I'm not always successful. Probably once a year to once every 3 years, I blow up a lot of money. Like, blow it up. It's gone. Like, fucking gone. I'll pull money off it to pay for shit. But if you're trying to ask me as a trader, do I blow up accounts? Not all the time, but let's say I turn $10,000 into $300,000. At some point, that's getting blown up. Unless I'm full porting my bank, right? So it's like, make sure you have different brokerages, make sure you have different banks, and that you're doing different things with your money. You're not just going out there and being like, I'm taking every fucking trade like this. With different rules for different things. But I'll tell you, if anyone out there, if you think that, like me, Kevin, if you think that, I don't know, you pick your fucking poison out there with Furus. If you think like Zach Morris, you think there's either two things going on. They only have two choices. They either have some kind of a system that guarantees that they make money, or they're charging you for something for when they blow themselves up, it covers it. That's my only thing that I could think of, how they're always successful. So, and then a lot of guys don't want to tell you, hey, this is the simple way. And then there's guys out there that don't blow up accounts, and they have their own system. Some of these guys, they just take 10%. Some of these guys only take sure things. Some of these guys only take small chunks, right? 10% here, 13% there, and that works for them. So everybody's got their own tools that they use that work for them. You're talking 9 trades a year. The rest of the time is impatience. And then you're talking about gamblers in a market that fucking hate impatience or are impatient, right? You've got a market with, here we are right here. Just want you to see this, be conscious of this above. See these sellers here hiding. 420.44, 421.27. 420.93, I should say. So you've got a shark right here. You got a bear that's moved down. Fuck that. We don't need that. This is bear defend. BD, bear defend up. That's not buy dip. That's bear defend. We have bears defending now even lower. Shit. I didn't mean to put that one out there. This is S1. This is S2. Bears have moved from defending up here. We did bear defenders here too, but now they have moved to right here. They're looking to defend this area and send this market lower here. If you do break through this S1, S2 area, you will see a squeeze higher. It will rocket ship to the close. But the bears are saying to you, nope, nope. And now this would be your nope. This will be the violence in the close right here. So let's go back. 500K a year would have a job. Yeah, I know what the truth is. I have some close personal friends, okay, and I'm going to be honest with you guys. They have a lot of fucking money. A lot of fucking money. And we discussed this for hours. And we don't believe you. I don't believe you. Like, I don't believe that most investors and traders are successful over time. The numbers say that you are not successful over time. So when I hear all these yeah buts, like yeah but this, or yeah but that, or yeah but we're down here, or yeah but I want to do 0 dates because of the market breadth and I'm like, I get it. You guys want to throw, dude, if you have $1,000 account and you want to throw like $10 at it, sure. You want to do that 10 times? Sure. If you want to throw $1,000 at that though, and you can scale this up to $100,000, you're eventually going to lose. Bad. And if you're full porting your account with those loose rules, you're going to lose bad eventually. Eventually, the averages catch up to you and you fucking blow it all up. It doesn't mean you don't have fun along the way. You don't make a bunch of money, buy a car. It doesn't mean you go out there and you buy a bunch of cocaine or whatever it is you do and have a blast or pay off your college or you pay off your mortgage or whatever it is that you guys do out there. But the point is that you need to have a tool in your toolbox that you can always rely upon no matter what. So make sure you have that tool. If you do, you should be driving a Lambo right now or have some houses. You should have cars. You should have whatever it is you want, right? Drugs. You wouldn't be sitting here day trading well, unless you're a gambler like me and gambling all your money away on the stock market. Let's see what else you guys have. Think the mark of a great teacher showing people. Yeah, we already read that one. Can you put up book maps? Sorry, read that one. 90 to 100K is all I want. Yeah, Brad, I remember wanting 100K, man. 100%. I remember wanting $100,000. My first $100,000, I was a very happy man. Made my day. No job had ever paid me that in the course of 3 weeks. It was amazing.
S&P 500 slipping back below the 4,200 mark again after retaking the level a few minutes ago.
If I made 100K a year, I wouldn't have a job. Cap, so is it safe enough to say we're going up in volatility for the next week? I've been trying. I was talking to someone earlier today about the VIX because I figured we were going up today too. The VIX I thought was telling us we're going up. The VIX doesn't want to break 30. I realized that the VIX doesn't want to break 30 heading into FOMC. We'll look at the VIX. I get that the VIX doesn't want to break 30, but here's my head scratcher. I got the head scratcher here. So I'm like, if the VIX is going to get to, we have 38 up here, right? We have no buyers of call or puts on the VIX. So we know that, right, from this morning. We have no put buyers on the VIX right now. So it's free reign, free riding up, right? It's all call buyers on the VIX. But that becomes my question is, what are they thinking is going to happen? Are you're trying to tell me that you think we're going to $50? Tell me you think we're getting this? And I'm like, man, I don't fucking think so. I know we have this fuck you, we're not going there back here, right? On this upper channel. So I'm like, what's the gain for long VIX to 50? Hold on a second here. So I'm like, what's the gain? Is it to 38? Is it bloodbath? Because you're not getting it. I don't know, man. If we go to 50, I'd be kind of shocked. So my only concern on the VIX is, or my thought on the VIX was, I don't think we're getting a 38. I don't think we're getting a fucking 45. Maybe we do. I could be wrong here. Maybe because there's no put buyers, we get to 50. Maybe I'm not figuring this out in my head enough. Maybe I'm missing something. So my thought was that that the VIX would at least bounce down below into Friday or Monday, down to 25, which sounds right. And then into Wednesday, we'd get somewhere like 38, 40. You might get that one little high up here, maybe Friday, and then you'd roll it down into the weekend or Monday of next week, or not the 6th. I think it's the 9th. You'd have a big steep fall off. So I am scratching my head. This is one thing has not been answered for me at this point. It's one thing I'm scratching my head on this one. Maybe because there's no put buyers, it's all call buyers, that it just forces it up into that 50. Maybe it's just, and people talk about this being a vol buyer's market, regardless of where the price of the stock market goes. But I'll tell you what, if you fucking think it's going up to fucking 50, you're seeing something that I'm not seeing, right? I think 50, 121, man, we got low. That's like 380 or something. I think. I would think that $50 is like 380. I'm not seeing 380. That's a tail risk. But maybe $50 is 400. I don't fucking know. Like, well, maybe 46. Maybe I get this wrong. Can I see 45 at 400 on Wednesday? I don't know. It's going to be a tough one. Yeah, it's a tough one. Good bet. But I don't fucking know, man. I've gotten burned on the VIX. I've gotten fucked up on the VIX. Like these moves right here. When you want that last little bit right here, that move right there, you get trapped in there all. That's a fucking trap. That's a fucking VIX bull trap right there. Unless you're like a high frequency trader. That's a fucking VIX bull trap right there. So that's my only question is like, how do you get? Telling me we're going right the fuck there? Are you telling me VIX bulls aren't going to get trapped in here? Something we don't know? Find that hard to believe. I like the VIX to 33. I like the VIX to 37. I don't like the VIX to like 46 or 50. I think this is a trap up here. I think that's where VIX bulls get fucked. It's just the time, like the time that you're up there. It's so small, so short that I'd be taking my money and run. I'd be taking my money as a VIX bull and running somewhere in here, not up in here. This is where VIX bulls get trapped all the time. The tops, you guys can go back and watch anywhere in previous history. This one was a pretty good one. But like any of this shit right here, you get caught in these things. Not only do you get caught in these things, but you get caught here. And then I don't know if you guys trade VIX. I've traded VIX. Not only do you get caught in here, but you have to add more. Like you get caught there, and when it bounces down here, right? Like your $10 fucking VIX calls go down to like 30 cents. And you're gonna add another fucking rack them up to try to get caught, not get caught up there, and then before you know it, bye bye. You're fucked. Just one big ass VIX bull trap. So this is a tough trade, man. Being a VIX bull, maybe I don't fucking know. I want nothing to do with it. I'd rather be a VIX bull down here. I'd rather be a VIX bull down here and down there, down there. Hold on here. Rather be a VIX bull here. But as we get up here and touch up here, when you start to get up here, I would be a VIX bull. If I was a VIX bull, I'd be a VIX bull like right here. 38, 40 bucks, somewhere in there. So how do we get there? Where do the price of SPY go for us to get there? And you got VIX bulls thinking we're going to 50 or 46 or 50? Maybe. I think this is a fucking trap, though, from here up. So I guess my point was I thought, you'd bounce down, get that nice fucking rip above, take your money and run, and let some bag holder buy the rest up there. That was my thought. But I could be wrong here. Or I'm probably very wrong here. Probably it's looking like we're going to head up here to 37. Maybe bounce back down and then get another ripper higher into Wednesday. Where with these spreads? Tax rates. I don't know. What I do is I take my paperwork. I have a stack of paperwork that I take to my tax accountant. If you're making that money, you get yourself a tax accountant, okay? You don't do your own taxes. If you're doing your own taxes, you're not making enough money. You're paying 30%, Jeremy. You're paying more than 30%. There's other state taxes, property taxes, sales taxes. You're probably paying 60%. 3 months out guarantees enough time for a big print. Yeah, go back and look at when the market goes up and goes down. It doesn't matter. Doesn't matter, like the general trend of the market. Market go down for 2 straight years and the NBI still works. How do I decide expiry? Usually the day of, I figure it out. Usually the day of, I have the day of, I'll be looking for the next volatile expectations of the market. I'll make sure that I was on Silk Road. What tax rate are you aware of? Probably 30%, roughly there. Depends on what you do. Like, do Do you have a trust? Are you trading with a trust? Are you trading with an LLC? Are you trading with you? If you're making that kind of money, you don't need to worry about it. You just go to a tax guy. Make sure that they know about these kind of taxes because they're going to make fun of you. Why you didn't take a short play when we hit around 10 a.m.? Is that because of the MBI? Just asking to learn. I don't take shorts, but I did take a put spread today at 420. It was below 420. I took a put spread. So I've got a put spread on right now, and I've got call spreads on right now. Not call spreads. I've got just calls. 433s from Monday. I'm averaged in at like hold on. I'm down 50% on Monday. I'm down 50% on Monday. Maybe even 60% on Monday calls for I'm on 433s. I bought them because they're outside the money. I'm expecting a larger print. And then I'm on 420 to 405 put spreads for the 6th. The market breadth doesn't work well for Tesla. It doesn't work well for any ticker. T-Crone's asking a good question. So the market breadth indicator tracks the components of the S&P 500. You can use the market breadth indicator against the S&P 500, and then you can apply that to an individual ticker that is a component of the S&P 500. Not always. You have to make sure that the ticker is participating in rallies, is participating in sell the news events. If a bank's behind a ticker, it won't participate in declines in the market. If a ticker is in a corrective phase, it won't participate with the rest of the market. So if you're going to apply that, it's like a 2 or 3 step process to apply it to an individual ticker. Still bouncing around here. Looking to try to hold itself together into the close. I'm going to still expecting a sell-off into the close at this point. Do not want to see a close below 420. I am very bearish at this moment, if you're asking, or if you want to know. Uber bearish on the SPY. Well, not Uber, just bearish to a new trading zone. Something about a trillion. What is Bookmap saying? Buyers coming back? No, they're not. Bookmaps, their buyers are not coming back. You're being pushed into a new trading. You're being pushed today. You're being pushed into a new trading zone. So you guys want to know your levels for Monday? I can tell them to you today. At this point, unless we have some huge reversal that we don't see, some buy program comes on, something like that. I can promise you that Monday, when we check back here, I promise you, like a 95% chance, right, that you will see our resistance at 420 and our support at 410. Promise you. You will see us trade above and below that zone briefly into FOMC, but this is your home for the next 3 days to 5 days, guaranteed. Guaranteed. I'd place a pretty sizable bet on that. Pretty sizable. And even within that, you could still see us trade higher today and sell down into it on Monday. So at this point, the market is selling. There's panic in the market, and the panic is going to continue into next week. I promise. Trust me. It doesn't matter. It doesn't even matter. I'll tell you this too. If we trade higher into the bell today, I'll promise you this too. If we trade higher into the bell today at the end of the day, it's only to re-short down into next week. That's all it is. It's take the money, right? And then reposition for next week to trade it down. Promise. whatever spread to use depends. Watching puts on SPY. You have to do. Do you have to do spreads? Or we can just do. You guys can do calls. You guys can do zero dates. You can do whatever you want. You can trade any way you want. You can take any trades. My only, I called it the challenge. It's a misnomer. It's not a challenge. I should have called it something different. I should change the name and just call it the tool that I use to consistently make money. Fuck. This is the tool that I use to make money. It's the one thing I want. So I don't think I'm gonna be streaming in a year. I'm supposed to be moving in a year. I'm gonna go sailing. I'm kind of out of here. So I want to leave. When I started this channel, I started it as when I started just reaching out in public. It wasn't to create a brand or to start selling you guys classes or to, I don't know, like all that nonsense. I wasn't involved. I wasn't interested in that. Wasn't my goal. So my goal was only to talk to traders, talk to investors, give something back. I see people make bad mistakes all the time. It crushes me, crushes my soul, believe it or not. It does. Like, it fucking pains me. And I know that a lot of people still aren't going to be successful, but there's nobody out there. There's a few, but there's not many traders and investors out there trying to help people that lose. So I figured I would, it kind of grew into this. So it's more than I wanted to take on at this point. We'll talk about that today before we close the day out. So this costs me a lot of money to run, and it costs a lot of time for me to be here with you guys. I'm here with you. Joe it was simple. He's like, you switched from making videos to live streaming. He's like, so now you're committed, a long part of your day. You're there. I'm here for you guys, or not. I'm here like 8:30, 9:30. Got to do my own due diligence. Got to make my own trades. Got to make my own money. And then we're here till 4:30 in the afternoon. It's a long fucking day. And then I got to talk, and all that kind of shit. So it's rough, right? And I have my own life that I like to do. I got a whole bunch of shit that I do in my own private life as well. And summertime's coming, which I don't even like trading. I like placing a trade and going partying all summer. So I don't want to. So I'm backing myself into a corner here as we head into the summertime. So we'll talk about that. You can see this down here, some firm support lining up down here at 415. Dip buyers down here. Price target down below 415 on the market. If even with this buy down below, do not consider this support. Consider it just to take the money and run, and then look for a trade lower into next week down to 410. You guys can see it firming up right now, right? 410 down here, and we are starting to look for. When you see this right here, this down here is buyers stepping in with the same idea that we're going down to 415. So price target 415 on the market. So anyways, for the next year, I was talking to Joe. Joe and I, a couple of guys talking about like, how do you give this back? Like, if I made classes for you guys, you can find classes on the internet. We trade day in, day out together. This is better than a fucking class that you could buy. Like, any people out there that are new traders out there, just sitting with a streamer all day long in the market all day long, you're going to learn more doing this stuff than any class I'll ever teach. I've paid for all those classes. They don't work. They all sell the same bullshit. It's all fucking lies. They're trying to make $500 from you, $600. Dude, I've sat in trading rooms, like boiler rooms, in Discords, right? You sit in a Discord that costs like $500 to $1,000. I promise you this, okay? You sit in a Discord that costs like $500, $1,000 a month to be in, and after like a year, 2 years, it's a full turnover of people, and you watch them burn their accounts down eventually. You watch like Furu, who says he's there for you, but he only shows up at certain times, or he misses specific key market pivots. You couldn't pay for this market pivot today. I'm going to tell you something. I'll tell you out there if you're listening to me right now, okay? You couldn't fucking pay a fucking Furu to tell you we've pivoted and be there talking to you as it happens. You couldn't be there with a Furu telling you, boom, right here, we're going higher. So, that $500,000, I feel like there's scammers that are out there trying to take your money, trying to pay themselves. So, you get 1 year. You're getting 1 year from me in some fashion. We'll be here with it for 1 year, right? We're going to trade a year. and then I'm going to be gone. And so I'm like, what's the one tool I could teach these guys over the course of a year? I'm going to teach them patience and discipline, and I'm going to teach them how to consistently make money. It's like a dumbed down thing. Like, you can be a fucking dummy and be and rich. You can hobnob with rich people, and don't try to explain to them how you make more money than them. You can make more money than a financial advisor. You can make money from that guy that works down at the fucking your local, like, what's the place called down there? I have a Edward, my own bank. I have a banker, right? My own banker fucking hates me. They despise me. And they ask me to give them my money. I tell them no. So, like, I don't know what to say to you. Everyone wants your money. Like a brewer wants your money. The bank wants your money. So they can fucking bet it and gamble it for you. Right? And when they blow up, they lose all your money. And so this is for the retail trader. The stream is for the retail trader. The tools here are for the I don't think some of you guys can afford this, but I know some of you guys can't, right? Bookmap costs me $500 a month, I think, $350 to $500 a month. Spot Gamma's a couple $100. Trade the News, fucking, that's like $350 a month, something stupid like that. Fucking Flow Algo is like $150 a month or something stupid like that. This shit's like $1,000 a month minimum. High speed internet stream, equipment in here. What the fuck do you think that? I mean, by the time the year's over, it's like $20,000. Like, McDonald's worker makes that shit. Like, that's after taxes, right? So that's like a McDonald's worker making 30, 40, 50 a year. So if you guys have these tools for free, and if you're trying to build an account, and we're day trading together over the course of a year, you guys should know if you could. You guys, over the course of a year, should be able to know if you're going to be a good trader or not. If you haven't built an account in a year properly, you shouldn't be trading probably. By a year is a good trading time. And then I'll just a fucking pair. You get me for a year, and I'm just going to ghost this whole entire thing. I'm ghosting Twitter. I'm ghosting YouTube. I'm ghosting it all.
Colombia Central Bank raising benchmark interest rate by 100 basis points to 6% as expected. For Colombia, Central Bank's in rate decision was backed by a majority of the 7 board members.
Oh, what do I do? So every day I do TA. So it's funny. Do I do TA? We used to do a lot of it here on the channel. I haven't been doing it recently. I should get back into it. But there's been so much violence. I used to do more TA and live stream, but I don't have the time to do it with you guys before the stream anymore. But I check market breadth every day. I should make some videos about market breadth and get back into it with you guys. I do. I start with traditional. How I start my day is this: traditional candlestick charting. Like, pull out a chart, chart that thing out, right? Just chart it out with all the simple tools, basic tools. I'll put up some moving averages, check those, right? Then I'll try to look at some Elliott wave stuff, right? Then after all that, I look at market breadth. I look at volume profile, market profile, volume profile, right? And then I read my reports that I have to read. I read Twitter for sentiment, market sentiment, right? I even read CNN for what they're trying to spoon feed to Joe Bob on the street to see where the market's actually going. They tell lies to you as a trader in the trade pubs, but they tell the truth to an extent to Mary and Joe on Main Street. They just try to sugarcoat it for them. They have a price target down below 415. Tag it, baby. And so I add all that shit in every day, and then I sit down here and I'll chart it. I'll go to my candlestick chart, see if all that matches up to market breadth or to market profile, volume profile. See if my candlestick or my charting matches up to what the bear counts are on Elliott wave, the bull counts are on Elliott wave. And then I'm comparing this stuff along now. And now when I'm ready to trade, I'm like, hey, I'm trading today. I've got Bookmap up. I've got a candlestick chart up. I've got flow going in the background. I'm listening to this breaking news, right? I trade reaction to that news. And then also I'm looking in this trade the news for some very violent things that take place in the market. every once in a while you'll hear news that you don't hear elsewhere, right? Or you get it before other people. This is read straight from a Bloomberg terminal. So I've got a cheap Bloomberg terminal here. It costs me like $15,000 a year. I'm not paying $25,000 a year for it. I've got options flow, best options flow I've found. I've got Bookmap running with the best updated data you can get. I've got what I think is one of the fastest candlestick charts that are free. I got Trade the News in the background. I got Twitter up in the well, I don't actually, it's down again. But I had Twitter up, right? And I try to make my best decision that I can. And even with all those tools, even with all that history of trading, you still make mistakes. You still lose money. Right? Hold on a second. My dog's down here trying to get me to cuddle on him a little bit. Gotta give him a little scratch while he licks my hand. Big buyers down below on
crude futures at well up highs and slipping into negative territory, down about 25 cents, just above $105.
Big target dump down below. I'm not sure if you're a bull, if you're thinking, hey, if we get down here, there's some more buyers down at 416 as well. And this here is this is buyers. They're just not strong, right where we are at 417.19. There are buyers here. They're just not strong buyers. The strong buyers are down at 415. Even with these buyers down here, I would not trust them. Do not trust these buyers down below. Just turning back. Oh, you guys appreciate. Hey, thanks, Abraham. Appreciate it, man. Thanks, I appreciate that, Will. Love you too, King Cow. So, same to all you guys. I love you too, Superlinks. Thank you, Chan Yen. I don't know if it's a bounce chase. Even if it does bounce, you take profit here and then re-enter again.
Colombia, the central bank raising its GDP growth forecast for this year to
hey, buddy. Hold on
5%.
So what you're going to be looking for is, if you're in just 0-day puts,
40 of the board members voted for a bigger increase of 150 basis points.
I'm drawing this wrong. You're going to be looking for a tag down below. It could be a grind down there, possibly a trade higher, and then this trade lower. Yeah, I think we can get 410 today. I'm not positive on this, but dude, I'm telling you what. I'm fucking telling you what. You have some panic in the market. You have if call sellers come in, like if the call holders come in that are for today, like people that are holding calls today, if they fucking cut the belt loose, it's gonna be money time. I guess you could say if puts start to monetize, we could go higher. But even if it doesn't matter. Doesn't matter. The point is that they're still gonna short it down. Remember that. The road is down right now. You're being forced into 420 to 405 or 410 for next week right now. If today was a bullish day, right, we wouldn't have fallen below 420 and rejected. If we had rejected here, bounced, and went higher, this is a bullish day, right? This is a bearish day, right? Not a bullish day. And so if you're trying to catch knives and all, there's no real point. You just start getting ready to sell rips up here. Yes, saying here. Hey, Paul, how are you, brother from Ireland? My family's. I have grandparents and cousins from Ireland. Inishgill, Galway. Posted a screenshot in Discord of Bookmap and thinking, so are we buying calls? Nope. Intraday, how do you discern if it's a brief reversal or if it's a gap or type up move? It depends. Depends on where we are in the week, the month. Super awesome what you do. Thanks, I appreciate that, Ryan. Learn so much about how to read price action cap. Yeah, I'm a price action trader, Paul. Paul's saying learn so much about how to read price action. Paul's correct. I am a price action trader. Or day trader. A price action day trader. I should be clear on that. I could give a flying fuck what the narrative is. Only thing I care about is price action. As a matter of fact, I heard someone comment, they said, stop getting on fucking the internet because of if you're a price action trader. Yeah, I could switch sides in a heartbeat. Thank you, Jasmine. Just did a chat with support. What part of Discord? Hey, Cap, do you plan on recording any tutorials on how you consistently make money? Thanks for what you do. I listen while I'm working. My 9 to 5. Try to trade when I can. Yeah, I want to, McChambers. I just haven't had time. I'll be honest with you. It sucks because I was talking to Joe and I'm like, and I'm going to talk to you guys about this today. We're going to have a little chat about this because, you know what I'll do is I'll end the chat with a poll on at Captain's Alpha. So on I could record videos if I didn't stream as much. And so I was talking to some people and I was like, do I only stream on certain days? Like, do I only pop on to stream? Like, I could do streams where I'm only popping on live streaming like here and like here for an hour or two, and then just start making videos. That would work. But it's tough to be like, yeah, I'm going to live stream 8 hours. I'm going to do my own thing. I got to make my own money. And I got to fucking, do all this shit. And then I'm throwing another 8 hours at live streaming. So it's kind of hard for me. I don't have any paid interns. Dude, if I was selling classes and all that shit, sell like the Discord and sell like all this other nonsense, like private classes, and I'll call you up on the phone. You can ask these guys. I talk to people on Twitter on the phone all the time. And I'm never asking for money. I've had one guy that sent me money. I'm not going to name his name. He's cool as fuck. And I'm appreciative that he sent me money for talking to him once. But I don't seek people out for that kind of stuff. I don't seek out like how to be paid for this. If I did, it would be easy for me to record videos. It would be easy for me to record videos and also easy to make classes, because a lot of that due diligence and a lot of that work that gets done, because I have to do all the engineering myself. I have to do a bunch of shit in the background you guys don't see that that needs to be paid, like that or needs to be paid. So paid help. Even I have interns that work for me. They're my kids, so I try to tip them. You guys probably don't know this, but a lot of your tips go to my kids, and they help me out. So I pay those kids, pay them pretty well, believe it or not. But they're kids; they don't understand free. Like, come help your dad. They don't want to hear it. Their kids are assholes. They want to make like they're like paper boy. They want to get paid for delivering the papers. So it's hard for me to do all of that, to offer all of that. My thought process is we could do it either two ways. We could do it and that's the discussion today is. Or either slow down the streaming. I could either slow down the streaming and make more videos with a blend of streams, and you'd see me on Twitter when I trade. You get those alerts. You could probably get a newsletter out of me, or some videos, or a newsletter, and a mix of streaming. Or you just day trade it with me live every day. We'll do it for a year, and we'll keep it going for a year. And you get that education. I think this education is better. I'll be honest with you. I think this education is better than any kind of class will teach you. Anything that I could sell you. I mean, if you want me to, I'll sell you a class. I will. You guys want to just make videos? I will. And there are some better people out there that have free classes. They're complicated, but I try to keep my shit simple. I know that you guys once you guys understand the concepts, the mechanics of concepts, you'll then understand the complicated aspects to those concepts. Oftentimes people give you complicated concepts and not show them how they work. And then that's where the disconnect is for a lot of people, even smart people. If I tell you how to ride a bike, right? If I tell you how to ski, I could tell you all day. I'll be the best teacher in the world. I could tell you step by step how to ski right now. And I know that you couldn't go on a mountain and ski. But if I take you with me skiing and you and I ski together, no words will ever, no video, no nothing's ever going to help you to understand the mechanics of that unless we're doing it together. So like all those classes out there you see, I don't think they matter. Getting a little bit of bump down here, some nice dip buying going on. It looks like we had a touch down below, maybe some dark pool. This looks like dark pool buying down here. Like they bought the 415. Even though it didn't go on the chart down there, it looks like they bought it. You can see they bought it. So we're going to look for a rip higher from here. That looks like looks like a decent bottom here. We'll see. That they just bought right here. See if that holds for the bulls. I'm not believing in this in any way, shape, or form. I think we see 415 or lower today. I see the sellers right here. There's a large group of buyers down here. You see 135, 120 trying to consume. You can see them down below here, right at 415. Keep your eyes down here, okay? You can see them growing. You can see these buyers ready to consume right here. But I don't know if classes do it. I'm not a scumbag. I'm a scumbag. I'm a scumbag, but not that kind of scumbag. I'm like the scumbag you want to hang out with.
Ukraine, President Zelensky saying there's a high risk that peace talks with Russia will end.
I'm the scumbag.
Blaming it on the actions of Russian troops during the conflict.
Or your wife or your husband. I'm the good kind of scumbag.
More from the Columbia Central Bank after trade decision saying they see inflation close to 7% at the end of the year.
I'm like the good bad guy. I'm the guy that's going to take you to Burning Man. Take you to go surfing. I'm going to take you skiing. I'm going to take you I'm going to take you to Europe. Take you down to South America. We're going to go hunt mountain lions up in the Andes or something. Do something crazy. But what I'm not going to do is I'm not going to be like your Bitcoin maxi, and I'm not going to be your stock maxi. I'm not going to tell you to buy every single fucking dip and hold. Those kind of things. I'm not going to tell you to buy my class. I might at some point. That was the other thing. I talked to Joe about this. If it doesn't pay for itself, I'll let you guys know. It's not paying for itself right now, but if it does continue at some point, I might do something. But not it'd be like $5 or something. Derek Cotenoy does something like that where you ask like for like $5 or something like that. Just to make sure you pay for everything. It's not that much of a dent. But if it becomes a dent or anything like that, only if it becomes unprofitable to where it doesn't pay for the services and the time, then at some point I'll let you guys know. So we'll give the funny thing is I was telling Joe Donut, I go, I tell Joe Donut, I go, he's laughing his ass off. I'm like, I go, when the donations come in? I was like, donations come in here, 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 and here. They came. I think you guys donated today, which is super fucking cool. But I'm like, usually they're on rips. Bulls love to tip when they're making money. Bulls are fucking generous. Bulls are super. I don't know if it's the Bulls or maybe it's the Bears that don't want to get fucked, which is hilarious. As a matter of fact, let's thank some people today. Today is Friday, so we're gonna go through the people that support this channel. I want you to know out there that this is a free sub. There are not many like it. There are a few. There are a few people that I have a lot of respect for out there that do this. But and there are some people that do just parts of it. There are people out there on Twitter that just give their 2 cents every day that have some kick-ass information. There are people out there that don't charge a lot, that don't murder people. There are some people though out there that are sharks, right? Yeah, I'm not going to name names, but there, that you go down the rabbit hole and it's like, I need $100 for this, $500 for that, $1,000 for that. Oh, and by the way, do you want this class and that class? You want 101, and they're charging big dollars for that stuff. Stay away from those people out there on the internet. There are some people out there like Derek Cotenoy. We don't always get along, right? But Derek's out there. I think he charges $5 or $50 or whatever you can or something like that. You should follow guys like that. Guys like that asking for $5 or $10, $50 or something like that. Even if they're wrong, it doesn't matter. We're gonna go roll on this because it's important to me. Yesterday, Derek was getting lambasted by somebody with like 200 followers. You can have 200 followers and ask questions, but the question was kind of mocking of Derek, or even just questioning him. You know, if a guy like Derek is right 70% of the time, 80% of the time, 100% of the time, 50% of the time, it doesn't matter. That guy is out there trying to teach you how to trade, how to invest. He's putting his time into it. If that guy's got a lot of cost and time that he's put into what he's doing, I think he charges like whatever you can pay. But don't bitch at him for that stuff. If he isn't the trader that you want to learn from, go to somebody else. If you go to Derek and you find a great tool from him, use it and pay for it. If you find someone like from Mike, right? I'm gonna bring his site up right now. Hold on here. Hold on right here. I'm bring him a couple of these trades. This is a YouTuber that I like. His site I think is called Figuring Out Money. Right here. Like this guy right here. I like this guy. This guy Mike right here is his channel. Guy charges a little bit of money, not a lot. Small. I think it's like $5-10 or something. He ain't charging a lot of money. Guys like that, he's in it every single day. He's in there telling you, giving you information every single day. It's up to you. You take that responsibility on as a trader and investor. You are responsible. You are responsible for your own trades. Don't ever fucking be looking towards me, Kevin. Don't be looking towards anybody else out there to be making you successful. You can trade against guys out there. You can trade against me. You can trade against Derek Coatner, whatever. But those guys work hard for what they do. If it's not for you, if horse liver fat's not for you, you go somewhere else. If you guys really want to blame somebody, there are enough guys out there. They're charging like thousands every month. I shit you not. Like $1,000, $600, $500. Stay away from those fucking snakes. Stay away from people trying to sell you how to do YouTube channels. I just looked that up the other day. Me, Kevin sells all kinds. You guys ever been to like, here, you guys want to see? Yeah, you guys want to? I'll fucking throw him under a bus. Fuck him. What's his name again? Meet Kevin. I like him too because he was honest the one time. Here, we'll go to Meet Kevin's channel.
This is how.
All right. Where's it at? Read more. Shouldn't be doing this.
This is how.
Probably gonna get in trouble doing shit like this. I'm not gonna do it. But he's got like a website. You know, you go there and you can like learn how to be a YouTuber. Shit, you're not. You can go there and learn how to buy real estate. All kinds of fucking whack shit. Stay away from that shit. Meet some people that have done that stuff before and see if they'll help you along. Don't go to like Discords and be paying fucking $500 to get in there. I'm telling, please don't. Just don't do that shit. But like, if some guy like Derek, if he's not your trading style, don't go shit on him. Leave him the fuck alone. He ain't making money off you. He's not getting rich off what he's doing, helping you guys out there. He wants to help people. He's a sadomasochist. He wants to stuff a red ball in his mouth with a leather strap when Apple fucking beats earnings. But you know, don't do that stuff to those guys out there. Treat those guys good. Last night I got pissy about it, and I went after somebody I shouldn't have done. I deleted the post because you're going after the wrong guy. You want to go over? Is it because Derek doesn't have fucking 2 million followers? Do you think that it's better to go after him? Go fuck yourself. Like, go fucking find like some guy with like 2 million followers. What? Because it's an echo chamber and he's not listening to you. You're gonna go to me or to Derek Coatnoy? Get fucked. Like, seriously. So you know, those guys that are out there charging nothing, they're trying to give you a service. They cost them money to do, cost them their time to do. They're not making money. So that's my rant done with that. That's the rant on that shit for you from yesterday. But my point to you is this, right? Is that let's stick around. Let's keep watching these live streams. We'll do it for a year. We'll see how it works. I'm gonna put a on Captain's Alpha. I'm gonna put a poll out, and we'll do it by hand vote. A's and nays. Do you guys? I'll give you 3 options. We go to just sticking with the streams. Option 2 will be only streaming at key pivots, and then some videos. Or I don't know what option 3 would be. So it's just two options. You either do a mix of just key pivots and live streaming, if you prefer that, or just the live streaming. Personally, I think the live streaming is the best option for all of you. If you guys are serious about this stuff, whether you're listening at work, at home, or whether you're able to trade or not, I think the best option is that we're here doing it together every day. That's what I think it is. But I could be wrong on that. I don't know. You guys let me know what you think out there, what the best option is. Yeah, and so let's say if those guys aren't for you, go find somebody else. There's a bunch of other people. And I'm sure some of you have paid for that. I've paid for it myself. Just so you know, I've paid for every single options flow program out there. I've paid for at least 4 classes. I have classes. I actually have pre-recorded classes you can pay for. I have them on a drive here. Matter of fact, I could fucking take those classes and probably re-record them with my own voice and sell them to you and start making fucking bank. I shit you not. And I'm not going to do that. I couldn't live with myself what those fucking guys do. Not that guy. I don't know how those guys live with themselves. It's like a used car lot. I feel like the stock market and social media is like a used car lot. I feel like you're like a bunch of salesmen. And you know what the fucked up part of that too is? It's not just the people trying to sell you access to Discords and sell you access to classes and that kind of stuff. There are people out there that do it for you'll hear some guy that sounds really smart on Twitter. I've told this before. You'll hear some guy out there that's super smart on Twitter. And all he's trying to do is he's launching a newsletter or something. He's probably a 4th-year college student, or he's getting his master's. And he's really looking for an in at some kind of a brokerage. He wants to meet he's actually just trying to get picked up by somebody for a job. So you're out there thinking that he cares about where the market goes. He doesn't give a flying fuck where the market goes. He's just trying to be an analyst analyzing so that he can grab a job. Or you'll see people that are I published on Medium. That's another one of my favorites, right? Can't get paid to fucking be published. So you're publishing fucking content on Medium and looking like you're a fucking journalist. In reality, you're just doing that to get a job. But meanwhile, while you're publishing that content that's a great read, it's irrelevant to where the market goes. Because they have no fucking skin in the game for the market goes. It's not their money. They're getting paid or wanting to get paid down the road, regardless of where the market goes. So you gotta be careful of that shit when you're out there in the social media world. This includes, believe it or not, the smartest people you know out there. The brains, the rocket scientists. Wasn't it this morning that we found out that some of these ETNs fucking shut down? Yeah, those are fucking rocket scientists, right? I'll have to look that shit up. Some ETNs stopped taking business or something. Those are smart fucking people. And then of course the cute comment I read today. I'm gonna read it right now. I'm gonna read it right now for you guys. I'm not gonna name somebody. I shouldn't be calling people out and shit. I have to delete this video. I'm deleting this video today, by the way. No fucking way. I'm deleting this fucking video today. Because I don't like to disparage names. Hold on. I'm going to look this up, though. I want you guys to see this. This is something, I'm not going to name names in this one, but it's hilarious. I got something for you guys. So you guys want to know the smartest fucking people in the room are, right? These are the ones that make fun of stock jockeys like me. You got Daily calls us stock jockeys. Now, here we go. Give me just a couple seconds. It's fucking hilarious. Give me a second here. Vanguard is just out with some fee cuts on bond ETFs, most notably BND, which is now down 3 BPS, tied with AGG and SPAB. Oh, here we go. Barclays suspends all of its commodities funds. These are the rocket scientists, right? These are the fucking rocket scientists. Barclays announced today that it is suspended until further notice any further sales by Barclays Bank and its affiliates of each series of iPath ETNs listed on the table below. Effective trading of value of such ETNs. Daily redemptions of the option
Russian
holders.
Foreign Minister Lavrov saying Russia does not consider itself to be at war with NATO, saying such a development would increase the risks of nuclear war, and that cannot be allowed. A statement from the Russian Foreign Minister.
Right, it's a continuation of Barclays debt issue, right? It's not a commodity
Tech
issue.
crude futures settling 104 and spot 69, down about 0.6%.
Debt contract. Hold on, my elbow's hurting me here. Get me down to 415 right now. Get in your fucking hole. Get down to your hole at 415 now. Get down there. Like the dirty dog that you are, get down there, you dirty dog. Get down there, S&P 500. You know you want it. It's down here. Get down to 415. But, you know, you're the smartest people in the room, right? They don't give a fuck about what they're telling you. It's like some guy smoking a fucking joint, and he's on a fucking dock, and he's telling you, like, how the world works. But he's actually getting paid. You're paying him. He ain't putting his money on the line for how the world works, right? They're the same fucking guy. They're just smarter. They sound smarter than you, and they look smarter than you. And they're more highly educated. Now, that doesn't mean they know how to trade the market. So be careful out there, is my point, is that you got to be careful who you're listening to on social media. Well, so-and-so has got 2 million followers, and he's telling me the market's going down. That fucking guy has no idea if the market's going down. That fucking guy gets paid. Peter Thiel, I'm looking at you. Beal, looking at you, brother. He doesn't care if it goes down or not. He's telling you that it's going down. You know? So just be careful with that stuff. They don't care if it goes down. If I was selling you classes, if I was selling you what Peter Thiel was selling you, I wouldn't fucking care if the market was going down. I'm just going to tell you that it's going down. And you're going to pay me for that book, and you're going to pay me for that class, and you're going to pay me for that subscription, that newsletter. Get down in your hole. So he's serious, right? It's like fucking watching paint dry over here. Got a little bit of support, a little bit of volatility down here, 416. Need to cut the pants loose and get down to 415. The question from here becomes, we're gonna.
The Russian foreign minister is saying that Russia and the Ukraine governments have already achieved major results at peace talks, but Ukraine is changing its position under orders from the U.S. and Britain.
I want you to see this trend line down, okay? We'll make it fatter or something. Make this nice and fat. Attempt 1, fail. Attempt 2, fail. Attempt 3, fail. Attempt 4, fail. We've done these in the past, right? You start to see this stuff run down. There's one concern here, and that would be that we trade down, let's say we bump this right here, and we come straight down and bloodbath it into the close. I like taking my profit here because it could trade higher. It's a mixed bag down here where we go. You could leave a little bit on just in case that lasts a little bit. Oftentimes people will be like, oh, I wish I left it on down here because this is where the meat of the trade was, down in here. But there should be, there's some volatility down in here. There's some buying going on. It's weak. It's weak buying. There's some strongish buying here. But just be conscious. Like if you pull some off, there's a chance you could trade up higher and then steeply sell off into this bell down here, 410. Did Cap say he wants me to buy Peter Thiel's book? You should still read books. I read books. I read trading books. But just don't believe that their best interest is you learning how to trade or you learning where the market's actually going. They don't give a fuck. Most of them don't. You got to find traders and investors with money on the line. Find out how they started. Find out what they actually do. Don't want them lying to you. A lot of investors specifically will lie to you. I think that investors tend to lie more than traders because they create a persona. They're like, hey, I love Tesla, but they don't tell you what they're doing in the background. When I was an investor, I used to always go to traders to find out when to buy because I got the straightest scoop from a trader. They would be like, this is where you buy the dips. And they'd be like, thank you. I appreciate that. When I would go to an investor and be like, hey, when should I buy? I'm using Tesla, but it could be Apple or anything. I felt like there was too much noise. So like or not just day traders, but just traders. If you're a trader, I would go to them when I was an actual stock buyer. I would stay away from investors. And now that I'm a trader, I try to look towards other traders, right? I focus on other traders and what they're doing. I'm sure that there's some traders listening in right now to this broadcast that won't announce who they are. I'm sure there's people out there that trade for a living that are public-ish figures, and they probably listen in every once in a while to either trade against me or trade with me or whatever, because I would to them as well. If I wasn't live streaming and doing all the stupid shit, I used to listen. Matter of fact, I used to listen into what's his face. I used to listen into the fucking goat to Mr. Or Mr. Dude, sorry, I'm having fucking pains in my arm. To Mr. Yen, I used to listen to him. I used to trade. I used to put this Mr. Yen on the background, and he was a guy that I would listen to. Then for a while, I was just listening. I listened to what's his name, Charlie or something, from Benzinga. And then I tried that one guy from Thinkorswim. I don't like him at all. But you know, you like. It's always nice to have someone in the background trading with you.
Lavrov saying, or reiterating that any shipment of foreign weapons into Ukraine is a legitimate target for Russia.
So if you're a trader, try to trust traders more than trusting, because they'll tell you what the price action means. Basically, you guys seeing this channel here? You guys all good in that channel? Boom, rejection. We're going down, right? Boom. Right down there. It's a shitty channel. I think it's down there. I don't think it's up. Maybe. It's possible. But I think it's down. 415.90. Market meltdown into Friday. Just some key notes about today. We've only, of the past 4 months, January, February, March, and April, we've only had one green Friday. Or not Friday, end of month. I believe it was January. I could be wrong on the month, but we've only had one end of month. That was a green end of month. The other three, this will now include today, we've had sell-offs. This is unusual for the stock market. So for your macro view of our market, take note of this and put this in the back of your mind. That when we have months like this, when we're closing months out and quarters out, we're not putting window dressing on. If this was the window dressing, let's say yesterday, this is not window dressing. If we trade higher into May, that's not window dressing. It isn't. I'm sorry. I apologize to you if you think that it is. It is not. If we save the month of May, that's not window dressing. When you've added on 3 out of 4 bad months into a full year, there's no recovery from that except unless you get another 3 green months. Do you think that we're going to have 3 green months ahead of us? Do you think you're going to have a green May, June, and July? I don't know the answer to that. To bring the market back just to equal or even, right? Do I think that brings us back up to all-time highs by the end of July? That's a tough one. I'll tell you what. If you guys been in these markets for long enough, right? You start to get into May, June, July, August, right? These are the quiet months typically of the stock market. These are typically not the busiest months of the stock market. So be conscious of that. Can you get back to all-time highs by the end of July and August? I don't know the answer to that right now. In previous down years, when we've had a down year, when the summer months come, it is similar to these previous months. You'll see, if you go back in history, you will see stuff like this, this relentless selling that takes place through the summer months. That is starting to become a concern for me as we head into this FOMC. No matter how high we go, as we line up these months, it's starting to like tell the story, confirm the story that we've been thinking is going to happen. When you look at the market as it is right now, this isn't
Lavrov saying that Moldovans should be worried about their future as they're being dragged into NATO.
This isn't, and we'll actually reset all this as we get into the end of this month, or in the beginning of this month, we'll clean all this nastiness up. But for just the thought process here, when you start to see stuff like this, and it starts to come to the end of the month, right, which is today, I think this is the last trading day for the month. When you come into stuff like this, right, and when it adds up like this, and you think that we're going to blast off to all-time highs by fucking June 1st, it's on the table. There's always a chance, right? I'm like Choi was telling me, I am a price action trader, but I got to tell you guys, right, when you see stuff like this in bad decades or bad years, you tend to see more movement like this into the summer months, sideways and down, and these can last even longer. So just be conscious as we head into the summer. Your plans for the summer, I don't know what they are, but summertime's usually slow. So looking at this right now, I'm like, man, this sucks for bulls. It's gonna suck. You're gonna be on that trend, baby, for summer. Look at that nice trend. Look at that nice trend we got going on here. Perfect trend heading down. Perfect trend since we've been on this trend since when? October 29th. October 29th-ish. We've been on this trend. This larger trend down. Right in here. You got 1, 2, 3, 4, 5. And I would expect this trend to continue. If you're going to look for, if you think that the banks are going to come out and be like, hey, we're going to buy those market up for summertime, they're going to be partying on an island somewhere during summertime. So it's just in a larger context, where do you see the market going down to? If we were to trade up from here into summer and into fall, let's say we traded up, let's look at hold on a second, sneezing here. This is December right here. Now that we're coming into a monthly, we should review this stuff. We're at the end of the month. It's important. If we continue down, you can see 360, right? There's your 360 down here. In December. Here's your 360. Right down here. Actually, it's 340, 350. And this would be and if you have Jerome Powell saying he's going to continue to raise rates, this is also the area, this is also the area that brings us right back to 2020, if that coincidentally brings us back to 2020. Let me see if I can put it on a 5-year or something. This actually brings you down, so 360, or no, sorry, 260 brings us down. So that'd be 2 years maybe it would take us to get there. 2 years. So 360 could put us down into December. I'm mixing up my numbers here. So let's look at the year. Excuse me. Of where we could wind up. So we do a slow drive down into end of year. Your price target. This is my price target right now is 360, 340. At some point this year. I don't know if we get it, some capitulation move down to 360 now. I don't know if it takes the entire year for us to get down. I don't know if we trade higher, right, and then trade it down. I don't know if we trade down here, trade up here, and then sell it off. And I'm not really too concerned with that. And you shouldn't be either. But what you should be concerned with is that that's the ultimate price target. So when we're down here in this large support, when we're in a large trend down, you want to be buying these dips. And whenever we trade higher here, you want to be selling these dips as we head into the end of the year, or the Fed stops its regime. Okay, so just be conscious of this for where we are. Know where this trend line is down here, right? I'm not smoking the same fucking crack pipe that bears are saying, yeah, we're getting doom and gloom down here. We're gonna have a market crash. I'm not buying that. What I am buying is that we have support, right? The support down. We know that we're coming into it at 400, right? We know right down here at 400, we're coming into this next support zone down here, right? I'm not too concerned because I've seen that we bounced before here, right? And I'm going to expect that to come down here again. I don't care if it's in July. I don't fucking care if it's in December. What I do care about, though, is that I know when to buy these bottoms. And so even in here, okay, I'm looking to see where to buy these bottoms as they take place. So when you're buying this bottom, when you're full porting down in here, right, we can trade this up, right? They're going to tell you, I'll tell you, they're going to tell you, hey, we're not getting a 430. Hey, we're not getting a 450. We're not getting a 460 or 480. We'll trade this level to level. So there's no concern here for you as an investor, as a trader. The only concern for you is knowing that we're coming into this same area. The only concern for you here is that you're going to buy one of these bottoms down here. You choose it, but you buy one of these bottoms down here. That we're going to trade it up to each level. We'll trade it to 440. We'll trade it to 450. If it sticks, it sticks. If it doesn't, it doesn't. We'll go level to level as we go higher, as far as we can take it. Okay. So we're gonna buy these levels or these lower levels, excuse me, and we'll take them to each resistance point as we trade higher. It doesn't matter if we hit all-time highs. That's still not bullish to some extent. So we'll trade each one up as
S&P slipping to fresh lows down 120 points,
baby.
2.8%.
Oh yeah, baby. Let's look at that real quick.
Nasdaq also lows down 3.3%.
Get down there. Get down to 415. Squeeze it down there. Push it. Push it down on daddy. We gotta check some spreads. Hold on. Hold on 1 second here. We'll get back to this in just a minute. Oh, I'm having a seizure here. Oh yeah, come on down. Touch the pee-pee. Touch it.
The Russian Foreign Minister Lavrov saying most of Russia's key partners have agreed to use Moscow's proposed payment method for natural gas.
Touch the pee-pee. Okay, so I am out of put spreads, and I'm going to try to re-enter put spreads. I want you to see something here, okay? If you're a trader or an investor, you're going to take this high here, and I want you to see this zone, okay? You can see that we're able to get high, right? We traded above, and below now, right? If it snaps back higher, you could have this one place to re-enter, or even the second place to re-enter, okay? Up in here, take a short into Monday. So this would be your first place, your A entry, and this is your B entry up here. Now, if you go A, B, and let's just say we opened higher on Monday, you would then add C up here short. So let's say you put 10% in here.
Lavrov saying Moscow will not allow any security guarantees offered to Ukraine by Western nations to apply to Crimea or the breakaway eastern regions.
So you got A here, B here, and C here. So if you've got, hold on here. Hold on 1 second. You may be like, hey, Cap, what if we keep going up? We're going to talk about that too. Let me do this here. So you now have this down channel, right? We're at the bottom end of this downward channel. Breaking through it here. But if you're going to start to take another put position here, you're going to be looking to make entry or not, excuse me, wrong place. Your first one is here in A, right? Your second one here is on B. And your last one here is going to be on C for a put position. Now, if you're like, hey Cap, what if we trade up here? Okay, let's just say we bounce and we start trading higher up here. You're gonna be looking for that being your this is where your stops are gonna be, right? You buy this on Monday or add more. If you're like, hey Cap, I only entered with 10% here, but we continue to go down. You're gonna wait for confirmation below 210 or 415 to go B here to continue to add to take it down. And your price target right now is not 405, it's just 410. So do you see what I'm saying? You wait for up above. It's so sloppy, it looks like shit. Your first one's right here. A. This is B. And this is C. This is your stop loss. Okay? For a move like this, that'd be the worst move. If you buy this right here, and it rejects, and it starts to really come down, right? You can then add B once you get confirmation, right? And even plow into C to slam down on this 210. Does that make sense? And only in this trade here, only if it breaks through your stop loss, do you cut loose, because now you have confirmation that we're bullish and you're going to take the next trade up here. Does that make sense? Hope it does. Now testing the lows, 415.17 on the SPY, 415.13, 415.15 for a brief moment, looking to touch lower lows of the market. Support here at 415 is weak. Just pay attention to this. There are no real buyers here. They have moved down now below to 413 and, believe it or not, 410. Shocker, 412. Look at that, 412. The buyers are now way lower than even 415. If you look closely, buyers are retreating here down to 413 and even 410. Shocker. Look on the right here. 100,000 buyers down here at 410. So we could even break through down to 410. If we get there, if we get down to 410 today at some point, right? Every fucking dollar you spent on call spread, well, they printed, but if you diamond handed those motherfuckers, they're back to zero again. They did print back then, but let's say you longed the market. 413 is where we were just a few days ago, right here. 413. Bang. The entire move. We've talked about this, right? The entire move taken away. Coast to coast. Coast to coast. Gone. Gone, baby. Woohoo. Coast to coast. So you're going to be looking for down here, you're going to be looking down here for a test here of the previous lows. We know that it's 413 flat. If we get a break below 413 flat, it's very bearish heading into Monday. If you break this weekly low here, you're setting yourself up for a fucking horrible week next week at 413. So we're going to pay attention real closely here to where we are, right? There's that 413 mark. Lo and behold, we've got the last buyers sitting down below 413. They're down here at 412.40. Get a nice little pin strike down below at 413. Squeeze through a little bit. Squeeze through. Get that nice lower low in the market, right? You get a lower low heading into the end of the week, end of the month as well. Down below fourth. Matter of fact, I'm almost going to guarantee at this point that we're going to pin or tag below 413. I'm going to give you a strike price down below here. Hold on here. I'm going to give you my target price down here. $412.46. $412.46. That's my price target. Maybe even 412 flat. Hold on. Let me change it. 412.71. That's my Price is Right number. 412.71. And I'm out of put spreads right now. I do not want to be short or long on puts for this last little bit. Let's see if we can get this. Let's see if we can get this in here. We'll be adding some calls in here as well. Crazy Friday. Absolutely crazy Friday. You can see him down here, right? We're at 415 now, 12, right? We just broke through 415 and we're looking for, believe it or not, a touch below the previous low going back on April 26th. We want to close the month out on the red, but not only that, close the month out or the week out on a negative tone heading into FOMC next week. They want you to know that they're being serious about inflation, even though they're still applying QT to the market, even though we're only at 0.25 basis points. It's because they're pricing it in, baby. Pricing it in before we get there. Oh, no, it's too risky down here. So what I did yesterday was when I traded let me show you what I traded yesterday. So I took this trade yesterday. Traded that up to right here. And then in here, I didn't enter the trade until right here. And I actually traded that right there. I was too afraid of this rolling over. Now, we did end up going up yesterday and sucking it, like kissing it or sucking it or whatever, this last little part. But even so, it's too risky to go full tilt. So this move right here was plenty of the move. This move easily rolls over. It ended up rolling over higher. But this move right here, you could leave a little bit on for this move down to 413, or you could buy a couple more. Just throw a little bit in there for this little move up here. But don't be full fucking tilt into this end move here. Sometimes you get these moves, sometimes you don't. This is where call sellers come out and put buyers come out. Matter of fact, we posted this yesterday, right? To be careful up here, to put insurance on up here because put buyers were coming in and call sellers were coming into the market. Getting a little bounce down below here. This is where put sellers come out and call buyers come in. If you're looking for a rejection point, you've got two places. Hold on. You're going to look for 417.35 and then 421.78. Fuck my arm. Sorry about that. I got to add some fucking calls. So we'll see if this holds. 414.83. The Bears want to get a close lower. We want to get a close for next week below. Let's see if we got this right. Want to get a close below 413 flat if possible today. You can see down here these dip buyers down here expecting a trade down to 413-ish. 413, 412.94, but I think they're lower. I think they're moving up a little bit here, but I think by end of day, I could be wrong on this, but I think by end of day you see a tag below 413 and lines up next week. Bearish sentiment. If to give you guys one other thing into next week, if you've followed along with the MBI or the market breadth indicator, we'll look at that right now. This is a better price than the cash market for spreads down here, right? You see this close. Had you bought this spreads down here on 426, right at the bell, you still didn't get the 413 at 1700, right? So right here, if you bought some call spreads, they printed nice and fat. If you bought zero dates here, they printed nice and fat. And we're now down to another lower bound here. There could be some room where we move around. It goes down to 413, 412 or something. But just note that in actual cash market, I'm not counting after hours, in actual cash market, that we just broke the plane even on the 27th. So if you're going to add some like zero dates, or let's say you add some like, I don't fucking know, week out, 2 week out, if you add like 3 week out, 2 week out, outside the money, 30-cent calls, 10-cent calls, any of that stuff, this is one of the spots you could throw some money away. Don't full port that shit. But down in here, if you wanted to add some, and then if you wanted to add some coming into next week on Monday or whatever, this is one of those levels. So this is a level to buy. And then the next level to buy is down here. Remember, next week, the anticipation is that this is what we're trading. Sorry, excuse me. That's the wrong fucking place. Hold on here. Next week, the idea is that we trade this here. We trade 420 and we trade 410 heading into next week. With that being said, if you're a bull, this is a stop for you. I want you to know that this is your first one. That one back there, I said you could do it, but I'm telling you right now, this one right here is one, right? Another one for you coming into next week is going to be below 405, at 405 and below 405. And I'm going to put this on a bigger screen here. Hold on. So we're there right now. So this is what I'm going to show you, okay? Expect next week. Follow my words today. Listen to me closely, okay? The reason I do this, okay? Right in here. Expect next week, from right where we are at this moment, right? Worst case scenario. Something just like that. Okay? This is where the big boys play down in here. This is where you don't panic if you're a bull. And this is where you decide, are you going to be a big boy? Are you going to be, I'm looking for bottom, this is me? Or are you going to be safe? I'm looking for this over here, cap. But this right here is where a bull is actually a bull. This is where a bull knows how to time bottoms. This is where bulls make all their money. Doesn't matter if the market's going up or going down. I want you to learn this because if we have a market that goes down for 1 to 3 years, if we move into a recession, if we have a crash at any point in this market, I want you to know that these are the places that you buy this market, okay? When everyone is bearish. And you're going to hear it get worse. You're going to hear people bringing up market crashes and all that kind of stuff. I want you to know that somewhere down in this zone down here, right? This is where you're going to be buying. Right down in here, okay? You want to be waiting until this capitulation move comes in. There should be a capitulation move down in here at some point. We may not get down all the way below 400, 405. We might touch like a PP touch right down here, capitulation quick. You might get 390 real quick down there. But whatever you see in this upcoming week, I want you to know that there's a high probability. We'll call it like 90% probability, right? That somewhere in this week, as we head into Wednesday, you're going to see a turn. Okay? High probability. I want to show you another time where that's happened, and that or March 2020 was like that. And here's my last point on this. If you're like, shit, Cap, I'm super scared. I'm really scared, Cap. And you think we're heading down to 380. You're like, oh no, Cap, we're going down to 380, Cap. We're gonna stay there, Cap. Right? This is only a month right here, right? This is May 30th. Right here, May 30th. Okay. Oh, Cap. Oh, I don't know. Cap, pee my pants. I got my diapers on. It's full. I don't know what to do, Cap. So there's May 30th. So this is accounting for tail risk. This is part of what I was trying to talk about earlier. Was the tail risk in that trade. Let's say we break through here and you go, oh shit, Cap was wrong. He sucks donkey dick balls. He licks assholes on cows or something shit stupid like that. We're going down and I'm crying my fucking panties off, right? You're going to see us swing up higher even if we go that low, okay? You're not seeing 360 right now. You're going to see the fucking Fed come out and butt fuck every bear for the next 2 years if we get down here, okay? Like literally butt fuck. You will see us, if we get down here, you're going to see the fucking Fed put come into play, I promise you. And you're going to see a congressional and Senate hearing, and you're going to see the fucking Fed put come in. That's what you're going to see if right now if we come down here, that's what you're going to see. So you're still going to get a slingshot up. And the last time we saw something like this where you buy one of these and we were in danger was COVID. And you know what? The fucking bears said we weren't coming up then either. So this is why when I say you put that time on your trades, that you wait for these moments, right? And you give enough time on them that they'll print in case you fucked up. You know how they say that people don't know where the markets go? People say that, right? Like, no one knows where the market's going. You might not know where the market's going, but you have a pretty good fucking idea that even if it sells down deep, that motherfucker's coming back. It's always come back. Even March 2020. So eat a bag of dicks out there, people saying that you don't know the market's coming. You have to set your trades like this so that you account for moves like this. You're thinking down the road, what are all my risks in this market? You're thinking down the road, I want this thing to print no matter what. No matter what. I don't give a fuck about a bear telling me what's happening out there. I don't give a flying fuck. Not two fucking flying fucks. But you do measure out and think about what's happening in this FOMC. Think about the risk that you have down here at 400. And let's just say, let's say you're like, we're buying this. You know what? Fuck this. I'm just buying 400. Right? And there's a bunch of places up here that, you would have gotten fucked. But down in here, I'll take that risk. The risk of buying this dip this week. And even if we sell off further, the slingshot that'll come up here, it's just going to be a fucking printing machine. It's probably more like this. And it's just going to fucking print. And you'll be like, well, Cap, why couldn't I just time it down here? Because you all suck at timing bottoms. That's why. You're good at, even the good ones are only good for like 60% of the time, 70% of the time. You do that shit with 10%, and in like a year, you'll be broke. So down in here, heading into FOMC, this is when you full port. If you're a millionaire out there listening to me right now, this shit is gold. Worth every fucking penny. Rich people know what I'm talking about. If you're rich and you're a bull and you like buying bottoms and hate selling, there it is, baby. Right fucking there. There's that fucking $1 million trade right there, baby. One trade. I can't wait till we're at the $1 million. Well, at 500,000. And we're going to be right here, and I'm going to tell you right here. The next time, by the time we get to 500 grand, I'm going to be like, okay, so we're buying call spreads right here with $500,000. And I bet half of you say, fuck you, Cap, I ain't doing that. We might have a market crash. I ain't willing to get rid of all that money. So this will grow over time. This positioning, the amount of money we're going to trade with is going to grow over time. the patience that you have, the trading skills that you have, the identifying market skills that you have will play into taking these trades, so that once we get to that $1 million mark together as a group, you're not gonna keep trading like that. But if you have $1 million, you can then come in and be like, hey, I got 100 grand, I got 500 grand, and I won't even blink taking this trade right now. Okay? Hold on. And I'm not even bearish here. I don't even see us getting here. Like, I see us getting here max. But even if we did, you know it that it's going to print. You take this shit to the bank that it's printing. Take it to the fucking bank. $1 million trade right here. $20 million trade right here. Could fucking full port fucking $20 million and it's guaranteed. I want guaranteed trades. I want them guaranteed every single time that they're printing when I full port. Every single time. You want to be fucking Sawyer Merritt? This is how you do it. Just like this. Now trade below 414.35. See if we can kiss down below here, okay? You want to get this kiss down here. Get below 413.20. You want to see us get down. Now you can start to see that the buyers are being pushed down even further on the market, down to 412. I think my price target was 412.70. That's my personal, like, hey, I think you may place bets out there if you can get it within a few pennies. I think it's 412.70 right here, right where I'm at. But you are seeing these buyers being pushed back. You are seeing at the end of the day, right? You got call sellers who are like, Jesus Christ, I want to get 2 pennies out of my calls right now, so I'm going to cut them loose, right? You see put buyers full porting. You probably see put buyers that are late to the party that are like, I didn't take any of this trade, and now I just want these last 50 points. These are where the bag holders are created down in here between 413.50 and 410, which is fine. But and we can trade down there. I think we can have the potential to trade down here to the end of the day today, down here to 410 easily, especially to force you into accepting that that we're down here. We're trading 410 to 420 this week. This upcoming week, you better fucking expect it this week. I think we can. Do I think we got there? I'm gonna bet that we're getting there. And fuck no. The trade was higher. It's not here. The trade was all day long down. I missed the first part of that trade, and I wanted to see a commitment from the bears that we'd take it below 420. And I'm happy with my gains down here, definitely. But this area down here, this area right down here, right? They want to get this. They want to get that below 413 flat. They want to squeeze it down in there. They want to get They want to get below 413 so that they can say, I got, not only did I have a bad month, but I had that bad last day. They want to say, that last week was bearish. That close was bearish. They want that. You can see it right here, 413. They want to get down there. You don't come all the way down here to not touch it, not break through slightly. So, matter of fact, I'm going to write a tag down there for myself. I'm going to do it. What did I say it was? 412.72, I think. 412.72, I think it was. Oh, whoa. All right. I'm going to throw that in the trash. I'm going to put one down here. We're going to see if we can tag it. See if we can touch it. See if the market makers will touch it for us. Let's get down there and let's get down the nitty gritty. I think I said 412.72. 74. Let's call it what it is. 412.74. Let's see if we can touch it. Into the closing bell. It is now 3:16. We've got 14 minutes left at the end of the day. We've had all the bullshit bad news come out all day long on a Friday. Tons of diarrhea from Uncle Bucky over here that's in the background reading you the news all day long, right? Just all kinds of dog shit. All day long, bad news from around the world. Just dumping their bags, dumping their bad news. We've had a mixed bag month on earnings reports. We've got some big reports next week, but not huge. We've got the Shopify's out there. We got a lot of mid caps out there next week. So their reports really don't have anything to do. Earlier this week, we were talking, You guys remember our conversation where I said, hey, I'm repeating this for a week or two, right? Your big reports are coming, or your big reports are holding up this entire market. Pretend you've got 5 or 10 guys that are holding up a house, and I call them all out for inspection, each one of them one by one. They're all coming out one by one, and you get 8 of them that fucking failed and 2 of them that did okay. And I send all 8 or 10 home. Well, who the fuck is holding that house up? With that house no longer being held up, there's a fair chance that we trade down into next week. Even with some good reports next week, we might have a little bit of a bump, Colbert bump or something like that on some good reports next week. But do they hold the market up? No, they don't hold the market up. Do we have some volatility coming into the market next week? 2 events. We've got FOMC, which is bullshit. We're going to buy the fuck out of the FOMC. And the Russian debt default. That one there, I've been researching it. I still need to do more research. Probably my plan this weekend is I'm not getting full straight answers once it's certified how bad it can be. And then you get the politicians fucking with each other. So we'll see if that goes away or if that becomes a problem in the beginning or end of next week. There are some large put options on the stock market for Friday, and that's my one fear is that it's a double whammy. My one fear on next week, if I had one last fear, it's not FOMC, it's not Russia debt, it's that they hit you with the fake out that you get like the fake rip higher, and people are like, I didn't buy call spreads, I just bought calls. Then all of a sudden Russia debt becomes a problem on Friday. We just send it back down. You get torched, and only call spread holders at diamond handed are therefore to go back up. So that's my one concern into next week is Fridays. Just be careful of that. If you're buying just plain old outside the money calls, plain old OTM calls, something like that could happen end of week. But other than that, my expectations for earnings, they're okay. My expectations are down to 4050, 4,000 into next week. Oh, and the last thing is that I would expect pinning into next week. I'm going to expect I don't think you're going to see the wild swings early next week. I don't think you're going to see wildness. I think you're going to see a pin and to the right and down. You guys want my God's honest, like this is what I think's happening? I'll show you exactly what I think is going to happen. I think at best case scenario, this is best case scenario, okay? Just a fucking grind. That's Monday, that's Tuesday, that's Wednesday. Just a grind down. Tight trading range. As a matter of fact, if you're a bull or a bear, this is all better. If you're a bear, this next trade is probably traded well with spreads and not with 0 dates or weeklies. More than likely. This is going to be to trap bears in as we get to FOMC. Put spread's beautiful here. Gorgeous. I would be really wary. The market makers are going to fucking take all of your money down here. So I'd be put spread though is nice into Wednesday. Even a Monday put spread would be nice for the close of Monday. Or put spread for Wednesday and you close it on Tuesday would be nice. But they're gonna trap bears down here. They're gonna trap bulls trying to buy dips down here. It's two-sided on this. Try buying this dip as a bull too early, you're gonna get trapped. They're gonna take all your money. They still have money down here. I'm telling you. And then this up here. So stick with spreads. You could even get a condor in here. Would be nice. A nice trade into this bell. Be a great fucking condor into Wednesday. Great condor. Open a condor on Monday at the open might be nice too if you're afraid of where we wind up for that condor. Within the first 15 minutes of the open on Monday, if you're to open a condor, might be nice as well. I'm not going to expect us to trade up here into Wednesday until maybe 9 or 10 a.m. You could shut them down on Monday. I'm not going to expect us to trade this out. Hold on here. I'm not going to expect us to trade. I'm going to expect us to somewhat, to an extent, to respect this channel. This channel down, we know that we can go a little bit deeper over here. This one moment, say at 413, snap a line for yourself. Maybe we get down there on the 4th. But I don't expect us. I don't think there's any news that's going to send us between now and Wednesday. We might have some moments where we attempt to break out, but maybe we buy this early. I don't know if too many people know to buy it. But somewhere in here, we're going to buy this bad boy, and we're going to buy a dip down in here. We're back to buying dips again. Here we are, just like this right here. Buy the dip, buy the dip, buy the dip. We're now starting it again. Start buying these dips once again. Tired. I like to take a whiskey in the afternoon at 2 o'clock. Or 3 o'clock. I'm ready to take a nap. Yeah, I think your only safe bet on the short side from here on out is probably a spread. I think they're going to grind puts and they're going to grind calls. I think there's a high probability of it. I'm not taking a conviction standpoint in that, but usually that's what happens. Usually it's a grind. It'll be boring. Yeah. What time is it now? It's 3:23. I want to give a shout out to Anthem for supporting the channel. Kevin Pollock, James Andreas, Tony T subscribed. That's all the support I need, brother. Subscribing, liking these videos helps me out a ton. Matt Edmonster, and tell your friends, Tony, at Matt Edmonster, thank you for supporting the channel. It's people like you, Matt, people like Dan Brislin, people like Soul of Success that keep this channel going. James Andreas keeps this channel going. ML keeps this channel going. Bavak, this is 2 days ago, so sorry, I went right past it. So for today, Anthem, thank you very much. You keep this channel going. Kevin, you keep this channel going. James, you keep this channel going. Matt E, you keep this channel going. Dan Brislin, Soul of a Success, you keep this channel going. The people out there that help support this channel, keep it running day in, day out. I want to give you a extra special thanks to the people that help moderate both the Discord and the YouTube channel. You guys are the ones that make this stuff keep happening every day. Unsung heroes of this channel, unsung heroes of this content, making sure that it's available to you every single day, or I try to do it every single day. I can't actually be here 50, 60 hours a week, but I do try. But I want you guys to know out there, you women out there, men out there, them, whatever you call yourselves out there, thank you. I appreciate it. I really do. You guys mean more to me than the world. I appreciate the support. I appreciate you would say, hey, we love you and stuff like that. That makes me all the world. I appreciate when you argue with me. I appreciate you when you throw me a differing opinion. I appreciate when you guys tell me to do things. Hey, Cap, look this up. I appreciate when you're telling me that kind of stuff. Oh, yeah, that's looking squeezy. I would love to see a squeeze here. Love to see a squeeze. I'm all bullish now. I'm like, oh, yeah, just get super bullish, baby. I just want to see a face ripper. Face ripper open on Monday. I want to see that bear trap on Monday. That's what I think this is. I think this is a bear trap. I'm not going to talk too much about that. I think unless you scale back, you close your puts and scale back into some put spreads. I think they're gonna trap bears down here. This is what usually happens on FOMC. Most FOMCs, I'm gonna tell you exactly. It's like not all, but most FOMCs. I'm gonna tell you exactly what happens here. So mostly what happens. I'll tell you what happens. Most FOMCs, right here. Okay. They're gonna lock you into Wednesday. Hold on. So most FOMCs, they're gonna lock. So 420 is our trading range, right? Not all of them, but most of them, right? And what they do in here is, if you're a bear and you're like, "Fuck that, I'm short to the end, Cap." These guys, when they lock in, or I bought puts right here, Cap. Like, these are the people they lock in. If you're bearish here, I would say, add for one more. I think there's one more short in here into Wednesday. Short position here Wednesday, but you don't want to get locked into it with just puts. You want to get like a put spread somewhere up here at 420 and hold them into Wednesday or Tuesday today, and then maybe Monday at the open. Sorry. Because this is where you get trapped. Right in here. Or we get down in here and you're like bearish and you hold your puts in here thinking we're going deeper. We might trade deeper. I want to buy at 405, so if you're asking me, this is my buy place. My happy place is down in here, but I think this is where you get trapped. It's not enough juice. There's not enough space in the juice can. The 2-gallon jug of Kool-Aid only has like a cup full of Kool-Aid left in it down here. So I don't want to buy a full jug of Kool-Aid and try to fill it with another cup of Kool-Aid at all. Want nothing to do with it. But I do want to buy this dip, and so I'm looking for that. This is when the Kool-Aid bottle is empty, though. Right down in here, baby. This is like a jug of milk down in here. So like if you had like a jug of milk, like just a giant jug of milk, right? Like, you know, like milk's got like the 2 little dimples and stuff. And then, whoopsie. I guess I can't really put a milk carton here, can I? I can't really do a milk carton here, can I? So if you have like the milk jug, right? If you had a milk jug, and the milk jug like comes, wait a minute, you got the dimples in the bottom of the milk jug. And the milk jug comes up. That's a horrible milk jug, by the way. It's my hand, man. But if this is the milk jug, right? This thing's empty. That's a handle, believe it or not. But this milk jug that was down up here from yesterday, this one is fucking full, bro. This milk jug right here has got like, it's like full. So this is my new interest down here. So hopefully you get me 4 or 5. Bears do a good job. Commit and lock yourselves in. Read all your horrible news that's coming out this week. Drink the Kool-Aid. I need you to drink the Kool-Aid this week so that I can buy this dip on you. Please read the Kool-Aid. Do me a favor if you're a bear. I want you to spend your entire weekend on Twitter. And I want you to believe that we're trading below 4,000 this week. I need you. It's required that you sell or buy puts from rich people. I need you to buy those puts so they buy calls and we go up. Okay? Hear me out there if you're a bear. That's what I need you to do. You must absorb the bank's puts down here. Right? The devil commands you. The devil commands you as a bear to buy the puts that the banks own down here. They've held them now for some time. They haven't let them go, and they're now paying and printing. All these banks' puts down here, they need you to carry the torch. So please do that favor as we get into what is more than likely our trading range for next week, 420, right up here. They need you in this area. They're going to feed you all weekend long with news. They're going to tell you that we're going down this weekend. That's what they're going to tell you. Right in here, I need you to buy puts. And then we're going to get pinned in here. And then we're going to go fucking rocket shipping. Okay. So we're now at 413.83, looking to get lower lows in the market. We've got 331. I've got a price target down below that I'm interested in. It's another $1. You could enter puts for just a minute down in here. We have a half an hour down here, but you might want to wait. You could actually get, there might be one more bear trade right there, something like that. Bloodbath. And there's also probably some kind of a trade just down to here. There might even be a trade where, well, the only problem with this trade is sometimes the interest leaks on this stuff. No one wants to buy your shit after the bell. But there could be even a nastier trade that's like this. Into the bell. Somewhere down here, right? Call it right here. And then it bleeds off down even more. Gets us down to 410 by like 4:15, maybe even 7 o'clock. So we start the week next week at 410 to 420. So that might be a chance to even buy some calls, some 0 dates down in here, and then we open nice and fresh on Monday. So we'll wait and see if there's any kind of small day trades coming up in here. A couple places you can check in here. Trading down to 413.82. Still have not broken the weekly low. Set back at $4 or $4 at 413. We'll see if the Bears can put it together into the bell. Let me know in the chat what you think is coming up next week. Do you think? So let me ask you: do you think this is the bottom? Do you think that we just trade higher from here into next week? Do you think that maybe too many people know that we rip higher on these? Matter of fact, I'll bring that up for you right now. We have got a half an hour left. It's 3:32, 20 minutes left. If you are tuning in for the first time, we're going to look at something right now that some of you have seen and some of you probably have not. And we're going to go through this right now. So we have a half an hour. This is where time is a ticking. Time is a ticking. So hold on here. Time is a ticking. Give me just a second here. Give me 1 second. We're going to look at give me just a second. We're going to look through this. We're going to talk about next week, the expectations. See if I can find it. April 26th. I'm gonna have to I'm gonna have to post it on I don't know if I can find it right now. I don't know when this came out. What I'll do is I'll do it myself. I'll show you over the weekend. What I'll do is when I get off here today, what I'm going to do is I'll post something on Twitter on the private handle. I'll post every FOMC meeting, what took place on the minutes and the meetings, and we'll take a look at what actually happens on those meetings, where we go on those meetings, versus what happens on the minutes. And I'll make my own chart for it, and we'll posit that we're going up on Wednesday, or a fair chance of us going up. It could be there's always that one-off chance, but for where we are on the market down here, 4,000, it's a pretty good goddamn chance. But let me know in the chat. Do you think that this is bottom? Are you like, hey, Cap, you know what? I agree with you that we're going to go up on FOMC, but do you think that we're going to trade sideways into FOMC? Do you think, what is the range on sideways in FOMC? You can say, hey, this is bottom, Cap. We'll probably trade from 413 to 420. You could be like, hey, Cap, sideways range is 420 to 410 with a outer bound range of 405. You could say, no, Cap, this is just the next step down after FOMC. We're not actually going to squeeze higher once FOMC is out of the way. You could say, we're going to trade next level down to 380, Cap, then we're going to 360, Cap. If you say something like that, I want to know where you think the Fed put is. And then I want you to explain yourself later on on if we hit 360 and get a Fed put, are you expecting the market to rebound and go to all-time highs once again? Because that Fed put would trigger that. Are you also saying that we're going to 360 and we're not going to get QT? There's a bunch of implications from because every time I always ask, people are like, well, we're going 360. I'm like, yeah, I agree. But when? And they're like, right now. And I'm like, so then you're saying that they're not going to do QT. No. They're going to do QT and take us to 360. I'm like, no, they're not. They're going to have a fucking Senate hearing. They're going to fire everybody in the Senate, and they're going to fire the president. They're going to fire everybody. So that's why they'll have Senate hearings. That's why they'll turn the money printer on. You'll get 360. You'll probably get 260, but it'll be over time. I don't think you get it right now. Maybe. There's a tail risk of it happening, so I can't say never. But I'm not putting my eggs in that basket. Or let me know what you think is going to happen this week. Because I know that I know that it's a challenge when we all have what we think is going to happen. And it doesn't go our way, myself included. But my view has been down here 400 heading into this FOMC. So I'm interested to know if it does bounce, or if we get the bounce even today, I guess. This could be the bounce. I mean, there is a chance. There's a small chance, but there's a chance that this is the last of the decline. What you could see end up happening is over the weekend they buy this, believe it or not, and we just start going up from here. The puts that, because you've got 20%. And what you want you to be aware of this, you've got like 20% of puts expiring today. I think it's 20 or 30. And then on Monday, you've got like 20% of the puts, all the puts in the market expiring. Then on Monday, all the puts are short dated, 1, 2, 3 days. And you just have expiring puts like en masse. That's how you get a Vanna rally. The moment those things expire, right? And my guess is they're going to buy futures right now. Well, I'll have to take a look and see. I'll have to take a look and see what puts are put on the market today, unless they pin it. It's either going to be sideways or up. It ain't going down. In my view, or from a mathematical standpoint, there's only $5 million in puts today. They're all dated for the 29th. I mean, you can look on the Discord right now. There are no added puts. None. Zero. They all expire today at the bell. So my call for Monday is that we trade either sideways or up. That we trade sideways or up, unless we see some put action after the bell that we don't see here. If we see, like, I don't know, some huge hedging, 4 o'clock to 4:15 today, you've got massive puts rolling off the market today, and then you have massive puts rolling off the market Monday, which will be a double whammy, and then you have a massive puts on Wednesday. So 3 huge days of puts rolling off. And you know how this goes, right? By the time you get to Friday and you get that last 20-30% of puts rolling off, the fucking market's gone up fucking 5%. And you're like, hey, we still getting Vanna rally. It's like, no, it's starting today. On this Friday it starts. You get your Vanna fuel will be today, Monday, and Wednesday. You probably get a dip on Thursday, and then maybe a little bit more fuel unless we go up too high on Friday. And we'll talk about, well, I'll post on, I can't find the post right now, but there's a post where this guy talks about FOMC meetings being by the news, and the cut down version is that FOMC buy the news and FOMC minutes sell the news. So if we were coming into the minutes today, we'd be selling the market. So we'll check and see what I want to know what you guys think.
That's 24 hours a day at.
Yeah, so the news is working. But I'm interested to know if you think we're going up on Monday into Monday. How high do we go up on Monday? If you think that we're going to have real money selling over the weekend, no matter what the options market says. I'm interested in that. I guess it could be an argument made on the opposite side that could be a tail risk that we have real money selling over the weekend to print the 405 puts. You get real money selling over the weekend. We don't go up because of the puts that are expiring today. I guess that's possible. I guess that's not probable, but it's possible. But the real trick is the real pony trick is where we are on Friday at the close. Is going to be starting to position long. So this is where you really start positioning. We're at 413 to 82 today, tomorrow, and Wednesday, and to some extent Friday of next week. Expect a swing higher, a big one. I don't know how high it's gonna be. I'm gonna trade it between. If you wanted my put spread, hopefully I can get 405s and get 405. If we're down at 405, I'd like to get 430s. If we stick around here at 413, I'd like to get 440s, 450s, something like that. It depends on where we are on the charts when it comes into Wednesday. So just think about this in your sense of where we are. Don't come back here. Last warning. This is the last one I want to get for you. Don't come back here next week on a Thursday and say, "Hey, Cap, I just bought calls. Are we still going up?" That's the one that I'm always like. It's always that shit where I'm like, "Hey, Cap, I bought calls. Are we still going up here? Are we still getting a Vanna rally here? Are we still getting some charm?" My answer to you now and then is going to be no. You missed the boat. You have to put risk on in this market. You have to be able to manage that stress, and you have to be able to know that you buy bottoms and not tops. This is where the big boys step up, and this is where you buy bottoms. Double bottom, by the way, very nice. I like the double bottom. It's like double bottom, baby. Nice double bottom today. Market breadth indicator into, just a heads up here, okay? Market breadth indicator, right, is down to 14.4 or 204 and 18.6%. Typically anywhere down here like 14%, 16%, 18%, even as low as 21%. You can get some really, really nice longs here. Really nice longs. Now, if we were selling off in the close under normal circumstances, and we were up here, watch my cursor right here. If we were like right here and we're selling off in the close, and you were like, "Hey, Captain, are you buying this close?" I would say to you, what? No. But when we're down here like this and here, right, and you start asking me right now, are you buying Friday? Are you buying Monday? Are you buying Wednesday? Are you buying Thursday? We've never traded below here. Does that make sense to you? Ever. Never, 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 ever. Not once. Not in 1930. We never went negative. Well, I shouldn't say not once. In 1987, we went negative where you couldn't catch a bid. But in the middle of that day trade, the pit traders created a market, quote unquote. I shouldn't say we've gone below this. We have. Technically, we have. But they have created markets on the fly amongst people when we have gone below this. And then the market slowly came back up. So yeah, can we go to zero? We can. Do I think we're going to zero fucking tomorrow this week because of FOMC? Get fucking bent. If we were selling off in the close today and we were right here, if we were right here selling into the close today and you said, "Hey, Cap, should I buy this close?" I'd say to you, you have a low probability that those calls are going to print. If you were going to buy the close today, Monday and Wednesday, and we're down here, I'm going to tell you, you have a very high probability in the next few days that shit is going to print heavy and hard. You'll be very wealthy. Now trading 414.10. 414.10. So yeah, I don't want to hear stories about how the market's going to fucking 380. No matter what, you buy this all day long. These next 3 to 4 trading sessions, whenever we're down here, anywhere down here, we're down at 413, 405, 390, don't matter where it is. You buy every single one of these dips. Always. And I would have told you to do this in March 2022, believe it or not. I bought dips down in March 2020. Didn't even blink. Didn't even faze me. This is it, though. This is a nice place. I like this place. The bear talk. We've got 3:46 in the afternoon. 14 minutes left of the day. Hope you all had a great trading week. Hope you guys didn't get blown out. Hope you guys made money this week. This is a pretty good week for making money. If you caught the wrong side of trades this week, you're hopefully able to switch it around, right? Matter of fact, here's a pretty good example even for myself, right? So let's start here. So I took this long yesterday. Let's look up my own trading for the past couple days, right? Took this long, had some puts. I was going to monetize these yesterday, and I forgot to. So I held them into today, right? I ended up monetizing these at the open today, some puts, right? And then I bought calls
less
here.
than 15 minutes to the closing bell in New York, and equities remain just off of lows. The S&P down 3.3%, NASDAQ down 3.8%.
I bought calls down here one more time, right? And I think about there, and here I bought calls. And the moment that we broke through here, we switched over, and I switched over to puts. Down here, bought puts, made bank today on some puts, right? So a great trade, another great, or a bad trade, and another great trade. That's 3 out of 4 trades that you should have that are excellent. And this one, I'll tell you what, this one right here printed like 6,000%. This trade right here was stupid. Not this bleeding off bullshit all day long. This is for the birds doing this shit with the bears. This was the trade for the week right here. So anyways, we're coming into the close. We are trading lower right now. My price target down below in the day is 412.74. We look like we're getting it into this bell right now, right? We're at 413.17. We got 12 minutes left. The bears are probably on Twitter right now, probably on Stock Twitch, probably got, I don't know, Investors Business Daily out there just ripping off other people's content, repackages and packaging it. Peter Thiel's out there telling you, buy gold, that the market's going to crash while he's sucking down martinis over in Puerto Rico, not paying taxes, right? It's so hilarious how that happens. And he's telling you it's doom and gloom. The market's going to sell off on Sunday. We're totally fucking screwed down here, right? When in reality, you're more than likely, reality down here, you should probably be buying some calls down here today, Monday, and Wednesday for a trade higher. So remember that as we head into this bell. Now, there are some complications into the 4 o'clock hour. Under normal circumstances, I would say to you, all these puts coming off the market should send us higher on Monday. We could probably get 420 on Monday, let's say, and then re-short down to Monday, Tuesday with some put spreads. They could pin it on Monday, though, due to FOMC. CNBC will, matter of fact, I'm going to call it right now. CNBC will say, oh, yeah, baby, give it to me. He just broke the lower low from the week now. I want Jedi Marcus to post, whoop, there it is on Twitter. Because we just broke the low from earlier in the week, right back there, 412.84. But I want you guys, you'll have like a CNBC on Monday. We'll say something like, markets are flat in anticipation of the FOMC meeting. Something like that. That's what you'll hear on Monday morning. That'll be the headlines, the red headlines or something. Why didn't we come up on Monday? Why didn't we open green on Monday? I'm going to tell you why they're not going to let it rip up higher money. It's more than likely going to be because it's not markets in turmoil. It's market participants or investors are concerned with with the FOMC. So all that stuff that comes up. Oh, 412.23 blasting through. Holy shit. Going down to 410, baby. Into the bell. 410. Take it. Go all the way down. If we can get 410 today, I'm going to fucking laugh my ass off. We were up here at 420 earlier today. Matter of fact, we're up at 425, heading down 150 handles in one day on a Friday almost. 411.88. Just pure capitulation. Pure capitulation into this bell. Unreal. Unexpected. No one said we're going back down to 411.88. Fucked 410. Everybody said we're not going down to 405. Everybody said the low is in cap back here at 413. We're already at a high at 430. Slamming 430. Down 200 handles in less than 24 hours, believe it or not. We have 150 handles here today, and then a full almost, hand grenades, right? That's 200 fucking handles. You can call it whatever you want. Hey, Cap, it's 179.2536-3. I'm going to be like, yeah, fuck off. That's 200 fucking handles and fucking less. Just coming in, right? Just coming in at 24 hours. Huge move. That's even bigger than this move right here yesterday. Not in how calls pay, though. Calls pay better than puts do. Puts are 1-to-1. They're garbage. They're total fucking garbage. I have to sit there and watch my eyes bleed all day long and get my puts to print. I don't know how you bears do it. You all rent. You don't own homes. Blasting right through my target, 412.74. In the lower bound of this, of course, is 410 down here. We talked earlier about how they're going. This morning we said, as soon as we broke through here, right, what do we say over here? We said, look for rejection, right? 1, 2, bam. And as soon as that took place and happened, we went straight down. Now we're at 411.68. And furthermore, into this same trade down here, what do we say? We said they're going to force you. You're going to eat that shit pile next week, and you're going to trade 410 to 420. Buckle up. Not buckle up. It's all bullshit. You're just gonna be forced to trade 420 to 410 next week, and then you're gonna have some nightmare news come up that's a bullshit lie. We're gonna trade down to 405 or 4,000, and you're gonna grab that down there, and you're gonna ride it straight to the moon. 3:52, 8 minutes left. Do we go down and touch? Might as well, right? We're down here. Let's have a look see down there and see if we can actually get down. It'd be kind of crazy. I wonder if anyone took that trade. I posted it on Twitter earlier today that if we break to 420, man, we're going down. Hope they took that wise sage advice earlier and took that trade lower. I bet they didn't. I'm almost fucking betting that they didn't. What do you think? My last post on Twitter was, if we break 420, whereas it's going to burn. It is going to burn. I didn't say we're going to have to. I said if you don't save 420, something like that, that shit is burning. And it did. That's a 100-point move almost into the bell. Huge move down. Even this support's pretty good down here at 410. I would expect this to hold. No, I don't think we trade 400 to 410 next week. Maybe. I don't think so at all. I think you buy this bell, and I think that you buy Monday, and I think that you buy Wednesday. And that's my take on the market right now. It's even we trade outside of bounds, it's been right most times, like 90% of the time. You could swing down to 400 or something, but you know that I'm within, like, you just put enough time on them, that shit prints every time. Right there. 410. Look to grab some. Matter of fact, in the next few minutes, I'm gonna add some more calls down here. For 410. If we can get 410 on this bell, hold on, I gotta readjust myself here. All right, so I'm adding more calls for next week. I'm buying outside the money calls. I'll buy them today, Monday, and Wednesday for expiry on Wednesday and Friday. Buying 440s, 430s. They're like the 440s are like 7 cents on the 4th. I bought some for the 4th as well. I'm gonna buy them for the 6th and the 9th. And I'll keep watching these. So as we head into Monday, Wednesday, these outside the money calls, I'm going to keep watching them and seeing if there's a turn in premium, and then I'll keep adding to them as we get into Wednesday. And then I'll full port on Wednesday. I hope to full port on 4050, 400. If I can full port on Wednesday for call spreads that are about a month out, on Wednesday I will. $410.05. We should get to 410. We're at 411.52. Probably $1.52. I think we actually tag. I'm going to tell you that I think we tag down here. We tag this 410.50, maybe even 410 flat into the bell. It's possible. It's probable that we'll tag down here. That we'll get this. We'll get this lower range bound down here. And this actually will get our upper bound for next week. Will be 420. That would make R1 415. Or, excuse me, that'll make R1 415, R2 420, right up in here. You'll see this for next week, and then you'll see R1 heading into Monday. Unless we have some kind of change in the overnight over the weekend, Your R1 will then be something like this, if we can get down to 410. And then your S1 will be more than likely, it depends on where we go to the end of the day today, but 405 S1, 405 will be S1, and 400 will be S1 down here, and then S2 down there. But it depends on where we close today. We'll just get rid of these for now so that we can set up next week's trading. These were S3 and S4. We don't normally use those. We use them for today because we thought we could get down here. This is real support down here. So as we get into the close today, 357, you got 3 minutes left. I want you to know that heading into next week that the real support in the market is at 400 heading into next week. I want you to know that S2 is 405. I want you to know that this is kind of an S1 in a way, but it's still resistance. If we break through over the weekend through 410, we will trade the range of 400 to 410 if we break this over the weekend. This can move higher over the weekend if they hold this. You want to see the market hold 410 for us to trade this higher range 410 to 420. If there at any point is a break next week of 410, we will begin to trade the range of 400 to 410, believe it or not. So this is quite wild here. This is right now, this is going to, then your new support, right where we are today, your new support, believe it or not, is down here at 400, 405. This is major support in the market. This is a big move for us today, heading into FOMC. This is where your major support is, right down here. This is, you don't want to break this down here, right? This is where we've got major support down here. And we're trading down into these lower, that's really messy.
1 minute to go to the close of bell in New York. Dow just off of lows. Down about 1,000 points.
This is major support in the market right now. Don't be afraid of this down here. This is major support in the market. And trading this low down into here on a Friday, this is pretty big. You know, it's not a small thing to be trading this low into this Friday for Monday. What would be the expectation on Monday is that we'll open either flat or we'd open at 410, then trade higher, and then you get another short opportunity into Wednesday. I think this is the general lowest bound of the market right now, and you might get that one brief moment where we slip down and touch it, right? Come back up, one brief moment down, touch it, and you can grab your call spreads and be on your way. We're on our way to making $1 million. I'm pretty happy here. This has taken me a month and a half or something to set up. I think it's been a month and a half. So have a great weekend. I appreciate all of you that tune in every single day. It's 4 p.m. Watching some puts going into the bell, it's not big puts. It's like 100. You know, I want to see millions, like $100 million or $20 million, $50 million, that kind of stuff. I want you to know that don't worry next week. Take your weekends off. I appreciate everyone that shows up every single day. I appreciate the people that support this channel, who just subscribed or donated. Constantinos, baby. Ite Shimon. Whoever's out there listening right now, thank you for tuning in. Thank you for. I'll try to. Oh no, I'm not trying. I'm going to put a chart out this weekend that shows you what happens on FOMCs and the meetings and the minutes for you, so you can see the actual slingshot that takes place this week. I also will be. Well, we're getting a little pump up here in after hours right now. A little bit of a bump in after hours. A little bit of buying the dip down here. Some dark pool activity. I will put that chart out for you so you can see what happens on these dates. The neat part of this is if you just bought these dates, they would have printed you at this point big money. Big money. So we'll get into that on Monday or over the weekend, and then I'll do that poll as well for you. If you please take the time to answer that poll on iCaptain's Alpha, what kind of a setup that you prefer, that I do streaming or a mix of streaming only at critical times in the market, and then maybe recorded videos or classes or stuff like that, whatever your preference is. Thank you for joining me this week. Thank you to the mods. Thank you for the supporters. Thank you for the people that actually support this channel. It is costly for me to run this channel, and I'll check all of you out on Twitter after the day today. I'll check it on Twitter. We'll break some balls here on Twitter today, and then we will also. I'll tell you that over this weekend I won't be around. I have to. I have a boat that I'm trying to get rid of, and I have to do a bunch of work on it. And so I will be working on a boat this weekend and trying to get this boat out. It's springtime right now, and I'm like, I got to sell this fucking boat. I'm trying to buy a big boat, and I got to get rid of it. I got to get the shit out of my yard. You know what else I'm selling? I'm selling a camper, too. Like, I'm getting rid of all my shit. I'm selling houses, selling campers, selling RVs. I'm fucking gone, baby. Gone.
The S&P ending down 3.6%. Its worst single-day decline since June 2020.
Yeah, do it. You guys can figure it out.
S&P 500
send me
marking
some
its
post in,
worst month since March 2020 as well, down 8.8%.
Can I take it private? Yeah, I could take it private tomorrow. I could take it private tomorrow and charge, but I don't. I don't want to charge. I know people don't have any money, so I don't like charging. I don't want to monetize it. But if I have to, what I'll do is I'll lay it out for all of you. Maybe Joe Donut made a good thing to me. He said, find out what all your costs are. He said, chart it out, and then depending upon the number of subscribers you have, you just spread it out amongst the subscribers. If I have like 10 subscribers or 100 subscribers, the price would go down. The more subscribers, the less everybody pays. So that would be the second choice. So that is a choice where it's still a free sub, but you it's just open. It's kind of like I don't know. They have these just where it's like it's not. I don't want to call it like an HOA or anything, but it's kind of similar to that, right? You just open source, say this is what it costs to run this. These are what the fees are every month. This is what it has to be, and then we take it private. And so you're just like, this is what it costs if you guys still want to get this content. And then we take it private, and then that's it. It's done. You'll have me every day, and you'll have all the services we paid for. You know, always have Flow Algo, and of course it'll be cheaper. Like all this stuff is you have to pay tons. Just alone the Flow Algo and the Trade the News, I think that's $500 a month, something like that. So if it was $5 a month just for those two tools, you'd be much happier. I mean, that's a fucking steal. You could just mute me in my mouth. It would be a steal. Oh yeah, all right, Chetan. Chetan, send me an email. I'll look at it right now. That's what I was thinking. Was like keep it free. I don't like private stuff. To be honest, I don't like private stuff. I don't like charging people. I just want it to pay for itself. I want it to pay for the time. I want to be able to tip out the kids that are helping me set this stuff up. I have to maintain equipment too. Some of you guys don't see some of this stuff. I'm going to take a picture and I'll post it of the equipment that I use. You guys only see me sitting here, but I've got, I just paid like $5,000 or something for this computer over here. I got like another $6,000 in laptops. I've got displays you don't see in front of me, like a bunch of stuff that you don't see on film. It's costly. It costs a lot of fucking money. I'm probably into it for like $30,000 at this point, for the year. So it's costly. It's not cheap. I pay taxes on that money before. I have had some great support though from some key members of this group. Like there are some key members that consistently donate to the channel. So I'm not are pissy about it or anything. I don't want to make it private. I don't want to sell classes to people. I'm not here to make a profit off it. You guys know that I'm not here to make a profit off it. You can see that I don't make a profit off it. So we have to but I have to make it pay for itself and worth my time to be here every day. Because then to be honest with you, if I just traded by myself, I wouldn't have to worry about all this other shit that I got to do. So we'll look at it over the weekend. If you guys have any thoughts or ideas, if you guys have any like, how do you figure this kind of stuff out? Maybe you've had experience with this in the past. Shoot me a DM. Because I don't do this stuff. This isn't my like job. I have no experience in video engineering, sound engineering. I have no experience with producing content. So I'm brand new to this, and I'm not interested in making it a career either. I'm just interested in getting this stuff out for the next year. Get this stuff out to new traders, and so that they can have a year of trading with somebody, and then we can create a new class, right? I think the ultimate hope would be that you could get, let's say you got anywhere from like 1,000 to 5,000 new traders, trade with them every day for a year, and then if they were able to teach that to other traders, you're helping along the retail crowd. You're doing your part to fuck the banks over to some extent. I don't want to fuck the banks over, but the banks are there to fuck you over. So if you can bring together, 5, 10, 20,000 or grows into 5, 10, 20, 30, 40,000 traders or investors, they're a force in the market. And if they're there trying to help each other out rather than trying to burn each other down, if they're there trying to get better at what they're doing, I think all it does is help. I think rather than those people going back to their jobs and giving up on the market, if you can offer them a way to get somewhere in the market and make a difference in the market, I believe in that side of the market. Believe it or not, I believe in the retail trader. I want the retail trader to be a force in this market, and the banks don't. They'll do whatever they can so that you're not a force in this market. So that's the plan. So I'll check in with you guys over the weekend. Shoot me an email, shoot me a DM. I'm open to anything if it makes sense. If it's something transparent, if it's somewhere I do ads. I looked at ads on Google or on YouTube. I said I was eligible. They were going to check my stuff. So I'll look into that if it's just advertising. Maybe I can do like affiliate marketing. I haven't done any of that stuff. I don't even know how to do that stuff. Where I pull up a product and I'm like, please buy please buy this phone or something like that, or try out this gambling site. I haven't tried any of that stuff. Nothing. I haven't done anything. So if there's any other avenues that you think that you know about, or if you're a previous streamer and if you're a previous streamer and you're listening and you're going to give me a shout out or something, I don't want to know how to fuck people over. I don't want to sell classes to people. If it comes down to that kind of stuff, then I'll just shut it down and walk away. Literally, I will. I can't do it. I can't bring it to myself. It's like fucking blood money. I feel terrible. I feel like you sell a class and then they fucking torch their accounts and then they get pissed off and leave and then they become great traders and like, fuck that guy. I don't want to be that guy. I'm not down to be that guy. I don't want to be beaten up in the middle of the street somewhere for being a huckster. So I'll see you guys over the weekend. Have a great weekend. And I'll check back in with you. I'm gonna write up that chart so that you can see what I'm talking about the FOMC. I'll post it tonight. I'm gonna work on it right now, and I'll post it tonight on @CaptainsAlpha for you. And we'll try to do some kind of a video or live stream before the weekend. So it's a big week coming up. Maybe we can do something there, or at least come on live early on Monday morning. Yeah. So we think, depending on where the market goes on Monday, we'll come on early so we're ready to go for the week. You guys will have a great day. Hut. You have a great day. Superlink, X, Chase, Jens Hartman, Jade Pasture, Mario, Mock Chamber, Joey, BD, X. Are you guys texting me shit in here? MBI is at 15.7%. May 20. No, you don't have to tip me more right now. My only thing about it is that what I have to do is write a list of what it costs. And then I'll show it to you guys. Then maybe I open up a way to show what the donations are every month or something like that. I'll figure something out. You guys have a great weekend. All of you have a great weekend. Floyd's Garage, Erms. Oh, yeah, dude, Winky, I'm fucking all over I'm buying, bruh. I'm buying dips right now. That clothes, I bought the fuck out of it. I'm going to buy every day this week. I want to erase it because I was bitching at people. I don't want to call people out and stream. You guys have a wonderful weekend. Ryan, have a great weekend. Andrea, Jacob, Ryan, Binky, brother, take it easy. Bag holder, Quantum, X,
Holtzman speaking,
David
saying
G,
that favors
Corey, Ryan.
quick action on rates.
Who else is in there? Hut,
Expects a
baby.
hike in the summer
James
or
Andreas,
autumn.
Super
Speaking in a
Links.
TV interview.
What the fuck are they saying after the bell? They're giving interviews over the weekend. BD, X, just some guy. Chetton, baby. John, Superlinks, Lee Ham. John, who else we got in there? Chase, brother. Herms, Matthew, Fisted, Robert, Winky, take it easy. Brandon, Julian. Who else we got in there? Floyd's Garage. I see Floyd's Garage is out there too, chiming in. Sport K, take it easy if you're out there. Joe Donut, take it easy if you're listening in the background. Jasmine, take it easy. Andy, Cody. Who else is out there? Garrett, my God, there's like shit tons of you out there. Kevin K, take it easy.